you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Morning. Hola.
USA. USA.
USA. USA. Women and men's gold in hockey, amongst a plethora of other gold medals. And I think the most medals we've ever won.
Most medals we've ever won, surpassing our record of 10 gold medals at the 2002 Olympics in Salt Lake City.
How many total?
We had 12 total gold medals.
Yeah.
Oh, total medals? I don't know, but 12 gold.
Or 90.
But Norway always wins the Winter Olympics.
Yeah.
So that's...
Second, just like Sunday, I was up at 7 o'clock in the morning, ready to rock and roll on Monday, too, at 7 o'clock in the morning, yeah.
Although I would just like to put out there, if you are a Canadian man in need of consoling, I am available.
Does that only apply to the hockey?
my borders.
No.
Hockey team.
He's gonna go.
It's everything.
My borders are open.
Okay. Oh wow.
No walls there or anything?
No.
Good for you. Good for you.
But it was good. It was just exciting to see.
Oh my God, was it
crazy
ever.
story? Jack Hughes literally taking a stick to the face,
Unbelievable,
breaking his front teeth.
That picture of his teeth,
right,
is
so good. It's so good. Everything that hockey and the Olympics and everything stands for. It was really, really cool.
Yeah.
It was very, very cool. Very great moment. A lot of parallels between 1980 and 1926, even the world and everything that's going on. I mean, hopefully it, I don't know if the Olympics can heal everyone, but hopefully it does a little bit.
Well, it was exciting. I'm gonna miss watching it every night on my TV.
That kid should never have to buy a beer anywhere he goes. I mean, anywhere in the U.S. at least, he should never have to buy a beer. That's for sure.
Also, shout out to the state of Michigan. State of Michigan just straight up dominating in terms of number of Olympians and just getting it done. We all must submit to the mitten.
I don't know if you saw, McKinnon missed a wide open net. I mean, with a backdoor play, and then there was
it's easy to say.
Charlie McAvoy, a defenseman, went in the net and basically stopped the shot with his shoulder. Didn't get a lot of attention. I mean, there was just a lot of things had to happen because Canada really was skating hard.
Sure,
I mean, our goalie was amazing. He was
Connor Hallenberg, unbelievable, unbelievable. Incredible. But you got to give. I mean, listen, I know you can rib because you win. You know, everybody's ribbing and stuff like that because you win, and that's part of sports. And they can certainly wait until next year.
Well, I don't know if we're going to do that world thing again. We might do, I don't know, the Seven Nations or whatever.
Yeah, for sure. Yeah, I mean, but. Winning, you get to rib everybody. It's good, clean fun, and that's what you do. You win, you get it, you lose. You take it, you wait till next year when the Olympics come back again. But they played so hard. It was such a great.
Yeah. The first period was incredible,
unbelievable. I mean,
it's so fast and
they outshot us almost 2-1. I mean, it was unbelievable. It really was. And then. You go to 3-on-3, and that's really like pond hockey. To win, to win a game like that. I mean, but that's just the way they've done it. I mean, that's how both teams got in to the final game.
Yeah.
You know what I mean? They won in overtime.
Yeah. But the Canadian team, they're young.
Yeah.
So
no, it's great. Oh, they're going to come back with vengeance. They'll get the revenge someday. I'm absolutely confident of that. But it was fun. It's just great for a sport in the U.S. that doesn't get a hell of a lot.
It's our fourth favorite sport.
Yeah, exactly. So anyway, it was fun. It was great. It was great to watch. It was
Congratulations to the boy aquarium.
Yes.
Yay. When do they kiss?
Yes. Oh man, and what a classy thing going into the stand, getting Johnny's kid and
tears. I cried.
Yeah.
I cried.
And they grabbed the jersey.
Yeah.
Yeah.
Good night. It's okay to cry. I cry all the time.
Yeah.
But I'm so productive. How was your weekend, Nikki?
It was good. I was going to also ask you about these shirts. Do you have like a specific place that you find these sweaters?
This is from Instagram, and I thought I was going to get scammed, but it was like one of my favorite buys on Instagram. But like, an animal sweater hates to see me coming.
Is that all like your Instagram feed is just
Yeah.
Temu style
Yeah.
animal sweaters?
Yes.
My weekend was good. I got a little trip to the suburbs, saw the fam for a little bit.
Mm-hmm.
Look at you being so good.
Yeah, no, so
Yeah. Didn't bring my money with him.
That's true.
Yeah, yeah.
Oh, did you get your money from that big fantasy pool?
yeah.
Oh, okay. I was hoping that you got scammed.
Right now, I feel like I'm Mexico. He's got everything there. I'm sheltering in place here.
Yeah. There's a little bit of a kerfuffle that happened with it.
What happened, girl?
It's a large sum. And, the guy that I'm dealing with, he's a really nice guy. There were a whole bunch of one of my buddies owed him a little bit. So he took, he was like, I'm going to take this out. I'm going to take, all this stuff. So but it's totally understandable.
There's a rounding error.
Wait, a friend owed him money, so he took it out of your cut?
It was one of our winners.
I told him, because he does, because these are big pools. So it's all cash.
Okay.
So I told him, I was like, yeah, my friend Joe owes you some, and then we're going to, add the March Madness.
Oh.
Take that out of there because we're going to take one for me and one for him as well.
Okay.
So there's a lot of subtract this, add that, and so when I picked up, there was a little bit short. We were a little bit short.
It was a little light.
It was a little light. And I'm sitting there and I'm thinking to myself, I'm like, it's a big sum and it's the first time I've been in this league and I won one of the big ones.
Talking bands.
Yeah. And I'm like, do I go and ask him for the rest of it? Do I tell him that he's short? I don't want him to think I'm lying about is it worth?
There's a lot of gray areas.
There's a lot of gray area.
Yeah.
I'm uncomfy.
Yeah, it was very uncomfortable. It was very uncomfortable. So.
And he had to basically pick up the money in a trash can.
So what did you do?
Yeah, he wasn't home. So I picked it up and it was in the backyard. So there's that angle.
Under a rock.
Yeah, so there's that angle.
Do you ever just stop and think, what is my life?
Oh, he did. He did. He was wondering.
I sat out there and I counted it 4 or 5 times. And I was like, shit, it's a little short.
So do you just send
we had to break a leg.
Do you send him a Venmo request? What is...
Well, so I did end up telling him. But afterwards I was like, shit, I should just eaten it and just not, and moved on and just not worried about it. But I did
take it out of my father's cut.
Yeah, just take it out of his cut or something. I did tell him. And he said, he was like, I'm so sorry, I'll Venmo you. He hasn't Venmoed me yet. I'm just going to drop it.
Remind me not to park next to you in the garage.
Yeah, you might get a little fallout.
Yeah. Mm-hmm. So it's just it was a little weird
exchange.
Kerfuffle.
What is your life?
Yeah. So, but, yeah. And the whole situation was even more bizarre because I was arranging to go pick it up. He was like, I'm sorry, I got to step out. I'm gonna leave it in my backyard in the grill. And he sends me a picture of the grill, where it is, the envelope.
How did his neighbors not call the cops on you?
And I'm like, okay, so now this guy that I've never met, I have to go into his backyard.
Yeah.
And open up his grill and get this envelope. Yeah. I know. I feel really degenerate.
You made your bones, son. You made your bones.
It's like an episode of Entourage.
Yeah.
It's what are we doing?
But
you were Turtle.
But that's why the situation's so weird because we didn't actually have a face-to-face exchange.
I know, right.
So now I got to tell him that he's short and
that's awkward.
Yeah, that's
really awkward.
Yeah. In hindsight, I wish I wouldn't have texted him and told him he was short. I wish I would have just eaten.
And you're hating on me. Meanwhile, I'm just in my house minding my business buying dog sweaters.
That's the difference.
That's the difference.
Yeah.
What a crazy life you lead, Nikki. How was your weekend, Pat?
It was good. We won our playoff game, which means we get to face the number 1 team and get our ass kicked really good.
Oh, good.
This weekend. Which is good.
Real drubbing.
Yes. Finish the season on a real high note.
Nice.
And then watched the game on Sunday. Had to kind of curtail everything on Saturday so I could wake up early on Sunday.
Sure.
To watch the game. It was a great weekend. Cold as ice out there.
Did not leave my house.
Yeah, I could see that.
Well, but I sound better. But I feel because I was recuperating, so I got over my cold. But
and then before the markets really opened on Sunday night, you had all that aggravation going on in Mexico.
Yeah,
just amazing pictures. It's just horrible.
They canceled all the flights.
Short Delta.
I saw that. Yes. Yeah.
I'm gonna add a little bit back if we get back to. So I just put an order in NASDAQ at 24,950, so 20 points higher from here
to sell them,
and then 69 on the dot on the E-minis to sell them back out. I closed them. I closed the NASDAQ. Some at 854.
Yeah.
Some at 940. So I average them out to like
9-ish.
Yeah,
right. Even 880, 890, 90.
Yeah.
Yeah.
And then E-minis at like 70.
Yep. I mean, there was definitely opportunity. Gold and silver started rallying strong.
We'll get into it.
Yeah. What's that?
We're gonna get into it.
Oh, I know. We gotta mention it.
Don't blow your load, man.
This has got to kill tourism from Mexico.
Oh, it's horrible.
For some time. I remember Jamaica back in the early 80s was kind of the place to go. And then there was some unrest in Jamaica.
In the 90s when I almost died of dysentery.
Oh, no.
Whatever you got from there.
And Jamaica in my world, is just starting to come back. I mean,
sure.
Forever. I really hate what's going on here.
It's crazy.
Mexico.
I know. I hope people are able to get home safely. And also, the East Coast going to get slammed by a nor'easter.
Feet
of snow.
Has some sort of because that guy, he's in the middle of everything.
Yeah, wherever he goes.
Yeah.
I think already 100,000 people are without power in New Jersey. I think 80,000 without power in the Boston area.
Shark is safe. He's
okay.
Yeah. He actually has special clearance. He can go into the city if there's a problem. So you're safe out there. Everything's
Is he like a consulate or something? Or
I'm like an emergency worker kind of thing. Yeah. It's pretty good.
But no, stay safe. Just crazy wallop of weather. Hey, we got a great show for you today. If you're all bundled up and you have no choice but to watch us, sorry about that. A lot of good content headed your way today on the show.
Yes.
We have at the top of the hour Research Corner. We got Kai in the house. He's gonna come in at 8, or is he coming in at 9?
He's gonna come in at 9.
He's gonna come in at 9. Okay.
Without him, the 8's we're just recapping kind of the week and looking ahead here with expected moves, earnings, biggest mover, volatility changes, just like a recap and then a look ahead into this week.
And then at 8:40, we got the Skinny on Options abstract application, Dr. Jim in the house. What are you talking about with Dr. Jim?
It's Monday, like a little Dr. Jim.
Nothing says Monday like Dr. Jim.
Break-even points.
Oh, okay.
So a little quick little primer on, profit, loss, where your break-even points are, that variable kind of in between loss and profits. Should be a good one.
And then for our market measures featuring Kai, we have 0 DTE breakdown.
Yes. It's our week review of last week's 0 DTE trades. Again, a little bit of a look back at what happened and kind of digesting some of the volatility, looking at some of the ranges that we've had and really cool charts that we have in there of like all the P&L graphs of each trade throughout the day. Great segment. Probably my favorite segment of the week.
Okay, and then that's high praise. That's a high bar. Then at around 9:30, we have live from the trade desk, Quentin counting down the top trending tickers over at Tasty Trade, and Ryan, very timely, going to be talking about the Bitcoin side of things. So that is headed your way at around 9:30. But in the meantime, in between time, do you want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire.
This
story. Top story. Just in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It is February the 23rd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Woo. Are you ready for the news?
Ready for the news.
We have a Tasty Trade platform demo for tomorrow on our new downloadable platform. Yes. It's actually going to be very cool. We'll show you some new stuff, and we are seeking your input. So if you're able to participate in that webinar, it will be tomorrow at 1 o'clock. Go to tastytrade.com/demo, I think.
Yes. Demo. Or demos or webinar.
Yes. They all work. We took all the domain names.
No 404s. No 404 errors.
Yes. So check that out.
Get there.
Check that out. That will be for tomorrow. But hey, any earnings, Mr. Bat?
Hymns.
Woo-hoo.
Depot.
Okay.
Another one. Those will be the two.
Okay.
NVIDIA, everybody's waiting for on Wednesday. But Hymns today, Home Depot.
Tomorrow morning.
We were finally served something other than a nothing burger by the Supreme Court on Friday. The Supreme Court struck down President Trump's tariff, and that could put the U.S. on the hook for $175 billion in refunds. He still does have avenues to levy tariffs on some nations if there is, in fact, a trade balance. There are certain provisions, certain sections that would allow him to do that. But the petty tariffs would not be able to stand.
There's zero chance they do a refund.
Yeah, but but the refund's not even going to go to the customers. It'd go to the importers.
Yeah, it is zero chance.
Yeah.
But I want my tariff check.
Oh, you're not getting that.
Well, the other thing then moving the markets last night, E-mini's down. I think I saw him down as much as 45. Is I'm on to the next story here. He's now threatened to hike global tariffs to 15%. You want a fresh one? From 10, effective immediately.
I think he did already. Right?
They said effective immediately. What do we do with this?
It seems like business as usual. That didn't move the market. Well, I mean, the news from last night really moved the market in, I think, in Mexico and everything else.
Yeah, maybe that. I don't know.
This came out, I think.
It's all just the uncertainty.
I mean, that's why volatility's been so high, and it stayed big.
Yes.
I mean, it got over 20. I mean, it got under 20 on Friday. It's back over 20, 45, flirted with 21 last night. So that's why you got volatility the way it is. And that's why the front month hasn't really, it came in a little bit on Friday on the close. I mean, we're up almost 50 handles on Friday's close, but it's back with a vengeance this morning, up 1.5% so far.
Buy America, U.S. investors are pulling money out of their own stock market at the fastest pace in at least 16 years as big tech returns fade and better performing overseas markets look more attractive. Last week, I talked about the disparity and the global stocks are growing at a faster pace than our own S&P. In the last 6 months, U.S. domiciled investors have pulled some $75 billion from U.S. equity products, with $52 billion of that since the start of 2026.
Yeah, I'm not sure how much this is really kind of, first of all, I hate it if this is public, going from one market that's the U.S. market.
Which is so liquid.
Super liquid. And let's just call it underperforming relative to the European markets, which are up 8, 9, 10%, depending on where you go. That's buying high and hoping to sell even higher. I'd rather if you're going to pull some money out, kind of make it a little bit of a gradual thing. I'd hate to buy something up 10%, trying to chase the tail of a dog here and sell something that hasn't.
It's just hard to do, too.
It's extremely hard to do. It's not very liquid.
In our markets, if you're looking at EEM, we've traded EWZ a couple times. They're just not, there's only so much you can do there. It's very hard to trade individual names. I guess if you wanted to go to
this reminds me of the Kazakhstan bonds from yesteryear.
And you can't trade any of the actual. EWY is another one. South Korea has gone crazy with some of the memory stocks there, but the individual names, their version of a Micron or an AMD or whatever, you can't really trade those. So it's a better headline than an actual actionable thing to do, I think.
Exactly.
For most people.
Has gold shed its safe haven status? Is it just another momentum play now? And I see on Twitter here that gold has overtaken the U.S. dollar as the largest global reserve asset.
I mean, it has had I talked about it, and I'm going back to, late January, that it had kind of meme stock status to it, the way it was behaving. It's up almost 2% now, back to 50, almost 5,200.
So it is back to a safe haven. Maybe?
Maybe.
No?
I mean,
what's going
it was
on?
45, 46. Again, silver up 5%. I don't know if you're going in that direction, just talking about the metals here. Silver's really the one that was kind of underperforming.
Yeah.
Now it's overperforming. Silver, Mexico is a big exporter of silver. I mean, the gold-silver ratio is back down under 60.
Okay.
Got up to about 66, about a $6,000 move there.
What does that say? What does that tell us?
That says there's a lot of volatility in these metals.
Story is that both metals have had, you've had sustained higher prices, but sustained volatility, and you're seeing big moves in both directions here. So I think it kind of plays into the meme aspect a little bit, but that's really been the story. Is that you're seeing 2 or 3x the volatility that it's had in the last 20 years.
Yeah.
Like it hasn't even been close to this.
Nikki, gonna check in with you. How is your war trade? How are those calls doing? Oil slides on Iran nuclear talks and fresh U.S. tariff uncertainty. Oil prices slid around 1% on Monday, with the U.S. and Iran headed for a third round of nuclear talks, easing concerns for some around a potential conflict.
Back up.
Cancel crash. Remember, it was just off of not all-time highs.
Yeah.
Just off of recent highs around 66 and change, and traded down to almost 65. It's back up to 66, 70 and change, almost up to 67, which would be a new recent closing high. I'm just going back for the last year or so.
Yeah. Oil volatility too remains very, very high. You've got about 56% implied volatility, which is about as high as it gets. It got up into like the 60, 70 handle.
Oh, wow.
Back when we had the 12-day war, like in Israel, that little like blip of 1 week volatility, but this is high volatility.
It's funny, if you would have thought everything that was going on last night with Mexico and across the world, what oil would do, you think it would go up. It was actually down almost all night long until this morning.
Yeah.
You can't guess this thing. You have to be reactive to the market.
Yeah.
ConocoPhillips is exploring a sale of some of its Permian Basin assets as part of a broader streamlining of its portfolio. That news came out late Friday. The assets picked up over the years through deals through some of their subsidiaries, also with Shell, are expected to fetch around $2 billion COP.
All these stocks have been on a nice little ripper here to the upside. ConocoPhillips at 110, basically at the highs. XOM is another one that's been moving to the upside. It's gone from like 120 to 150-ish. CVX as well. Oil is definitely kind of playing the catch up to the commodity move, I think. The oil stocks themselves, I mean, if you've looked at like GDX or GDXJ, the minor stock for gold and silver, those have both gone parabolic. So it's kind of moving in that same sort of commodity situation that we're in.
Me, I'm more Wilson Phillips than ConocoPhillips. Hold on for one more day. Break free from the chain. No? Okay.
I don't know that one.
I
don't know that one.
Oh, man, that's a deep cut. Anyway. Bitcoin fell below 65,000 as Trump tariff moves raise uncertainty. Bitcoin fell more than 5%. The drop came as Asian equities rose in early trade. What say you in
Is this
crypto?
cartel selling to finance? I mean, what was this? That's my question.
I didn't even think about that. See, I'm on the other side of the coin. Is if you're a cartel person or you're like in Iran and you need to like move money, you'd want this.
Yeah, I don't. That's why you never. That's why you never know.
You buy some Bitcoin, you put it in your pocket. You get out the country, and then you plug it back into a computer, and you got it all right there.
Sure.
So I would think that
not if it's losing 5-10% on a transfer here. I mean, you're not happy about that.
No, that would be bad. But I don't know. Bitcoin and crypto has been just ugly.
Yeah, ugly. Going sideways again, 66.5 right now. It's a number we've been hanging out at. Broke it a little bit last night. Back over it this morning. Ethereum. They're both down around 2.25%.
Sure.
Ethereum and Bitcoin.
But cut in half here, almost.
Yeah. A cut in half. Yeah, for sure. Believe me, you don't have to say almost, even though mathematically it's not there yet. You could say cut in half. Anybody who has Bitcoin knows it's cut in half.
What about Coinbase and IBIT this morning?
Coin trading down a little bit, but it had a nice little rally last week.
Bigger rally than the physical itself, than Bitcoin or anything else like that.
Coinbase was down on earnings like $15, $20, kind of reversed that whole move, but it's still at the low.
Down $2-3 this morning.
Yeah. Anything crypto has looked not good.
MSTR has their conference in Vegas this week, so get ready for just more Michael Saylor news. Several asset managers have filed for ETFs that would offer direct exposure to election-related prediction markets. And what are we doing? Should there be prediction market ETFs?
This will be an interesting thing because I get where they're.
It's like a scam of a scam.
I'm a little bit with you on this one. I agree with you.
I get where they're going with this though, because you need to get access to the retirement account, the bigger accounts. Like there's a lot.
Sure.
Of, if you really want to get some big dollars out of a IRA type account, that you got to kind of go this route. Oof. So it'll be interesting. I don't know if I really care enough to.
Yeah, and that's not saying that they will be approved, but they have filed the paperwork with the SEC.
And they're going to be weird because these are going to be they're going to have some number that they trade to. Let's say it's 100. So like the stock or the ETF will trade at a probability based on the prediction. So if the prediction is a 20% probability right now, it'll trade at $20. And it'll settle at some point at either 100 or 0. And so like these products, it'll be like, it's going to be there's no volatility to it, but it's going to be.
So I thought about this a little bit from our conversation with Polymarket last week, and I want to revise a little bit. I don't think like the stock market, option market, the tradable market, it can build generational wealth for people. I don't think the poly market, this predictive ETFs can build generational wealth for the young people of the world. So for me, I think this is like an engagement. I'll even go scam, as far as you want to bring it. Like I think it can do some good if it gets them to kind of gravitate towards, hey, there's a better place to be. I'd hate it to see if it just becomes a Vegas type thing where it's, just for fun and games and, I'm going to put money on this and expect to lose it. That's not, we got to get above that.
Yeah.
We'll see what happens. Mm-hmm. In other news, in a cautionary tale that literally was on an episode of Silicon Valley. Did you ever watch that show on HBO?
Yes.
Well, Amazon's agenetic AI, their vibe coding tool, Kiro, reportedly it vibed too hard, and it was responsible for the massive AWS outage back in December. Kiro reportedly opted to delete and recreate the environment. It was trying to just debug something, and they figured out the best way to get rid of all of the bugs was to just delete.
Start fresh.
Right, yeah.
Yeah, just make this not human. The bug is the human.
Right, but it was literally an episode on Silicon Valley with the software that he wrote called Son of Anton.
Oh, yes, I remember that. Yes.
Oh, no. This worries me about AI, like this.
Yeah, I mean, last week you had all the cybersecurity stocks get absolutely killed because there was.
Anthropic is getting into the cyberspace, yeah.
And so, this is the other side of the coin. And I feel like it's not going to be all or nothing. Like there's going to be a middle ground where you're going to have AI and human interaction and development. And you need somebody hands-on because this is a problem. It's a big deal. You can't have this.
What are you guys doing in Amazon? We talk about how it is not taking any of these opportunities.
Down about $2 this morning, but off its lows under 200 to 210, where it closed last night. It's 208 right now. Ivy rank of 27 is pretty good. You don't have any earnings looming or anything like that.
Okay.
Took advantage of the move last week. Had about a $6 or $7 move on Friday, so we rolled out puts.
Trying to take advantage of
took advantage of it.
Slight up move, yeah.
But I'm leaning long, and it's been a dog.
The SEC's investigation into marketing platform AppLovin is continuing. That's according to news reported on Friday by Bloomberg. The SEC was probing allegations that AppLovin violated platform partners' service agreements to push more targeted advertising to consumers. And so the SEC says, yeah, we still here. Poor AppLovin, they can't catch a break.
Between this and Carvana, it's just unbelievable that this stuff takes so long. Like, send a crew. You're the government, right? So you send a crew there.
But there's no one to send, though.
Right, because we're shut down.
Yes.
Yeah.
Well.
Yeah. So maybe.
Well, no, but because of job cuts. Yeah.
Yeah.
So.
And that, yeah. Right.
I don't know.
Yeah.
Send out a team of people and figure this out in a week.
Yeah, get it
if you
sorted.
wanted to.
Right.
If you really wanted to, you could deal with this.
Down about $14, well off its highs of 700 and change. Now 405, off its lows around 375 or so. IV rank of 32 is pretty good in AppLovin. I've looked at the markets in there.
They stink.
They're untradeable. I
Yeah.
mean, the open interest. I mean, like you can. Don't take my word for it. You go to April, it has 53 days or so. So they've been around for a little while. And you look at the open interest and you'll notice that that's a couple of hundred on every line. It's probably not the place to trade, in my opinion, at least options.
New reporting from The Guardian over the weekend shows that U.S. farmers are rejecting multi-million-dollar bids for their land because they want to be converted into data centers. What? This lady in Kentucky was offered $33 million for her 650 acres farm. Other farmers across Indiana, Iowa, and others have also reported being offered millions of dollars, and just showing that I don't like where this is going.
I mean, you mentioned the number, big number, $33 million.
That's
a lot of money.
Yeah, and it's generational wealth. It's probably been in their families for generations
Sure.
too. I mean, so if they're offering $33 million, it's probably worth $50 million. Like, that's the way I look at it.
Hey.
But if you can prove that it's worth $20 million, maybe there's something there for them to explore. If not, then I don't see why they should sell. I mean, they want to be farmers. They should be farmers.
Yeah.
Yeah, it's crazy. But I mean, that's a market.
That's a market.
Like, they're putting a market on your land, and they're saying, "Hey, here's."
You don't have to sell.
You don't have to. Yeah,
Yeah.
You're right to keep it. Like I don't see any problem.
Yeah, because nothing bad ever happens to people that turn down big corporations.
That's true.
Everything's fine.
Yeah.
Yikes. Tesla's most affordable Cybertruck is here, but Elon Musk hints that it won't stay cheap for long. The newest trim of the electric Cybertruck now costs a mere $59,990, around $20,000 less than the next cheapest model. What are you doing in Tesla?
It's funny because I was with a friend on Saturday, and his car is on the way out. He just had a baby, and he was looking at, like, not a Cybertruck, but he was looking at, like, trucks, like, like 4Runners, stuff like that. And I was like, yeah, like, you could probably get like a used 4Runner for, $25,000-$30,000.
No.
Oh, it's like $80,000.
Forerunners are expensive.
There's like no car that's on, like, the car.
30,000 is
40 to 50 grand is about as low as it gets.
Yep.
That's bonkers.
Like, when did this happen?
Yeah.
No.
Yeah.
And especially in the 4Runner, Toyota's 4Runners are.
Any of them though, like even.
No, but
like,
all the electric cars, they're reasonable relative. If
Yeah,
you're looking,
but-
even used Teslas. I mean, they're not just
I was
the
looking at
Cybertruck.
like a Grand Cherokee, or like even like the Cherokee that I have is like 30 grand.
Yep.
No, it's insane.
411 is where Tesla closed. 407 and change, with the market down about 30 handles. A little bit of a fire sale here. I mean, down near the lower end of its range. Ivy ranks only 4.
Ew.
You have to make a directional trade in there. I don't think it's a premium selling process.
In other EV news, Rivian is adding Apple Watch integration to all of its EVs. The company said in a post on its website, it includes an all-new companion app for your Apple Watch, giving you control of your vehicle right from your wrist. No more digging around in your bag for your phone. All the important vehicle controls right at the swipe.
Yeah, Rivian's got to do something, man. Languishing around the teens for quite some time. It did have that nice rally just before 2026 started. It got up into the low 20s. It's back down to around 15 and change. Ivy rank of 40 is pretty good in Rivian. So if you like it to the upside, maybe selling some naked putties, get you some premium cost basis. In
I see him around occasionally.
Yeah, I see him around.
Yeah.
And wrapping up my trio of EV stories, Lucid is trimming 12% of its U.S. workforce in a profitability push. The company said on Friday that they'd laid off 12% of their U.S. workforce. We are streamlining our organization so we can operate with greater efficiency and deliver on our commitments to gross margin improvement. Gross.
Lucid.
I mean, this stock is
I know.
dead.
Yeah.
Dead.
Yeah, I mean, this is one sub.
Had like 5 different reverse splits. Like, I don't even know what this thing trades at.
Oh, like what it's actually worth?
Yeah, like it's I don't know.
It's sub $10, which gets it out of everybody's eyes for any big mutual fund or anything else like that might own it. They have to, it's hard to borrow. They got to start reducing their positions. A lot of charters say you can't own stocks under $10. This is not good for Lucid. $9.55, basically unchanged. Hard to borrow stock, which means the calls and the puts are going to trade a little funky there, right? Because you have that cost to carry. I don't know how much it is. I'll take a quick look for you if I could. The borrow rate's only 13%. It's not in the hundreds, which some other stocks can be. So it won't bother the options too much, but trade it at your own will.
Yeah.
62 Ivy rank.
Bath and Body Works launched an authorized storefront on Amazon in its latest effort to sell products outside its stores. For brands like Bath and Body Works, Gap, and Everlane, Amazon is increasingly filling the role of skilled logistics partner. BBWI is Bath and Body Works.
I didn't even know that.
Yeah.
And that's earnings coming in March 4th, $24 stock. I haven't looked at this.
Because it got spun off because it was part of...
Yeah, they're coming out with $half wide strikes here, it looks like in March. I'm looking at April. There's very little open interest here.
Sure.
I don't know if my mom ever really loved those baskets.
She said she did when she received one. Yeah.
We would get that for like Valentine's Day, Christmas, birthday,
Mother's Day.
Yeah.
Yeah.
It was like 4 or 5 times a year. I don't know if those were.
She's like, if I see this cucumber melon chip one more time.
Yeah, I don't know. Were those good? Was it good product?
I don't know, son. I used to give my mother Gina Tay. So when you got old enough to buy her stuff, we went to Bed Bath.
What was Gina Tay? Was that?
It was the Bed Bath and Beyond of the 70s, 60s, and 70s.
I thought you were talking about that perfume that you would wear, the one in the star bottle.
No.
Ooh.
I don't know. If I smelled that, I think I would have like.
It was grandma-like.
Yeah, it was very grandma-like.
Triggering.
Yeah.
I did nothing to do here.
Here's something interesting. New research has found that apparently your height determines what faces you find attractive. Apparently, tall and short people have different preferences when it comes to facial beauty. Taller people generally prefer those with slightly larger foreheads and smaller chins because they're looking down at people. Again, this studies while shorter people generally prefer larger chins with smaller foreheads because we are looking up. Well, these researchers have too much time on their hands.
I don't know how.
It has sparked intense debate and discussion on social media. So
we got to get something else to do with our lives.
I don't
know.
Well,
which photo do you prefer, the top one or the bottom one?
I can't. Is there a difference?
There's a slight difference.
I can't even tell.
There's a slight difference.
I can't tell either.
Well, which one do you prefer?
Whichever ones are in my hands.
I don't see a difference. Am I crazy?
Maybe.
Is there a difference?
Maybe because you're just mid-height.
Wow. I am well above.
That's just what the science says.
Well, hey, what's the average? What's the U.S. average?
For a man?
Yeah, it's like 5'7", 5'8", isn't it?
I don't know.
I'll chat you.
You look it up.
I'm 6 feet tall. I'm tall.
Okay.
I swear to God I am.
Yeah. What's the average?
5'9". The
5'9".
average American male is approximately 5'9".
They're all lying.
I got 3 inches on the average. That's big.
Okay.
And a waist circumference of 40. You're under that too.
Oh, I'm under that too. I'm skinny and tall.
Yeah, there you go.
Hey. In a hilarious piece of marketing, H&R.
Ooh, a little rally here. You just sold your sitting E-mini S&Ps at 6,900.
Nice.
Nice.
I'll let you know if that's a good job in a moment.
Yeah. I let it work, Yep.
H&R Block released this advertisement, free taxes if I can get you to tap out. Watch this.
If I can tap you out, will you do my taxes for free? Oh, you waiting for this? You train? Hey, can you film this? Okay.
Yeah, I'm gonna claim you as a dependent.
So I gotta pay for my taxes? You gotta pay extra for your taxes. If I could tap you out.
That's pretty good.
That's amazing.
What's with everybody doing these arm bars? Because my kid is Vinny's trying to do this to me all the time. It's really kind of comical at this point. But what is with this?
You were going to end up in traction.
Why do they all want to do arm bars to people? I don't get it.
Maybe they're watching too much UFC.
Maybe.
Well, they got UFC every weekend now, basically.
See what you do, and it's for free.
Yeah. So that's probably it.
Interesting. Maybe we can do something on social media where we have Nick try to tap me out, or I try to tap Nick out.
All right, let's go. Let's go.
Yeah, you ready for this?
Let's go. I'm here all day. I have a quota now. What's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We're going to talk about the markets. A lot moving. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, confirm and send on this February 23rd, on the back end of February, almost on the slide end of February. February almost over here, but the market itself is not over. Even the S&P is trading 6,900 and change, down 22, relatively small move, a third of a percentage point, right in the middle of last night's larger move of almost 60 handles, top to bottom there on even the S&Ps. NASDAQ down 115, Russell down 13, Russell, NASDAQ down a little bit more than the rest of the market, with the Dow down 200. Volatility up 20 cents, really at the low end of its range. 20.25 is the low end. On Friday, it did trade under 20 with the market rally of almost 50 handles. Volatility 20.35, significantly off its highs of 20.85, but the market's off of its lows also. Bonds are up 12 ticks, oscillating back and forth here. Went under 117, 116.24. Traded over 118 just a week or so ago, 117.11. Bitcoin has a big mover from last night, trading 66.5 right now, down around $1,400. But you can see this little big candle or wick or whatever you call it moving lower. Continues to go lower. You talked a moment ago about it when Bonetta was mentioning it. Cryptocurrency has not caught a bid. If there's a fire, does not catch a bid. If it's crypto winter, it doesn't catch anything. Ethereum also down around the same, just about 2%, $37. Oil, interesting move last night. It was actually lower on everything that's going on in Mexico and across the world here. Now catching a little bit of a bid, up 30 cents, right near its highs of 66.81. Gold and silver, those two have caught a bid all night long. Gold, it's 51, bite my tongue. 51.69, up $88, which is almost a 2% move. But silver with a 4.5% move. Now, silver is a little bit of a lagger to gold the last couple of days. You can see here how it's was trading under 80. Now it's 86, back in range with gold and silver over the last couple of days here. That gold-silver ratio trading under 60 at 59 and change. You remember, got up to almost 69.70 there just a couple of days ago, early in February. Corn, wheat, and soybeans, I guess, taking a little bit of a backseat, but you do have a almost 0.75% move in wheat, which hasn't had a downtick in quite some time, and soybeans doing the same. Euro.
Why the farmers aren't selling their land,
right?
Their land to the data center.
And finally getting
paid on that crop.
Corn, wheat, and soybeans. Yes, you're right. Euro basically unchanged, /6B. The British pound basically unchanged. The dollar's been catching a bid here.
Ever so slightly.
I mean, ever so slightly.
I got filled on the NASDAQ at 24,950 and the E-minis at 6,900 here. We got the 6,900 with Vanetta, but the NASDAQ just came.
And we're sitting right there now. Yep.
I'm still small. I'm not full count.
Understood. Trying to play the Rangers. Scalped really good on Friday. I mean, really good.
Yeah.
On Friday.
Yeah, we haven't
covered our 0 day on that downtick.
Yeah, we got lucky on that.
Yeah.
Because that was by the end of the day, it was
full
40
loser.
points in the money.
Yeah, full loser.
I think we're going to see that with our 0 day content with Kai at 9 o'clock. Those,
Well, we had that bid in. It was a resting bid. I mean, like, we didn't do anything magical.
No.
Yeah,
we did good, but the quick management saved us.
Yeah.
Last week, you had the huge down, or not huge. It was a 1% down move in the market. On what, Monday or Tuesday?
Yeah, got a lot of press though.
Yeah, and then we basically ended the week unchanged, but huge move.
Violently unchanged.
Yeah, violently unchanged, as we'll see when
it's been the tune of 2026.
The research corner, but you had 2 days that were pretty volatile.
Oh, absolutely.
One to the downside, one to the upside. Where if you didn't manage your 0 day trades, they were basically full losers, which skewed the whole rest of this year's P&L, which will be an interesting look
Yep.
for our content. Yep.
All right, let's get to it. Confirm and send on this Monday, February 23rd. What's the right way to think about scaling out of a position without cutting winners too early?
I try not to think about it. I just take the money and run. I mean, I think generally, what do you think a conservative number for the number of trades I do a year? We'll say 50 a day times 200 days, if you're going to take some days off or whatever.
It's a lot.
You're doing a ton of trades. You don't have to get every penny out of every single trade. I think a lot of people focus on that and less on just managing trades, finding new opportunities, rolling into new positions. Like that's more important than getting every last penny out of every single trade. For scalping specifically, that part is more of just like, I'm trying to get a couple bucks out of it, and I'm not. I don't have like specific. I put in working orders to get short at specific numbers, but I'm not looking.
But those numbers were really just indicative of what was going on in the market. You're just playing ranges there. You're not looking at it as anything else.
It's just, and I'm just trying to take a couple points out of it. Like, if I get 20 quick, I have no problem taking it off and moving on. You can always.
Now you're talking futures. Futures, I can see scaling and scaling in, scaling out. You're trading the micros, which allows you to do more contracts because they're a smaller contract than maybe the mini might be. Option positions. I mean, the best way for me to think about, cutting my winners too early and or not letting my winners run too much is just by getting out all at the same time. I mean, you make a decision and then you run with it. So many times it seems to bite me in the butt when I say, I'm going to take off half of this position, then it goes the other direction. Now you're playing, you're hurting yourself so much. Usually if I get in a position, I get out of a position, I forget about the position, I move on for new opportunities. If I'm always dwelling in the past, it seems like I'm living in the past. If you're living in the past, it's really hard to move forward. So for me, just getting out is the easiest thing to do. Winners and losers. When I make when you kind of get too creative with your losers, don't stay mechanical, don't roll, try to get every penny out of theta decay in the front month. Like I've said in the past, I think rolling at 21 days has been one of the biggest P&L volatility curves that I've been able to do. So stay mechanical. I think once you decide what you're going to do, it's so easy to live with that decision. It's when you torture yourself and go back and watch this trade where you kill yourself. That's my opinion on that whole thing. Cool. Next one, please.
How do you evaluate whether your edge is still valid in changing market conditions?
Oh my God, I question this every day of my life. I've been doing it every day since 1983.
Sometimes you think you're a genius, and then sometimes you're like, I'm the biggest idiot ever.
Of course. Yeah. And intraday, you can have those same feelings. I mean, that's trading. I mean, when it works out, I think we had a question not too long ago, like how do you judge whether you're trading good or bad? It's P&L. I mean, I don't know how else you judge it. Sometimes I feel like I miss opportunities when other areas like gold or silver, something I don't trade as actively as, say, the equity markets are moving, and I feel like I missed out the opportunity in there. I was a little too skittish, or I questioned my thoughts on what volatility was doing and everything else like that. But man, I mean, you got to flow like water, right?
Yeah.
Fit like Bruce Lee, fit into everything. So just stick with your conviction of your mechanics. If you have some sort of mechanic, like everybody says, rule-based trading, mechanics, call it what you like. Stick to what you've done the research on, and that could be points and figures on a chart. That could be fading what Nick or I do. I mean, it doesn't matter what it is, but stick with it so the numbers work out.
Yeah. I would just also add, when opening positions, bid and ask spread at penny wide, there is no edge to either side. No side is mispriced. They're priced basically the same. So, everything is the edge aspect of this is kind of in hindsight. But from a trader perspective of like your edge or your feel, that comes and goes. You're not always just banging out winners every single day.
And anytime I've ever said to myself internally, "Oh man, this is going to be a tough one," that's usually my best trade.
Yes.
And anytime I've said to myself, "This is free money," it becomes it tests me.
Yeah.
Tests me. So you never know.
Yes.
Next one, please. What role should average true range or expected daily range play in trading?
If you use these things, go
trade
for
planning,
it.
I guess.
You
just did it a little bit this morning in your own
but I do it
trading.
like of my own market awareness. Like, I'm not. I mean, if you want to use these, I like moving averages. I use like exponential moving averages on my charts. If you want to get into the ATRs or VWAPs or whatever, those are interesting to look at. I don't really, on a day-to-day basis, focus on them.
Yeah, I totally agree with you 100%. But again, if you've done the research and you've done the time and you like this, and I have people who email me all the time when it works and when it doesn't work, you need to do this. Like the worst thing you can do is it's like you with golf. The worst thing you could do is practice your golf, and then never play. Never join a league, never have fun with it, never try to get better at it. Me with golf, I'm going to take it from trading to golf here for a second. I don't practice. I don't make the effort. So when I go out there, I don't expect too much from it except to have a good time with the people I'm with. If you're taking the time to draw your lines, look at unusual option activity, do all of this stuff that you think gives you a competitive edge, then you have to act on it.
Yeah.
I mean, otherwise.
But that's where it gets, that's the hard part, because it won't be exactly perfect. Oh, we didn't touch this number, so I can't do the, it gets, I agree with you. If you can have a tiny bit of flexibility there too, you gotta put the trades on.
Yep. Totally agree. Next one, please.
How can traders distinguish between healthy pullbacks and actual shifts in market structure?
I guess you're going to have to tell me where we are right now, and then I can tell you how to distinguish between it, or if I agree with you or not. I mean, there are so many times, like I've been looking and concentrating and talking a lot about volatility as of late and I always do, as my indicator on what's going on in the market. Now, we've violently...
When you get an actual explosion in volatility, being like kind of the bottom.
Yeah, you're exactly right. And a contraction may be, signaling that the move to the downside is over. Mm-hmm. Now, we've violently gone nowhere on the market here. I mean, we're basically where we started the year with a nice, relatively extreme tight range. I mean, we didn't like stair step down and stair step up. We've been going back and forth, and it's been very, very, I don't know, it's been easy, I guess, if you've been playing your true ranges and listening to them. If you're looking at volatility for true ranges, it's there too. I just pointed out this morning that volatility is just a dime off of its lows, with even the S&P's down 24. At this moment, I don't think you're going to look like you're going to retest those lows, which I would have said last night or 2 hours ago. Those lows are going to be tested again. So you have to watch the market. I guess that's part of, tape reading, I guess you would call it. Yeah. And just, kind of take it all into your bucket, and then decide what you want to do with the market, or even more importantly, your existing positions. Maybe you want to reduce some of your delta on one side or the other because you're watching it. But there's no way to distinguish between a healthy pullback unless you're looking at the right side of the chart.
You can in hindsight. If you have the 5% down move and then the V bottom that puts you 30% higher, then you say that was a healthy pullback.
Or if you have the 5% pullback and you don't buy it and we go down 10%, you say you were a genius.
Yes,
that
exactly.
It wasn't, now it's healthy and you get that V bottom.
Yeah.
So
in the moment, it's hard. You're guessing.
You are guessing.
You're guessing. But I think like looking for those points that you're talking about of like a spike in volatility and then, a little bit of a contraction from there, that's usually a good spot to be like, okay, maybe we kind of capitulated.
Yep.
On a downside move.
Look, I'll look at GLD for you. I was trading some gold options when things were going nuts in gold, and I think I put some GLD at 55, 455. I couldn't wait to manage my way out of that trade like an absolute genius at 457. You know what I mean? I mean, it traded down to 445.
Yeah, now it's 475.
Now it's going to be 470 and change. Yeah. So I mean, the best laid plans of mice and men. You can't you can't control this stuff, and there's no way of distinguishing anything. You just have to act on what the market's showing you. Let's take a quick 90-second break and come back. We've got an option jive. Is even the S&P's? Do you call it catching a bid down a third to a half a percentage point? Trying to do something?
Yeah, considering from last night's action, yeah.
Yeah, bonds are up 10 to 117.09. Gold and silver catching a bid. That hasn't changed. The asset that never catches a bid, Bitcoin down 2.5%. Ethereum down around 2.5%. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Could be an interesting market today, I think. We'll be back in 90 seconds. Option jive next and then the opening bell.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option jive. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with an option jive. I do have to give you a little bit of a weather report because I think it affects what goes on in the market. You've got
the weather does.
The weather in New York.
Oh, because
even though we are worldwide and global and there are centers everywhere, it does seem
because they're out shoveling snow.
Well, they're not. Let's not even touch that subject. But they're not supposed to shovel snow because it's still coming down until noon or something Eastern time. But you've got almost, from my Taiwanese sources in Jersey, you have almost 24 inches there already.
That's a ton. Is Shark out there with his snowblower?
Whoa, not until noon. I told you, because the weather doesn't stop until noon.
All right, but when it stops,
maybe
does Shark go like patrol the streets?
Maybe
he definitely gets like his sidewalk on his street for sure. Is probably
the part of the sidewalk that's not electric, and melting the snow a la the Creator.
Oh, heated.
Yeah.
Wow.
Yeah, right.
No Shark rolled that way.
No, I don't know. I'm just teasing you.
Got the heated driveway?
Yes. But I mentioned that because it had in the past, and we'll see today if the volume is, so the volume is typically back in the day. I don't know if it's going to have as much to it today, but I'm sure it will. Volume would be anemic when New York had this kind of snow to it.
I didn't even think about this angle. That's
the angle I'm
interesting
going with here, which would mean the volatility would also, because you have less liquidity, you have more
bigger moves.
So let's see if that, or it becomes a non-event. Like again, going back to that confirm and send question, I don't know if that's the way it's going to play out.
How many years back is this going from your? Are you talking like when you were on the floor?
Yeah.
Because now it's. I mean, you got it on your phone.
Yeah.
You can sit there. Shark could be snow blowing and 0DT trading 1-in-1.
That's correct.
I mean, you can do this. That's easy now. Multitasking.
So true.
That's an interesting thought. I like that. I like that. So, what would you say? I guess on a little
taking a look at the lack of movement this morning so far, because we have not
giving you that vibe.
Kind of giving me the ick vibe that we're
a little ick vibe.
Yeah, no, that
downside ick or upside ick.
No, that it's going to be a nothing burger.
Okay, all right. So then maybe vol comes in a little bit.
Yeah, so far
I like this angle. This interesting angle.
Yeah, because I was ready and geared up last night. When I went to bed for.
So you want to put a number?
I was ready to roll up my sleeves.
I was ready to roll up my sleeves too. I thought it was like.
But right now, it doesn't look like it's time to roll up your sleeves.
I sold the exact top on Friday.
Mm-hmm.
I'm a genius. I'm amazing. And then you get a little bit of a bounce here. So what's the volume number? So I was going to put it at like 1.2 million contracts because usually
for the E-mini S&Ps.
Yeah, it's like our over under in terms of like, was this really affected? Like what?
I'm going to take the under, even though you have 200,000 already traded today, which would give it a little bit right at your number, a little bit more.
That's why I went a little higher because I was going to say like a million contracts on a light day.
Yeah,
is about the number, so that's why I put it at 1.2.
I'm going to take the under, but we'll see.
Okay, all right,
we'll see.
Because we got a little bit of vol and a downside move, so you expect to see a little bit more participation. But
Yep.
Cool. Interesting.
We'll see. Yeah.
See, you can't get that anywhere else.
No.
40 years of trader experience to pull that one out.
Not really. Just like I'm.
Well, no, that was a real.
No, I get it, but I'm wondering why we're not like
doing anything.
Yeah, you look like I look at, and I noticed there's a Knicks watch list now. Very cool, by the way.
That's one that I built myself.
Oh, you don't have your own like Bats watch list as one of the.
I'm still a Johnny. I'm still a Johnny.
Yeah, where's our dev team when you need them?
I don't know where that team is.
What I'm looking for here is movement on my watch list. Like, and by movement I just mean red and green, moving up and down.
Nothing.
Right now it seems like a holiday.
Minis have moved like a point. They go nowhere. NASDAQ too. I like that.
All right. Let's go.
Research corner. You want to do it?
Option jive. Let's get it going.
A little recap of all the craziness that happened last week.
Yes.
A couple of the bigger headlines. So you had obviously the SCOTUS ruling on tariffs. They chopped those down, and then markets rallied, and then Trump came on and said, we're putting 10% on across the board, and all that kind of craziness over the weekend. So we're still in limbo on what is happening with tariffs. Things become uncertain quickly there. You had the FOMC meeting. Of course, they want more disinflation, so what did it end up being transitory? Was it transitory or is it?
Don't bait me with this, okay? Don't bait me with this. I just want to trade and look what's here now. I agree. I don't want to do anything else.
That's I want to look back on that. Was it transitory? I don't think so. I think it's was here to stay. So it was a little bit more hawkish take from the FOMC meeting. And then, of course, you have all sorts of oil-related fears. You have the Iran escalation, the stuff in Mexico. I don't know if that's really oil-related, but, a lot of geopolitical stuff happening here.
Mm-hmm.
Couple things that we have coming ahead this week. I think the biggest one, Wednesday, NVIDIA has earnings. So it's really the last big-name stock of the first quarter earnings coming up here. Going to be a huge one. PC inflation on Friday, and then you have ongoing stuff with tariffs, Iran, Mexico. It seems like there's a new crazy headline every single day, if not every couple days.
Mm-hmm. Mm-hmm.
A lot of big stuff on the horizon here. When we look at the weekly performance here, violently unchanged is the story of the year so far. The week of the 9th, you had about a 1% move across the board. Last week, we had about a 1% up move across the board. So it's basically gone nowhere over that 2-week stretch here, as you can see from all the numbers here. The S&P net down 0.2% over the last 2 weeks. That's about as tight of a range as you get, despite the volatility, day-to-day volatility that you've seen, and the volatility in just the volatility futures and the VIX itself. Certainly, state has remained elevated, but we've gone basically nowhere over the last 2 weeks.
That's true.
Looking ahead here, so the expected move, so the week of the 16th, so last week, we had about a 127-point expected move, and that was roughly wide range there with the VIX at 20. Got a little bit lower VIX, which applies a little bit lesser expected move here, about 1.7% for the week. That's up or down. VIX at 19, relatively high, middle to high. Just for your own, if you're trying to calculate this yourself, 16 VIX gives you about a 1% expected move on a day-to-day basis.
Mm-hmm.
So 120 points inside or outside that range for the week. That puts us, it's amazing because it puts us, and we're looking at SPX here. So that
puts you at the low end and the high end of the most recent range, right?
So are we breaking out of this range? If there was a week where we were going to get out of the range, it would be this week. You have NVIDIA earnings. You got all the craziness.
Which hasn't moved that much. NVIDIA hasn't had the volatility of yesteryear. Wow. I'm going to say no and go against my conventional wisdom.
You're going to say it's inside?
I'm going to say inside, but I'm going to say we're going to touch the low end of that range.
So like 6,700-ish? That would be outside the expected move to the downside. So SPX is
man, you really put me on the spot here. It's anybody's guess, but the way volatility is acting today, that it seems like it should be the other way to the upside.
Yeah, it gives you 7,000 and 6,800. That's basically the bound here for the week, which is what we've been in all year.
And I don't think we're going to touch it to both sides. If we have a chance of touching it,
I think we're going to touch both sides. You got to have both sides.
All right.
So? Okay,
it's anybody's guess. What I wanted to see happen is we touch it to the downside and we break the upside next week. I have a feeling the way volatility is acting right now and acting on Friday that we don't get to touch it on the downside and we break out to the upside.
Okay, so you think NVIDIA is our catalyst?
I don't know if
not just NVIDIA, but getting that out of the way. It's kind of an event volatility.
RSP, you look at it, the way it's been behaving.
Equal weighted.
It's just the rest of the market catching up. That's all. And the rest of the market is those 10 to 12 stocks like the NVIDIAs that have not participated to the upside. That's what I'm thinking.
Yeah. We do it. There's a lot. I mean, if the Iran stuff gets rolled over, if the Mexico stuff gets rolled over, if NVIDIA earnings are pretty decent, I can see your scenario playing out here.
The earnings numbers have been really good. It's the forward guidance that's been kind of, which
and just the AI-related kind of headline nuclear bombs that they've been dropping. All right.
Next one.
When we look at IVR, so across the board, you had a little bit of a vol contraction last week. So volatilities have certainly come in. You can see gold volatility has increased. So we should probably add silver on here just the way that it trades as well. But volatility in metals and crude oil specifically have been increasing. Equities have been decreasing. Bitcoin as well, decreasing volatility there. So it definitely has seemed like it's like a fear move in volatility across the board. But you're not seeing it in the actual market itself. S&P volatility has basically been flat for the last couple of weeks.
It has been.
Kind of weird.
Yeah, it is kind of weird.
Kind of weird. You see oil, gold going crazy.
Contraction, expansion.
Yeah. Spooky. Ick. You got the ick from it.
But I'm getting the ick to the upside, which is...
Yeah, you're getting the scary, I'm scared of them.
Yeah. So much pessimism going around.
Yeah, there is a lot. Yeah.
I don't know.
Yeah, this weekend it felt very doomsday.
Yeah, and you're not getting...
Like the people were calling for the peeps, the echo chamber of the FinTwit.
Right, which is why I thought we would test the downside only.
And then you get the V-bot. Yeah.
Scare the children.
Like
we did earlier in the week last week, around Wednesday or something like that. I was saying, you got to scare the children a little bit, and we got that.
Yeah.
I don't know. Next one, please. I mean, this is my Nostradamus thing. I mean, I'm not...
This is good. I like this. This is fun.
I mean, look at these leaders, by the way, and the percentage change.
The biggest movers are... It's been a mixed bag. I mean, you had John Deere, which was up like $80 after earnings. An incredible move. Cat is another one that's gone just parabolic. SanDisk has a ton of news-driven movements. I mean, this thing has gone multiple X to the upside. On the downside, you have a lot of the names that have been thrown under the bus with the AI takeover. Here, CrowdStrike, PanW. PanW had earnings last week. Datadog's another one which had a huge move to the upside on earnings, and then it kind of sold off from there. Boeing's kind of a random one to be in that batch with all the war going on. You have like Lockheed and.
But you look at you look at individual stocks here, like you look at an app loving up 11%. You think that's to the moon. I mean, it's $300 off of its highs, and you look
we're all over the place.
We're all over the place. You look at John
dispersion, rotation, whatever you want to call it.
You look at John Deere; it's just a skosh off of its highs. Actually, down about $5 or $7 today by the dip.
No, I sold the calls. The 700.
I think you would
I sold the 700 strike calls at $7 and watched them go to about 14 in about an hour. So no, I'm not buying the dip, but I might in a classic Sosnoffian way, I might close that call for like a 50-cent winner and move on.
And call it a win.
Call it a win, yeah.
My peeps are telling me, and thank you, Tony. They lost power for 45 minutes in New York, or at least in his surrounding area. 50-mile-an-hour winds, internet dropping once and coming back.
So maybe if the internet goes down, then no liquidity from
you. Yeah. All right, stay safe out there.
Yeah, brutal, crazy.
Oof. Next slide, please. There we go.
So crude oil, one of the bigger stories of the week. We got above that 65 handle. It's been kind of the higher end of the range here. It's the highest level in 6 months. It moved 4.5% move on Wednesday. It ranked in the top 2.5% of daily moves over the past 20 years. So that's probably leading to some of the volatility that you're seeing in oil itself. If you want to see oil volatility specifically, the VIX style, OVX:CGI is the ticker for it. It's not tradable. You could also just look at the option chain. The option chain will give you the actual implied volatility for those options, but it gives you a little idea of a Ivy rank sort of view of oil volatility.
Yep.
So oil.
It's a good thing. It's a really good thing to look at. I mean, you look at IVR as another good one to look at. This one's specific to oils. Pretty good.
Yeah. Markets are near all-time highs, yet the VIX remains elevated near 20 amid all the kind of happenings that we have in geopolitical stuff, tariff stuff, AI uncertainty, NVIDIA earnings. It is pretty surprising to see markets basically at all-time highs and volatility relatively high. Does that mean anything to you? Do you think that's just like kind of the new regime, or is there something there? Does it spook you a little bit? No.
I mean, I don't think 20 is the new 18. Like, I don't think it's sustainable if we stay right here, basically unchanged on the year in the market. I think volatility
has to go down.
I think volatility will contract a lot faster than market will move to either extreme of this really tight range that we're in. I mean, I wouldn't be surprised if the next time we're at 6,800, volatility is under 20. Like we slowly go
like
there.
Slow grind down. That would be the pain trade.
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 I love seeing the discourse about like upside being the pain trade. No. Pain trade is at
all-time highs. The downside is the pain trade.
Low volatility chop to the downside where you get like 10 down, 10 down, 10 down, 20 up, and then you get like, 310.
Death by 1,000 cuts.
Death by 1,000 cuts. It would be good for us in some respect because
if you decide to stay nimble the way you've been with your futures trading.
Yes, that is.
It's a lot harder when you're doing 45-day option trades to be nimble like that.
And because you don't get the vol aspect of it. You're not getting the changes in volatility. Volatility is staying there. It is
correct.
Kind of that's like the paint dry scenario. I don't wish that.
No. I don't wish that on my worst enemy.
Yeah, no. Quick little review of earnings. So a couple of the earnings last week. I mean, John Deere, I think, was kind of the craziest move to the upside of the batch here. You had Akamai in there. Klarna was another one that just got absolutely myrtleized to the downside, down 27%. But really, it's all eyes on NVIDIA this week.
True. And NVIDIA, since we haven't talked about it on a price range, is sitting at $190. Actually, a little bit of a bucker this morning, up a couple of pennies. It's been in a very tight range from
85 to 90.
Yeah, right here. I was going to say from very tight range. I mean, I guess if you went to extremes, you'd be almost 195, almost 170, and we're sitting at 190. Yeah, IV rank of 30.
Of course, when we look at the earnings for the season, it's been a complete 50-50 split with 0% average return.
That's correct.
You can flip a coin and you're going to make nothing.
Yeah, and that's why I think you have to be somewhat directional in these earnings trades. You could sell premium, but you have to be directional.
Yeah, and you're
maybe you can get that number to 65 or 70%, if you get a little bit lucky on some of the direction you pick.
I think it's just a good exercise to let people know that, across the board, these earnings trades are engagement trades. Your own thoughts about how earnings season went are going to be influenced by the ones that you trade. If you trade a handful of them and they're all big moves to the upside, ripping your face off, you're going to think that earnings season was, all outside the expected move. Across the board, when you take the whole batch, it's basically 50-50 in terms of up versus down, and the average return being 0%. It basically tells you, sometimes you have the 10% upside moves, you're going to have 10% downside moves to offset it, and it's a wash across the board. If you did them all, it's a wash.
Much to do about nothing.
Yes. Earnings coming this week. There are a couple names that we've got coming up here. I guess you got HIMS after the close today. On Tuesday, you have Home Depot before the market opens. That's another one. First Solar, Kava is in there in the middle of the week. NVIDIA, obviously, is the biggest one. You got Salesforce in there, CRM, Snowflake, Vistra, Baidu is later this week, Dell. So Coinbase, couple up, or Coinbase already.
Coinbase
already report?
I believe so. Remember, they were down in under 150 or something like that, or at least the day before. Yeah, Coinbase reported already.
Couple names though with throughout the week that you got
NVIDIA is going to be where
NVIDIA is the one.
I mean, you could argue that Home Depot, which has kind of been starting the year at 100, the 340 is 180. That maybe the Home Depot, the John Deeres of the world, is that?
Yeah, maybe.
Look at them to continue this rally. We'll see. Oh, you know what? It really doesn't matter because we've come to the end of this segment.
Yes.
And the favorite part of the day, which is the opening bell.
Turn the machines on, baby.
So what have we had? About a 5-point range right now at the high.
Last hour. Yeah.
Yeah.
Since I got filled on the short, it's been about nothing. Nothing.
We'll take a quick 90-second break. Surprising
to me, but you brought this whole story that I didn't even think about. The New Yorkers shoveling snow, they're not going to be trading.
We'll take a quick 90.
Not shoveling snow yet because
the ones who have to travel to New York to get to their jobs don't shovel their own snow, son.
That's true.
We're going to take a quick 90-second
helicopter there either, so there's no traffic for them.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. The opening bell next.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell imminent here in just a minute before we open here. Even the S&P 6907 and change. That's about this is right where when I woke up at 6 o'clock in the morning, or at least when I got my car, I woke up at 5 o'clock. When I got my car at around 5:30, this is where even the S&Ps were. This is the highest end of the range that I've seen them from all of last night. Down around 15 handles. NASDAQ down 93. Russell down 14. And the Dow down 168. Volatility up by 11 cents, but trading just on their lows. Really kind of weird movement in the market. Is it a selling opportunity, a gift of the century? We shall see momentarily. You're kind of playing it a little bit that way so far.
A
little bit. Or is it over? And it's by the rumor, sell the news.
Seems
kind
like
of
it's
thing.
over. Vol up 11.
Yeah, not.
11 cents.
11 cents, not the movement
Seems
that I
like
was
it's
gonna
nothing
think.
better. I also want to acknowledge Joe Mama is also struggling out in New York as well with the snow. So Joe Mama, we send our love to you as well. It's not just the shark out there, okay?
Joe's an overperformer. He got 26 inches. Shark only got 24 inches.
Oh, yeah.
Just so you know, Joe Mama's is bigger. He's got more.
I would have taken Joe Mama.
Would you? Would you? I don't know. Even the S&P's down 8.
Oh my God! Cancel crash.
Cancel crash indeed. Let's see what's moving this market real quick here. We can click on this percentage, this net change here. App Lovin' down 17. Vanetta mentioned that this morning. Crowd down. You mentioned it. Down 12. Coin down 5 and change. Coin been an overperformer to Bitcoin as of late. Microsoft down 5 or 6.
One more. Yeah.
Adding a little bit to your NASDAQ and your.
I kind of hate it, but I'm playing the game here. I think you're going to have two-sided.
You covered them nicely.
Yes.
You may have two-sided action. There's no reason why you shouldn't think that we've not going to have what we've continued to have all along. But sure. With the E-mini S&Ps down 2, you don't usually see Microsoft down 6, Coin down 6. Palantir, I can't tell you how many emails I got about Palantir and why it trades at I don't even know if it trades at an 80, 85 multiple, but that's what people were writing to me. With everything that was going on in Mexico, how Palantir was going to be higher, it's down by $5 today. Service now down almost $4. Let's see what's moving this market to the upside. Really seems like a small number across the board here. Gold obviously up $6 and change. Google up around $3 or so. Nvidia up 2 and change going into earnings on the 25th. So we have to do something tomorrow. Well, that's the 25th after the market close. You really have until Wednesday to do something there. Johnson & Johnson, silver, Apple up $1.80, trying to keep this market a little bit higher. And some of the oil-related stocks like XOM. Man, it really seems like if I told you what was going on to the downside, App Lovin' down 20 and change, DoorDash down 9, Tesla down 7, Coin down 6, Microsoft down 6, you would think that we were selling off. You just got the E-mini S&Ps turning green.
Wow.
Didn't see that.
We put something on in Home Depot?
Sure, you certainly can. Home Depot down 60 cents. Home Depot has earnings coming in the morning, tomorrow morning. Why are you so crazy about putting something on now and not waiting till the end of the day?
We could. I mean, you're,
Well, I mean, do you want to do something?
Here. I don't have you for the last call, so I was going to do it with you. Your contract ends at 10, so I was going to get you while you were here, but that's okay. We don't have to.
Now it ends at 11. Option trades today, maybe going to 5 days a week. Maybe check that out. We can do Home Depot closer to the end of the day.
Yeah, we'll take a look.
We'll take a look at it around 10 o'clock before we go on and see what it moves. It's already down another $1 from where we were just looking. I was wondering, with your outlook on what the market's going on, if you wanted to do a 0 day with your call closer, your call spread.
No, let's just do the normal.
Okay.
Delta.
Okay, it's pretty early.
I got the short delta. I got the short delta with MES and NASDAQ. So I don't need to get any more short delta with the 0.
Understood.
I just close out of Morgan Stanley strangle. Those markets stink.
Yeah,
you a couple bucks out of that. That was from What's Your Assumption, Fast Market, something like that.
Got it.
Yeah, let's do the SPX. What do you think? 20 delta, we go 15.
SPX, let's see what the expected move is on the E-mini S&Ps. $32.
Yeah.
It was 42 on Friday, I believe, around 42, 44. Same on Thursday. This is a very tight little range.
And volatility has come in pretty.
Volatility in by 10 cents. I think you wait.
Yeah, I agree. I was looking at it. I think we were doing them last week at let's see what we did the last week one at.
Almost you
480 or
you get
$490.
$20 further out of the money.
Yeah, but we were getting like almost $5.
Yes.
Like 480, 490, $5.
Yes.
It's marked at 440 right now.
Yes.
And that's volatility coming in too. It's
Vol/VX in by 15 cents. Didn't think we were going to have that when I went to bed last night.
Yeah.
It was actually, you have to change everything. This is what I talk about, how markets are ever changing on you. Like, I thought we were going to have completely opposite type of action coming in this morning. Now you have to look at it as like, how do I benefit from this, right? So maybe if you had something that had too much long delta to it, you've got your opportunity to do something right now. I don't want to hear about it, right?
For sure.
Okay.
For sure.
Okay. All right.
I just closed out some of the puts on silver. So I'm leaning short delta silver. I have like at the money calls there. But those puts, they've gone from $5 to $1.
Yes.
Like we've had a 10-point rally in silver. So,
it is crazy, right?
So we're gonna lean a little bit short there.
Beautiful.
What else? I don't have anything.
You don't have any pressing issues here, right? You really don't.
No.
Kind of in decent shape here.
Yeah. I mean, the markets, we've gone nowhere.
Market's gone nowhere quick. Yeah, market's gone nowhere quick. And you're unchanged here on the market. Take a look at oil. Oil's up 60 cents to a 67 and change. Anything there? Ivy rank of 70 has been expanding.
I've got a little short. I sold the call spread there last week, and I have that upside butterfly into the end of this week. So, and we put on a USO position too. I think, or was it USO or XLE maybe? Oh, we did both.
Yeah.
The USO strangle, that's come in like 10 cents. And then XLE, we did the laddered strangle. Remember that?
I do.
Did the laddered strangle.
I do. Put them in each month is what you're looking at when you're saying that.
March and April.
Good job.
Anything moving that we could put something on in?
When you look at some of these, well, you want to sell. I mean, you got GLD. Markets are horrible in there. When you take a look at what's going on, let's take a look. If you look at April, these markets are.
We've got it.
You got dollar-wide strikes now. They're about 30, 40 cents wide. I guess they're not as bad as they were.
I was thinking March. You want to add?
You want to play more of a directional bias than
Well,
March with
I've been
25
doing
days.
in silver and I could probably just leg out of this too. So
Gold up $7 and change.
So I sold the 430s as part of I was doing one put to two calls.
And you're
in gold and silver.
And you're short the 430s in March?
430 in March. It's gone from $5 to $2.50 into this move. $2.70.
430 GLD?
GLD. The 430.
It's trading 470 and change.
Yeah, I know. The 430s, they went from $5 to $2 and change. I'm thinking we closed the puts. And
puts. Oh, you're talking puts. When you
puts.
I thought you were saying call.
But I was selling one put to two calls. So I'm leaning short delta, short upside volatility. So I'm thinking I leg out of
Where's your call strike?
The calls are at 490.
Okay.
I mean, it's not a winning trade, but I'm thinking to manage the trade and kind of keep the short delta, close out of the puts, and sell like a 30 delta put to a 16 delta call. Like it's slightly long delta skewed strangle where I'm still net short on the position as a whole, but taking advantage of
you're
the pop
reducing
in volatility.
Yeah. I got you. Even the S&P's up 4.
Cancel crash. You were right.
Yeah.
You were good at this.
Yeah. It didn't benefit from it that much. Can't lie. A little bit skittish. Like a sissy.
Okay. So I'm going to close that put. And then we'll do like a 450, 520, 525. Pick up like 10 deltas.
Sure.
The 525s are at $4.
Gold up $122. Silver up $5. Silver up $6.
I think I should probably do the same thing. Because I closed the puts already.
Best laid plans of mice and men here. Boy, wasn't prepared for this. Not what I was really getting myself psyched up for. I was really going to be looking to see what I could buy and scoopy on the downside at bargain basement prices. Now I'm switching my cards over to see what I can sell.
Yeah.
That's what I think might be exaggerated prices here.
All right, I did the 70-100.
In silver, yeah. Silver had better markets too than GLD.
What else? What else we got?
I mean, you have an unchanged market.
It's nothing. It's crazy.
Yeah.
I thought we would have some opportunities today. I think. I think you're right. I think the snow. Got to blame the snow today.
I got to blame somebody. I can't blame you. I'm certainly not going to blame myself. That's for sure. All right. Well, we could take a quick 90-second break. You know what? I forgot about this. It's Monday. We can blame Dr. Jim.
Nothing says Monday.
Nothing says Monday like the skinny on options, abstract applications with my man Dr. Jim coming up next. We'll be back in 90 seconds with
Ooh, NASDAQ. NASDAQ moving now.
Down 113.
Scoopy one?
Yep. Even the S&P's down 375. 4.
All right. Scoopy one.
You just covered.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. Nothing says Monday like Dr. Jim, the skinny on options, abstract applications. How are you, my friend?
Man, the only thing that kind of says Monday like a Dr. Jim is a U.S.-Canada gold medal hockey game at 8 a.m. on a Sunday.
8 a.m.?
That's the only thing that might be close to a Dr. Jim on a Monday morning. And guys, I mean, I've been telling you guys about the U.S. men's hockey team, I mean, for years. It's been 4 years. I started talking about them 4 years ago, and they came through. Was there ever a doubt? That's all I'm saying.
Forever and ever. There was never a doubt, Dr. Jim. I rode your coattails on that one, no doubt about it.
Yeah, you had to, man. You had to. Was it a pick'em yesterday? Like, people were talking about 1980 and talking about, Miracle Part 2. I mean, wasn't it, like, even?
I think it was, and
I think Canada was actually a slight
favorite, but it was skewed because, like, on the sports books, DraftKings, 80% of the money was on the U.S.
Yeah, because
really,
well, because it's all U.S. money.
Majority,
like,
of it
you can't.
based, yeah.
I don't know if you can bet in Canada
I don't know if you can go outside in Canada.
I don't know. Some of them, but the handle was all on the U.S.
Yes.
Because it's U.S.-based bettors.
Yes.
Nobody's betting on Canada here.
Yes.
Unless you're Josh, who told me, he was kind of on that side. I don't want to.
He went against the family like that.
Yeah.
He just went against the family.
Yeah.
Like
If you like being on the losing team, you got to go for Canada.
I know.
That's the way.
It's sad. It's sad.
Hey, you're allowed to gloat when you win.
Yes. Yes,
true.
For sure.
That's very true.
Game.
Game. So what was the highlight? Was that the highlight of the Olympics for you guys?
I think so. It's either that or the cross country skier people that go
who could beat me uphill with gym shoes
uphill.
on.
They're going uphill at like 30 miles an hour. I'm like, these guys are insane. Yeah. Those are pretty fun.
And then when you see them at the end, they just completely collapse in exhaustion.
Yes.
And it's like, what's crazy about that is that they've been training every day for 16 hours a day for 4 years, and still, like, they're just completely collapsed in exhaustion. Like, that's pretty remarkable, in my opinion.
Yeah.
Yeah, no, it definitely is. There's no doubt about it.
Yeah.
I mean,
I also quite enjoyed the curling kerfuffle.
Dude, it was nonstop, dude. You couldn't avoid curling if you wanted to.
Oh, like looking at the finger touch, the memes that came out of it.
So I was trapped. So Dr. Jim, I got to tell you the story real quick because you're going to get there someday. So I was Saturday night babysitting my grandson and my granddaughter with my wife. So I had my granddaughter in my arms and she was being real fussy, and I finally got her to bed. So I'm in the chair sitting like this. I got a Charlie horse in my leg, and the remote control is too far to reach. And I'm watching women's curling for like an hour.
Oh, no.
And I'm thinking, all right, well, it's going to be over soon. And when it was over, it got to men's curling.
Oh, no. See, I had 3 hours of curling. I'm surprised you stayed awake for that.
I would, believe me, when she had the bottle in her mouth for a little while, I was giving a little bit of this too. But I stayed strong. It was late for me. It was late. Yeah.
Yeah, but at the end, were you kind of into it though? Like,
I actually learned about curling. Like, I know all the rules about. I had the volume low too, but I was able to read it. I was able to read the caption, so it was good.
The thing I don't like about curling, and this is where I think figure skating
is the
really
pace.
gets it right.
Yeah.
Well, sure, so figure skating. The announcers actually do a really good job of, like, every 6 to 8 minutes, they actually explain, like, the scoring, and they explain how it works.
Yeah.
You turn into a curling match, they just assume you've been watching this for years and years and years.
Yeah.
Like, they just assume you understand the game within the game. And it's like, I'm just watching shuffleboard on ice. I don't really know. Is there something else I should know about this?
It was actually pretty exciting after about a half an hour of learning the game, how it can change so quickly, because I would look and be like, oh man, look at Canada. They got, every stone in place here.
Yeah.
And then somebody would throw a stone.
He places the hammer.
Yeah.
Wow.
And then all of a sudden you win. I'm like, this is unbelievable from the clutches of defeat here. Yeah. Awesome.
Yeah. What's your favorite,
awesome.
Jim?
Yeah, honestly, I mean, I actually somehow avoided the curling. My favorite was actually the figure skating because my kids, like, they all got, Eli didn't really care for it, but Penelope and Amelia, they got way into it. And so I got into it because they got into it. And it was just cool, man. And, like, I mean, the men, the women, the quad god, I mean, whatever. It's
quad
like,
god.
I
didn't even know about the quad god until, and I thought it was quads because of his quads.
Yeah, of course. No. Yeah. And it's like, it was cool, man. It was really cool. And to see my kids get so excited was really, really cool. And so,
well, Jim, we do know the real quad god is you. You've got those thick quads.
Well, I don't know about that, but all I'll say is this. If we're talking about quads, I got to throw a shout out to Quads Gym in Chicago. It's right there by Wrigley Field. If anybody is serious about training, you've got to train at Quads. That's where I went every morning before the studio for 5 years. No, it's the best gym in Chicago. It's not even close. Right there on Broadway Street. So shout out to Quads Gym there in Chicago. Yeah.
Very nice.
Good for you.
But you guys ready to do some finance? I mean, you want to do a little something this morning?
Yeah.
Man, let's do it. All right, Paul, go ahead and cue us up. There we go. This morning, we're going to talk about some break-even point losses. So that may seem like a little bit of an oxymoron, right? A little bit of a juxtaposition here this morning. Like break-even point losses, how is that even possible? But it's very possible. And we're going to talk about how and why this morning. And I think this is something that, unless you've been trading for a while, or until you've been trading for a while, I should say, this is something when it happens the first couple of times, you're like, that doesn't make any sense. Why is this happening? Hopefully it'll make a little bit of sense after this morning. So Paul, go ahead and cue us up here on the intro slide. So regardless of strategy selection, so you could be long, you could be short, undefined risk, defined risk, the profit loss regions for the strategy will always follow a similar pattern, right? You're looking at the curve view, you're on Tasty Trade, you see the profit region, that's where your position is going to show a profit. You see a loss region, that's where your position is going to show a loss. You see a break-even point, that's where your position shows a scratch, right? This is very basic. This is essentially how everybody starts thinking about a strategy from a visual standpoint. But if we examine this a bit more closely, we realize just how dynamic it is as you think about where you're at in the cycle, how long you've been in the trade. Like all these things really matter when it comes to essentially all of these regions, but especially the break-even point region. For you guys, I'm curious, when you put a trade on, how often are you using the break-even point as kind of an anchor for you to understand where you're at in the trade?
I would say that, there's two things to consider here. One is, if you're putting on one trade and that's your trade, it's pretty easy to kind of
look at your break even. I want to be here. I want to be here. Even if it's a one-sided trade, this is where my break even is. It's below the most recent move down. It's outside the expected move. Go ahead.
That's easy. Once you get into the more contracts or more position size,
start scrambling, things change.
Yeah, things change. It's more of a conceptual thing. Like I know in gold, I have multiple positions on in GLD. I know that my best spot is probably somewhere between 500 and 450. I don't know the exact number. What I'm getting at is I have multiple positions on. I don't know the exact number of where my break even is, but looking at all my positions together, I kind of know where my range is of where I want to be. So I think yes, I'm cognizant of it on the opening, but once I'm adding to positions and trading around kind of as a core position, it gets a little bit more dicey.
Okay.
Tony, what do you think?
I mean, the curve view does an excellent job of showing you all of this, and you're in a position that you have multiple strikes on. I should say that on there. Not something I look at. Would be the thing that I.
But
But I know where it is.
Yes, you know exactly. Looking at 10 different positions that you have on, you take all your strikes, all your puts, all your calls, and you know roughly where you want to be.
Yeah, I've said this so many times on the show in the past, maybe not so much recently. When you have multiple positions, you have to know where your risk is.
Yes.
And you can easily go through your positions and butterfly them off and synthesize them off. I'm synthetically short the 100 call. I'm synthetically short the 100 put or long it if you're trading it from a long point of view. But you are right. You have to know where your position benefits, makes money, and where you start losing money at a one-to-one basis where you don't want to be.
Yes.
So yeah, I guess it's not something that I look at in depth the way you are right now, Dr. Jim. But it's certainly something you know.
Yes.
Okay, so it sounds to me like once you get a few positions on, you guys are both kind of internalizing where you're at in space and understanding where the risk is, good numbers, good prices, things like that.
Yes.
100% agree.
Yes.
That's actually a few steps further down the road than I'm even going to go this morning. I'm talking about if you have one single position on, I still think the dynamic nature of the break-even point can really be a head scratcher until you've traded for a while and you understand the relationship between DTE, extrinsic value, and things like that. And so I'm glad you guys brought up kind of, where most traders will be headed when they have a few trades on. Like I've got a few trades on, like you said, Nick, you've got a few in GLD. It's like, all right, you've got, whatever you've got on, a short put spread, a strangle, a this, that, and the other thing. It's like, okay, I've got a few different moving parts. And now I understand any number between 450 and 500 is probably good for me.
Yes.
Maybe
Right.
470 is a little better than 490. But generally speaking, as long as we stay in that range, I'm going to be okay.
Exactly.
Yeah. Okay. So let's go to the next slide, Paul. Okay. So let's actually slow that down a little bit and back up. Let's talk about one strategy and let's just use a short strangle. Now, I could have used any strategy here. The same basic principle is going to apply to any strategy across the board. It really doesn't matter. It could be a vertical spread, iron condor, strangle, short put, ratio spread. It doesn't really matter. But if I sell a strangle, right? I'm selling both sides. I'm strategic. I've got extrinsic value working below. I've got extrinsic value working above. Like everything is right in the world. Okay. If I stay between my strikes, obviously, that's where I'm going to make money, right? That's what I want to happen. That's best case scenario, whatever. Once you get outside the strikes, this is where you have obviously those X intercepts where you have the break-even point on the downside and the break-even point on the upside, which I have here as an orange circle. Once you get outside of those break-even points, that's where you're going to be, obviously absorbing some losses on the position. Okay. The thing though, that I think is surprising to a lot of traders is when you hit that break-even point, oftentimes you will actually notice that your P&L is negative. Right. So I put on a strangle, the stock goes down, it hits my downside break-even point, but I'm looking at my P&L in the position and I'm hemorrhaging cash. I'm looking at my P&L, it's red. And I'm like, how is that even possible? I am at my break-even point. I should be at a scratch. Or similarly, if I'm, in a position, I sell a strangle, the stock rockets higher up to my break-even point, again, I'm actually red. I'm showing a loss, but I'm at my break-even point. So that can be a real head scratcher. Like, wait a minute. I looked at the curve view. I understand, how to, attack the premium on to the call strike, how to take it away from the put strike to get these break-even points. Why am I negative when the stock has hit my break-even points? Do you guys kind of see the issue here?
Sure.
Yes.
Yep. And obviously you guys know the answer, but I'm curious, when you guys first started trading, maybe not so much you, Tony, because it was a long time ago. I mean, we're talking the 20s, the 30s. I can't remember when it was.
Yeah.
But Nick, when you started trading,
The Great Depression.
when you started trading, yeah, that's correct. Right. I mean, he was scalping bowls of soup, man.
Yeah,
back in 1925.
Yeah.
I mean, he was buying them from the widow on the corner for $3 and selling them to the old guy on the other corner for $4. Like, how do you think he made his nut?
It was easy back then. Markets were wide. It was simple.
Super wide.
You guys are geniuses now with these tight markets.
I'm just saying, you had the asymmetric information. I mean,
Asymmetric information with no TVs or phones being able to be in the pits. Yeah, we had a lot of information.
Man, think about that, man. No competition, low or high barriers to entry, asymmetric information.
It's a racket.
He did it with
Jim.
the soup in the 20s. He did it with the jeans out of his trunk in the 80s.
Yeah.
I mean, this guy's just...
The jeans that fell off the back of the truck.
You know a little bit too much about me, Dr. Jim. It makes me feel uncomfortable.
I was on the road with you for, 7 years?
Yeah.
Whatever it was.
Yeah.
I heard all the stories, man. All the stories.
Yeah, that's not good.
No.
That's not good.
Yeah, no.
I'm going to have you taken care of.
Yeah. So, Nick, when you started trading, I'm curious, and you may or may not remember this, but when you started trading, was this something that maybe you remember kind of giving you a difficult time conceptually, or was this something you just picked up on?
I think so. And I think, over the years, I get those emails as well from people that are like, I've been in this iron condor for a week and the stock has moved in between my strikes and, I haven't made any money. What gives? Or I'm down money. What gives? What did I do wrong? And, I think this is a common misconception with trading is that it's not a binary outcome. There are binary risk profiles, which is what you're pulling up here on the slides is, that's at expiration. That's with zero time left. That's a binary look at what your profit and loss is. And in between that time frame, which is some point in the future, there's a lot of variables that change. There's time decay, there's changes in implied volatility, changes in the spot price. Those are all going to factor into the value of options. And so, the short answer is yes, this is, something that I think a lot of new people struggle with just the changes in P&L. Oh, my option didn't move by 5 cents over the day when the theta was $5. Why is that? These very, very hyper specific things. But I think it's important, to understand why that is. So all those things change, and your P&L and risk profile in real time is not going to act like a binary risk profile that you're seeing here.
Yep, that's exactly right. And you really hit the nail on the head. The key reminder here is when you're looking at these break-even points or you're thinking about P&L, you have to keep in mind that's all pointing forward towards the expiration date. That's all at that moment in time. Prior to that, everything is dynamic and everything is fluid. And so that's exactly the point. So Paul, go ahead and hit us on the next slide. So why is this happening? So what's going on? Here it is. So as premium sellers, right, just to make sure we're all on the same page, we want extrinsic values to go down over time. We want these to drop. And we benefit from the lower extrinsic values because they send option prices lower, right? We sell option prices up here. We want to buy them back down there. It's very, very simple and basic, but just to make sure that everybody's on the same page. Okay. If a position moves to our break-even point too early in a cycle, the increase in extrinsic value in the options is going to be working against us, and it's going to overwhelm potentially any theta that we've collected, potentially any volatility that's contracted. And so now, because that extrinsic value is going up, that's going to be the driving force in the P&L. And because we want extrinsic values to go down and they're actually going up, that explains why, even though you're at your break-even point or even inside your break-even point, like you were saying with iron condors, I mean, this is a classic situation with an iron condor.
Yeah.
It's because the extrinsic value is working against you for the time being. But the thing that I always encourage people to remember is, one of the things I say on From Theory to Practice all the time is whether you make adjustments or not in controlled direction or directional risk or not, that's up to you. But at the end of the day, if the options are out of the money, the position is still working.
Yeah.
It's still working because it is on a path to finishing out of the money. And if it expires out of the money, then you're going to be in a great spot. Now, of course, we're going to manage it early. We're going to do all these things beforehand, but just thinking forward to the end game and saying, all right, I'm still in an advantageous position because the stock still has to beat me. And if I'm in a situation where the stock has to beat me and I don't need to be directionally correct, that's a good spot to be in.
Agreed.
Totally. Agree.
Yep. Well said.
It's a hard thing for people because the P&L, especially when you're starting off, is what everybody hyper focuses on.
Well, it's how we judge everything, right? I mean, the one who dies the most toys wins. I mean, so it has to come with P&L. So sure. Sure. This is true. This is true.
But, I think it's,
That
was good.
Did I ruin your train of thought? Sorry.
That was good.
There's nothing more Tony Batista than whoever dies with the most toys wins.
I just think it's sort of go on. Sorry.
No, it's all good. I mean, there's nothing more like I'm going to have the casket decked out with some terrazzo marble.
Yeah.
And that's going to be that. Like, there you go.
Oh, so good. So good. I think who could have the most toys is that I know is Tom, and he has no toys.
None.
He have no toys.
Maybe. Yeah.
Very nice. All right, let's get him a few takeaways.
Let's
get him a few takeaways, and we'll get him to some market measures, and then people can learn the skills on market measures to acquire more toys to win the game in the end in the graveyard. So there you go.
Yes.
Wins, losses, and scratches are all part of every trader's trading journey, and break-even analysis is an important piece to any trade analysis. Just make sure that you know that true break-even points point towards expiration only, and any break-even point breaches prior to that will very likely show a loss, especially if you're early in the cycle.
Well said, Dr. Jim. Well said. Good job out of you. Even the S&P's down 27. You covered a couple of even the S&P's right here.
Most of it. I got a little tiny left on
NASDAQ
and NASDAQ both.
And NASDAQ too. Yeah. Good job out of you.
But do you know where your break-even point is? That's the question.
I do. Not the exact number, not to the penny.
Right.
But I know
you got a range, right?
Yeah.
You got a range.
Well, I've had some fortuitous scalps today, so my range is significantly higher to the upside.
If you must ask, Dr. Jim. You must ask.
Yeah, a couple 100 points to the upside. No problem.
Okay. All right. Let's go.
Good job out of you, my friend.
I might just take the rest off right here.
Even the S&P's down almost 40.
Yeah, there you go.
Nice job.
Yeah.
NASDAQ.
Now I know exactly where my break-even points are. They're off the board. They're done. I got no break-even because I'm out.
No, isn't that the best break-even point?
That's
the one that's off the board.
I got the cash in hand. No break-even.
There it is.
There's nothing better than that. That's for sure. We're going to take a quick 90-second break as even the S&Ps in this segment alone made their highs for the morning and right now the lows for the morning. Talked a little bit about maybe taking a look at the positions that you wanted to get out of that you didn't think you were going to have an opportunity to, saying that you had an opportunity. You certainly did. Now your 40 handles lower than that. See what you want to do. But volatility up 43 cents back to 2050 and change. Looking at the expected move for the E-mini S&Ps, it's about 35 and change. So no good pull on putting on the 0-day trade. You could have listened to your dad and just done the call side a lot closer, but you didn't. That's okay.
Well, I had the short delta already. All right.
We're gonna
the one that always says, do you get a little big for your britches, man.
Well, that's if it goes against you. I say that. Yes. If it goes for you, I understand. We're going to take a quick 90-second break and come back. Dr. Jim, you're a good man. I'm a good man. Nick's a good scalper. We're going to take a quick 90-second break. We're going to come back with more Tasty Live with a market measure and Kai coming in talking about 0-day.
It's a really good one.
Trades. A nice little piece on that, which we're going to be doing momentarily. Let's Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Looking for market insights you can count on? Check out Option Trades today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with my man Kai in the house for a market measure on 0-day, sponsored by the SIBO. That's a mouthful. You're looking fly this morning. How are you?
Fresh haircut. And he's a birthday boy.
Last week. Birthday boy.
That was last week.
How was your birthday weekend?
So it's okay.
Oh, you didn't get anything special.
Oh, just a chicken noodle soup.
Chicken. I like soup though. I'm not gonna lie.
it.
I mean,
you do now. You made fun of me for weeks for my soup thing. That was the story. Oh, you're so domesticated. You make soup. Now you like soup. You do like soup. You ordered 2 soups.
I have done that. Yeah, I have done
Italian style?
I like all soup. Doesn't matter to me. Yeah. Although I didn't think I liked minestrone soup, and I had minestrone soup this weekend. I loved it.
Wow, your palate is really maturing. So proud of you.
Thank you. Did you make the soup, Kaya?
No.
Oh,
my birthday.
Oh, yeah, that's right. That's what I'm talking about, my man. That's what I want to hear. Yeah. That's right.
You do the same thing. Oh, funny. My birthday.
That's right. Good job, Kai. Good job.
Thank you.
All right. So this market measure that we have this morning, he has been talking about since this weekend. He loved it.
Oh, okay.
Okay.
It's it really shows how much of a life I have. I just think about this place all weekend. I think about, oh my God, this market measure on Monday gonna be so good.
Ooh.
Mm-hmm.
Wow.
So here you go. Here's your time to shine. Don't disappoint.
Great. So I just try to show the real results progressively on weekly basis or on monthly basis, rather than showing like a 3-year or the whole spectrum result, long-term results. We probably can see the path, zooming to see how that developed over the weeks.
Yeah, what's happening now?
Years.
We're giving you something to reference because it's fresh in our mind last week. How did we do?
So you definitely will see more kind of losing trades, losing days in between, because we definitely will have some, and that's is actually what happened in the past 3 weeks. The market has been relatively flat or violently unchanged on weekly basis, but internally is actually pretty volatile, right? So these are because we have a holiday Monday last week, so this is actually the 2-week summary. In the past 2 weeks, the SPX didn't change that much, only down like 0.3%, 0.33%. But internally, we still see some volatile moves, especially the February 12th, that was Thursday, the week before. We saw like more than 2.1% reversal. That actually happened early in the morning. So this is kind of one of the biggest days. Yeah, so that day was actually the largest pullback since last November. So it's pretty big.
Yeah, I would say so.
And that's been kind of the story of the year, has been like 1 or 2 days each week where you have these violent big moves in both directions, where you probably have 3 or 4 winners throughout the week that are easy, no problem, and then you have this one that's just kind of full max loss.
Yeah,
for the 0-day trades.
It happens
if you don't manage them.
Yeah, it happens. So with 25% profit target, no stop loss for the 2020 Iron Condor, the long-term success rate is 84%. So you should see like a 16% losses sometimes, right?
Yeah, it's 1 a week basically. A little less.
Kind of, yeah.
A little less than 1 a week.
Yeah, a little less than, yeah.
Yeah.
All right, so talking about the market, we still want to measure the volatility based on different metrics. The close-to-close volatility on daily basis. This volatility is a daily volatility, not the annualized one.
Okay.
And also the intraday and also the overnight gap. So you can see when you see a big percentage change at the end of the day, what's the contribution? So where is the contribution? Is it from the overnight move or is it from the intraday move? So in the past 2 weeks, actually, majority of the move was actually coming from the intraday. So whatever you see the end of day return, mostly from the intraday. So that's going to impact your 0DT trade.
Yeah.
Right.
It kind of makes sense because we've had, even today, where last night we were thinking, we were kind of like, oh, this looks dicey.
Yeah, well, you got a little bit of it now.
Came all the way back.
The Russell down 1.5%, which is a big move in the Russell, 40 some odd handles. You got even the S&P's down 40 some odd handles, which is closer to a half to a.
What? We're down 40 now?
Yeah.
When I walk in, we were down like 24.
Yeah.
So we have you to blame for.
Yeah. But what I was getting at was that the moves in the overnight session have kind of been, you've had these kind of violent down moves, and then we kind of chop back to basically unchanged. And then you get the movement throughout the day, which is what you're seeing here, where, it's kind of starting to go back to those the downside, like we're down 45 now. This is where we were last night when I closed them, 68, 78. That was exactly where I closed them.
Yep.
So you're definitely seeing this. This is interesting.
Yeah. So the overnight and the overall move was smaller or tighter than the long-term average. This is actually the 5-year. Oh, this is a 3-year average. But the intraday is higher. So the volatility definitely come in during the trading session.
Yeah. Which is why it's been violently unchanged.
That's correct.
Because we're not having the volatility in the overnight session. We're having it during the day, and we're going nowhere.
Well, you got a little bit of it right now. Volatility up 50 cents, 20.65, about 20 cents off of its highs. At the E-mini S&Ps are only $10 off of their lows. So we'll see if volatility catches a little bit of a bid here.
Gold going nuts too.
Gold is going nuts, up $138, trading up to $52.20. That's up 2.75%. Silver kind of hanging steady, although it is up almost 6%. The gold-silver ratio hanging steady also at 59.5. So on a percentage basis, they're both moving the same right now as they have all day.
Okay, so let's take a look at the our classic $20 wide and 20 delta iron condor, managed at 25% with no stop loss. So we actually saw 2 losses in the past 2 weeks. Actually, all winners from last week, but 2 losses from the week before.
Okay.
So especially February 12th that has 2% reversal, which actually we had 300 like a 300% off the premium collected. This is pretty big.
Yeah.
Yes, very.
Which is that's pretty much max loss or close to it.
Almost. So yeah, you rarely see. You almost cannot see 500%.
Yeah.
Only
it depends on what you're selling it for, obviously. Because if you're selling it, like if it's higher volatility, you might be selling it for $5 or $6, right?
Yeah, you don't get like 500% because if you collect more than $5 credit, which is
then
close to average,
300% would be the
is almost the max.
Yeah, 300 is basically the spot. Yeah. Okay.
Yep. Yeah, so we have 2 losses, and we want to take a look at the intraday move of these 2 big loss days, and to see what happened, like what causes these losses.
Yeah.
So next slide. So we have February 12th and February 9th. So interestingly, one day is actually was going down, February 12th, and one day went up, February 8th. Both days, those one-sided move actually happened really early, early session. You can see those straight lines starting right at the beginning of the trading session and never came back, especially February 12th.
Yeah,
they didn't even come back at all.
Yeah.
So I actually put more stats about the time the SPX stay above or below the short call and short put strikes. You can see both of these days, more than 80 or 87% of time, the SPX stayed beyond those short strikes. So making the profit taking very difficult. You almost didn't have a chance to manage it. If it happens like after 10, these strong moves, you probably already take 25% or even larger percentage profit, right? But if
that's a good point.
Like today.
Yeah, like today.
Like today, it's gonna
move.
Yeah, it's gonna be tough.
Maybe there's a look that we can do here with managing these. Like if you get that huge move where you're fully in the money within the first hour or so, is it better to close that trade at whatever the loss is versus
9:30?
Yeah, might be an interesting look there of like incorporating. Okay, if it's a huge move in one direction, do you just eat the loss and move on? Does that increase your P&L overall on these trades?
Okay.
Interesting look.
Okay. So that actually brings in the Jacob's point. Some of the studies show if you enter a trade after 9, you probably get better results.
Yeah.
It makes sense in certain scenarios, right? Especially when you have kind of very important macroeconomic news announced before 9.
Sure.
That definitely can move the market.
Yeah, and we've done the research that does move the market. So maybe it's the prudent thing to do to wait to see where markets kind of settle in. I mean, you had, we talked about it a little bit this morning. I thought the market was going to be more like where it is now on the opening, and we opened so much higher. You had an opportunity. He had already sold futures to get short, which is a lot more dynamic delta than doing the 0-day iron condor. And I was saying maybe we should skew it to the downside, so I'll crawl spread a little bit.
Yeah, I heard it.
Take advantage of that. You know what I mean?
Heard it, yeah. Probably we can filter through the the days with the macroeconomic news or without it. Probably can see how the first 30 minutes or an hour impact the market, right?
Sure. Okay, so really getting granular with this is pretty cool on the 0 days, getting all the way down to the nitty gritty, which is pretty awesome.
But it is a micro trade, right? We only put in a trade less than 6.5 hours, and mostly less than 2.5 hours.
Yeah, no, listen, we've always talked about it.
Trading these.
Yes. Oh, no. It's where the majority of the volume is every day. I mean, but we talked about it when they first came out with them, and now they're almost in every stock. You're going to start looking at them.
Well, that's right.
At individual stocks soon.
Oh yeah, we'll be able to look at like the Apple and Nvidia. I think they're doing the.
It's going to be crazy. It's going to be a very different trading world.
Yeah. A lot of job security for you.
Yes.
Oof. Yeah.
More work too.
More work. More segments.
Keep going.
Okay, next one. So this one is talking about the site testing. This is not only those 2 days, but the past 2 weeks. So past 2 weeks, we see both sides. The SPX spend more time outside the short strikes than the long-term average. Long-term is slightly more on the upside. It's like 11-12%. Downside is close to 10%. It's very close. But last week, we spent almost 20%, 11% outside the call and put spread. So definitely much more volatile toward the both sides. But mostly, we had actually more up days in the past 2 weeks, but had 1 or 2 big days to the downside.
Which is still outside the original probabilities when you put this trade on.
It is.
So if you're selling the 20 delta on either side, you would expect it to be outside either of those 20% of the time, and it's only 19% bad week. With the long term at 11%, it tells you that the 0 day volatility in general has still been overstated, regardless of which day. When you take the whole basket together, it's worked. The trade has worked.
Exactly. So that is why over the long term we still see these trades are profitable, right?
Yeah.
Or we're not even going to talk about it.
Yeah.
Without these edge. So next one we're talking about duration efficiency. So duration efficiency, I want to evaluate rather than the average P&L for each trade. I want to take a look at the average P&L for each hour, look at average hourly P&L, because this is a very interesting evaluation, just like a daily P&L for 45 days, right? So when you have extremely higher daily P&L in the first 5 or 10 trading days, you take it off. I think that's actually a good strategy.
Yeah.
Wait until the last 5 days, your efficiency starts to deteriorate quickly, right? You're waiting for that 1,000 beta in the last 2 days is probably not going to happen.
No.
Yeah. So in the past 2 weeks, the duration is much longer than average, almost 50% longer. Okay. Instead of holding durations 2 hours on average, we actually averaged 3 hours. Success rate was lower. Hourly P&L cut in half, only $50.
Yeah.
So based on my observation, I think targeting a $100 per hour, that's actually a good threshold to get you decent return on capital, or like your 25% profit target. If you become more greedy, like targeting 150 or 200, it's your volatility is much higher.
The P&L distribution is going to be way wider.
Yeah.
Like exponentially wider than the dollar value more that you're getting.
Yeah, you definitely can get it, right? But you're holding durations longer, your volatility is much higher.
Yeah.
Right, and we're not managing any of these. You're kind of setting them and forgetting them, right? I mean, it'd be too subjective to say when something happens, delta gets to X or your strike gets breached, you roll up under what time or that. So there's a lot of subjectivity here, which means
you can do what you want.
You can do what you want to do. That's what I'm trying to say.
Yeah, we have been pretty mechanical, and we put them on, and then we put the GTC in, and we don't even
we've been
look
taking profits a lot sooner than even some of the suggestions here. I mean, if 25%, go ahead.
I don't think these are suggestions, but it's great to see a provided benchmark.
Yeah,
So you can take a look at, you want to be greedier on a greedier side, you want to be more conservative side, you can adjust those ingredients, right?
Yeah.
Great point.
Yep. Really good.
Yep.
So last 2 slides, we're going to compare to the put spreads versus the iron condor. I used the same short delta, 20 delta, and I tested 2 different width, $20 wide and $30 wide. Because for put spread, you don't have the call premium coming from call spread, making it a little bit wider. Makes sense for a lot of bullish traders. You can see the success rate is slightly higher. So instead of have 2 losing trades for the put spread, we only have 1, February 12th. So we didn't have the upside challenge.
Yeah.
Right. But unfortunately the P&L was worse, mainly because of that February 12th large move. You didn't have that extra buffer on the call side, so you lose more. And if you use wider wings, you're going to lose even more.
Yeah.
These are kind of the considerations for the downside move days.
Yeah, because you're losing, let's call it $2 from the call side that you would typically sell with the iron condor versus the put.
Right, exactly. Yeah. And so the very last slide, I pushed the profit target to 50% because a lot of traders, especially for put traders, they wait longer because they think if the market goes up, they normally don't reverse all the way back. And also because of the lower premium, you want a profit target a little bit higher. So I tested 50%, 75%, and 100%, which is you don't manage it at all.
Yeah.
Last 2 weeks, you didn't have positive P&L, mainly because of that big one-day drawback.
Yeah.
Even though the P&L improved a little bit with a higher profit target, but that doesn't change the overall return.
Yeah.
So either iron condor or per spread, I don't think it matters that much. You get a hurt during certain weeks, but over the long term, the math should work out.
Yeah. I think it's a good point to make that these trades, you're going to see those 1 or 2 every once in a while that are going to be full losses. And so when you're putting these,
that's not how I want it to go.
Of course not. But, this isn't something that you should expect to be like a, free money glitch. It's you have big risk, and a lot of those, they don't come back. And so you got to be able to take the 1 or 2 losses in a batch of 30 trades.
Sure.
And be able to withstand that.
That's the long haul that you're talking about, right?
Yeah,
I
I'm saying you can't just take $2,000 and do this every day and expect this to just be like $100 paycheck every day. You're going to lose that
income trade.
Yeah, no income trade. You're going to lose that $2,000 at one point and have to battle it back.
Yes, some traders argue, why we cannot managing losses to the downside. I tested 20 different combinations. With 25% to 100% profit target, and 100% to all the way to 500% stop losses. Yes, in the last 2 weeks, if you use a stop loss, the results can be positive in certain scenarios.
Yeah.
But over the long term, you cannot handpick.
And it's cherry picking because
subject to change.
Yeah, sometimes you're going to say, "Oh, this is a silly sell off. It's going to bounce right back." We're going to be it's so hard to kind of.
So whatever the strategy I show you here with the no stop losses management, it works better over the long term for iron condor and tie spreads.
Awesome.
Just to give you a whole thing about 0 days, I know we talk about SPX all the time, but the Qs have got 1.3 million options have traded already, and they're all basically
0
day options on there.
Not surprising.
Yeah, some of them are 20 times the open interest already.
Let's see Wednesday, NVIDIA.
Yeah. Good job out of you, Kai.
Cool.
Nice work. Let's take a look at the market real quickly here. Even the S&Ps down near their lows. I get it. They've been about 7-8 handles lower than this. Haven't seen them touch down there since Kai has been on the show. It's about as low as they've been, down around 48. NASDAQ down 180 and change, but the real damage is being done in the Russell. Russell down almost 2%, one in the order.
Bonds rallying.
Say again?
Bonds rallying.
Bonds are rallying, 117.11, trading near their highs. Dow down 700, the Dow and the Russell the weakest, followed by the NASDAQ and even the S&Ps. Bitcoin down almost 2,000. Ethereum down 69. Percentage basis Ethereum down a little bit more. Oil's keeping its head above water. You can see there big moves in oil. Actually down last night, up 75 cents right now. Gold continues its rally, up 138. Silver continues its rally, up 470. Let's take a look at some of the market movers here. SanDisk up $31. AVGO up $3 or $4. Apple still holding its head up $270. on Apple. It's going to be hard to get this market to make new lows with Apple keeping its head above water as we go down a little bit on the E-mini S&Ps. On the downside, a lot more. AppLovin down 36, Carvana down 15, JP Morgan, which I thought never goes down, down 11. DoorDash has been weak all day, down 10. Microsoft down 10. Tesla down 8 and change. Meta down 6. Oracle, you pig, down 6. We're going to take a quick 90-second break. When we come back, we got more Tasty Live after this. What comes up next? We're going right to the trade desk. We're going to talk to Q and Ryan. We'll be back in 90 seconds with Tasty Live. Good job.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with E-mini S&Ps down 47, volatility not making new highs.
That is kind of interesting.
You talked about volatility this morning and volume. You were a lot more correct than I was. So far, E-mini S&Ps 500.
You could say that again. My God,
50,000. But have we reached our lows on the day with volatility not making highs?
has been our low. We're close. I don't know.
Well, that's what we pay you
said you had the ick.
for.
I was excited. I was like, you got the ick? That's good.
All right, enough out of you. Give me my next victim. Q, from the trade desk. What's going on? Give me the breath from the trade desk. What's happening?
Fellas, how's it going?
Yes,
The market.
good. Let's get the cordials out of the way. How was your weekend?
Yes.
Yeah, weekend was good.
Awesome.
How was your weekend?
My weekend was good. I actually, I had my biggest decision of the weekend because I was in the Oak Park area, was whether I go to Johnny's Beef, Russell's Ribs, or Gene and Jude, which is a hot dog French fry place.
See, I'm a Chicago guy. I love a Chicago dog.
Yes.
But a hot dog's a hot dog.
Yeah, I agree with
I like Gene and Jude's, Wiener Circle, Portillo's. It's the same hot dog. It's the same hot dog everywhere.
Portillo's.
Rose by any other name.
Portillo's Cake Shake, phenomenal.
That's different. Portillo's also.
That is so good.
It's kind of on the downslide. I don't want to.
Yeah, I mean, like, that's not where I'm going for a quality hot dog, you know?
No, but they went public and they got all, like they went.
Oh, wait, that's right. I remember. Yeah. Some people on the desk were like, all right, like, are we buying calls in Portillo's?
No, it just goes downhill. Once the PE firms get in there, they.
Yeah, that's a great point.
I got a beef the other day, and there was not a lot of beef.
Yeah, they've been talking about how
they're skimping. They're skimping on the beef.
It was like there was a lot of bread, and I was like, it wasn't like dipped fully. It was really. I was like, this is not
trying to save on the juices. I mean, that's a little
should
much.
Be the easy part, but the beef,
right?
I was like, this is not and it's like $20. You walk out with
that's
beef
crazy.
and fries and a drink, and it's like $22. It's like, come on.
Yeah, restaurant food is like too expensive. Like the fast food is not as cheap as it used to be.
Oh
no, it's almost making good food value food. You know what I mean? Like you're going with a beef at $20. I mean, a steak at $35 or $40 almost looks like a value meal.
I also have this thing with steaks. I mean, I do it every once in a while, but going to a steakhouse, worst use of capital ever. Because I can grill a great steak.
You're
my cast iron on the grill. I can buy a nice cut, a beautiful ribeye, and grill it up, no problem. You don't need to go to a Gibson's and get an $80 steak. You can make that for a quarter of that.
But you're gifted. Q and I might not be as gifted.
I mean, there's nothing like I went to RPM Steak one time for my birthday. Phenomenal.
It's great.
I was like, there's nothing like that. But I completely agree. I have from that chuck roll, I still have a bunch of steaks in my freezer, and they're great. I cook them all the time.
Now, like a artisan pasta, you go to like a Monteverde, that's worth the dollars. Because you can't make that.
You can't recreate that.
You can't make that pasta and make that sauce and get it all like perfect like that. You can't do that. The steak you can make. The steak.
A little part of my heart is crying in happiness right now that he's talking about pasta being the thing that he can't duplicate as opposed to.
I do make homemade pasta too. So
wow,
you make the actual
you're a catch.
Like you make actual noodles, or like you just cook it.
Pasta. Yeah.
Whoa.
Tortellini sometimes. Yeah, I got a little.
All right.
He's alone a lot.
Good for you.
Time on his hands. He's not out moving and shaking Q.
Oh.
Yeah, I know some of us have bigger fish to fry than making our own pasta. But yeah, no, market is interesting because we're down. Vol's kind of already priced it in.
Yeah.
Vol is still high. But so what are you thinking here? I mean, you're not thinking that is anything really going to come of this? Like a, elevated down move? Like, are we going to see any further down movement across the week?
I'm a big nothing ever happens guy.
Yeah.
Yeah.
Well, I thought volatility was going to open here.
The nuclear war, nothing ever happens. Okay. It's all over in 24 hours.
We're attacking Iran or whatever. Like nothing ever happens.
Yeah. Nothing ever happens. Something might happen for a second, but ultimately nothing ever happens.
I mean, that has been the way it's been. I mean, I thought volatility right now is 2070. I thought we were going to open here this morning, and we opened basically unchanged down on volatility for.
And we were down 50 points last night.
Yeah.
Right.
We're there now.
We're down 51, 52. I just rolled up some puts on a small trade. I don't know. I mean, to me, it seems like I'm a little bit in my son's camp at this point. playing these ranges. I mean, here we are at 2870. I guess 2850 is a better number, obviously, than 2870. But volatility is starting to uptick a little bit, but we haven't made new highs. We made new lows on volatility today, which I would have said last night was not going to be. Maybe at 12 or 1 o'clock or 2 o'clock in the afternoon we do that, but I didn't think we would do that in the opening. So I did say that it was a good time to maybe lighten up on some of your long deltas that you didn't think you had an opportunity to. Look at this as a gift horse in the mouth, maybe roll from 1 month to the next and pick up your delta that way. Roll down a little bit if you had puts that you were looking to roll. Now I think you can let them have it a little bit on the premium selling side. So.
Yeah, and then also
I'm just playing a game. I've been
when it
wrong
comes
more
to
times
like,
than
because a lot of people nowadays, where the market only goes up, are like afraid of selling calls. Right now, while vol is still elevated, we've seen a slight down move. So maybe the down move hasn't exhausted itself. There could be more selling calls. You know,
we've been violently
it's still a
unchanged
possibility
playing these
in the
rounds.
market.
So
yeah,
playing
right.
these little ranges. I said rounds. I don't know. Well, we're gonna let you get back to the trade desk. Give us your list.
Yeah,
please.
Let's go over the list
didn't
here.
forget about your list. I like
you
your
got a
hand
demo
signal.
coming
I like
up,
your
too.
hand signal.
Thank
but I
you.
don't-
Yes. Well, so tomorrow we've got a really important demo for the new downloadable
You
desktop.
almost forgot. I had to give.
Well, but it's for tomorrow. So usually I come on and say it tomorrow.
Okay. All right. Well,
But yeah, I mean,
it's that important. We got to pump it twice.
that is very true, because really important demo tomorrow, the new downloadable desktop, which is, if you're familiar with the web platform, it's just going to be the exact same as the web, except your downloadable version. And so if you're trading all day, you've got to have a downloadable software, right? And then the OG desktop, the legacy desktop, whatever, that is not going away yet. It is unfortunately going away at some point. But it's not going away right away. So you're still going to have that.
Dead body.
Yeah. I'm a big fan of the OG desktop.
No, but this new one it's the same.
Yeah, it's the same. I mean, when you hit send, it still works, which is what's most important, right? And then we'll be going over a lot of like the similarities and the differences, and then some of like new really good features as well. That's on the new, like, it's called like the beta platform right now. And then you can also sign up to try that out now as well.
Awesome. We also have some people selling you on your $25 to $30 steak.
I didn't say 25 to 30.
Yeah, you were saying
30 to
fast
40.
food is like 20. You might as well go to 30 to 40.
Yeah,
for
I
steak.
doubled it.
There's no $30 or $40 steak. They are saying though Longhorn Steakhouse, which you definitely are not.
All right, I'm gonna check my own pricing, and I'll get back to you.
Oh, Gibson's is like $75-$80
tomorrow,
if not more. Might be $90 now.
I'm gonna go. All right. Well, I could
Our
stand
freaking
corrected.
parking here is going up 10% this year. Everything
going up
goes up
10%?
10% a year. Parking.
I know, like when the Fed comes out and says inflation's like 2, 3, 4%.
Transitory.
Bold-faced lie. I mean, it's like at least 7.
Spitting in the wind.
Yeah.
Totally agree. Totally agree there. Food
All right.
prices have been outrageous.
Yes.
Top 20 symbols going through the system, and their IVRs. Let me get the list pulled up here.
Oh, do they not have it for you?
Sorry, Q.
One second. I'm sure it's coming.
Beth, come on. I'm sorry. I threw it off with that rant about steaks and all the other things I'm talking about. I'm sorry.
Well, what else is new while they're pulling it up?
Well, you got E-minis down 56, NASDAQ down 243. Vol getting bid up.
Yeah, E-mini S&P's down.
3% move in vol.
We scaring the children?
Yeah, it was scaring them a little bit.
E-mini S&P's down near their lows in volatility.
Gold and silver going nuts too.
Gold and silver is going nuts. Silver up almost 6%. Gold up almost 3%. Just rounding on both of those.
You guys taking advantage of the SIC /SIC?
I have traded it a couple times. So, and we're actually going to talk about silver tomorrow with Craig, and we'll definitely mention the SIC.
It's been good. It's been good volume.
Yeah,
yeah, definitely been good volume in there too, which has been really nice. So we've had that.
Yes.
To look at. Even the S&P down 56. Bonds up 12 is another thing you mentioned. Son, looking at some of the Euro /6E is catching a little bit of a bid too. It's been a little bit higher today. The pound has been a little bit higher today also by about a 0.25 percentage point, which is, I think, interesting with our bonds going higher too.
Do I do something in the euro? I haven't traded the euro in a while.
I mean, you certainly could. Are you looking on the option side? Or are you looking on just the
39 days?
Ivy rank is good, not great in there, but you 7%. I don't know. Euro.
You don't love
I like your FX plays better, and we can wait till we get.
No, Glenn has forsaken me. Glenn
Has he?
hasn't brought me a good thing in. I gotta talk to that.
Okay. Even the S&P is down 58. This is the lows from overnight. Volatility 2080. This is the lows from overnight. We'll see if we can hold this right now. Right now, volatility seems to be bid. Market seems to be soft. Bitcoin is hanging in there, only down 2,000, not near its lows of 64.66. I think we have your list for you.
We do indeed.
We can put that up
Beautiful.
Of course, top 20 symbols going through the system and their IVRs at number 1. We've got Tesla with a 3, Microsoft 36, Amazon 28, NVIDIA 32, SLV 81, Micron 78, GLD 74, IBIT 61, Netflix 41, Google 22, TQQQ 35, TLT 8, AMD 37, Palantir 26, Meta 20, DDOG 58, Spotify 23, SNDK 71, Oracle 102, and SoFi 27. How does Oracle just always have over 100% IVR? Like, what's going on?
Because it just goes down like $6 every single day.
Right.
Yeah, I mean,
right.
yeah, that's crazy.
It's just a pig. That's all it's doing. Well, good job out of you, my friend. I'm going to let you go. Get back to the trade desk, answer some more questions for our customers when we bring in our next victim. Now they're beating me up on Twitter too, telling me how wrong I am. Good.
I know. Well, because you're in like the angry boomer. You know, like, $40. You spend. You're buying coffee. Yeah, they spend $2. I got your avocado toast. Bah.
I'd never put you in that camp.
Thank you, my friend. Thank you, my friend. I appreciate it.
I think if you look around, you could probably still find a decently priced steak. I mean, I get it. You know, the dry aged.
I mean, I don't go to those fancy places but they put all the foo-foo stuff in there like that that my friend goes to across the pond there.
Steak for $35.
Where I'm from, you might be able to.
I'm going to look online right now on my break after this, but I do have to find a trade for option trades today. Even the S&P down 60, new low. Volatility 2085 right at its highs. What's going on with you, my friend? What's going on with crypto? Did we make the lows overnight?
I want to hear your take on the markets too. I want a little market take from
Ryan. I'm selling premium here, selling some puts. I haven't done anything on the calls.
How do you feel about the market here?
I rolled up puts is what I did. So I haven't used more buying power. If you roll up puts by $10 in the front month in March, is because you're going to have to roll pretty soon. So the decision right now is to take less risk and move from March to April, or take a little bit more risk, but using a lot less buying power. If you roll up 10 strikes and you sell something for $1.50 or $2, you're using $800 in buying power, as opposed to actually reducing your buying power when you move from 1 month to the next, which would probably be the more conservative way to keep the same position. I'm adding a little bit more risk, but I think an intelligent way, using $800 to collect, $200 more in premium, as opposed to getting some buying power back, getting a little bit more premium, but having a lot more days, 50 some odd days versus 25 more days for the firm. So that's how I'm doing it. So I'm taking a little bit more delta risk using a lot less buying power. My friend. Let's talk about crypto. 64.6 last night had the children scared.
Yeah.
I saw the tweets undergoing 60,000. New level is 50,000 for this down move. Ooh. We haven't had any movement so far in Bitcoin. What's going on?
Well, Michael Saylor said something along the lines of, it's either going to 0 or 1 million. So if it doesn't go to 0, it's going to 1 million.
I like that.
Trade accordingly.
That is asymmetric. You have $65 of downside and $945,000 of upside.
I'll take it.
You take that bet.
I'll take it.
I take that bet.
Yeah, so look, my read on the crypto market, I'm a broken record here, guys. Nothing's changed week over week. It's bearish trend. Price action is pretty poor in there. It does look like we want to go lower here. You did recover overnight from some of that weakness. But I think you need to see volatility roll over.
Yeah.
we're still elevated. We're well off of that February 5th, 90%, 100% vol that you saw in Bitcoin and ETH, but you're still pretty elevated. So we bounced from about 51% here, which I put this together for the email newsletter over the weekend. This was on Friday. We're back up to 55% if we use Deribit's volatility index. It's a 30-day implied vol here for Bitcoin. There's an ETH devol as well. That's also, it's up there. But yeah, you can see exactly what I'm talking about here. So you had that massive vol spike. That was the 60 and a half or so that we got down to in terms of the spot price there, depending on the exchange you're looking at. And that was RSI at, 0 essentially. Fear and greed index is still in that extreme fear territory. But until you start to see this continue to roll over, and I think you probably need to see vol here back in the low 40s, mid 40s for Bitcoin vol. And you also need to see equity market vol come down a little bit. It's not extreme by any measure, but it's a little elevated versus where we've traded. It's in that kind of regime where you're going to chop around, of course, much more. And you're seeing the same thing here. And so the other thing that I'm looking at is the correlation between Bitcoin volatility and then also the VIX, and you have a pretty strong inverse correlation right now, which also then again signals to me that I want to see volatility come down. I want to see things calm down a little bit before I'm going to come out there and say, you know what, 60,000 was the bottom. I feel comfortable buying short-term dips because we're going to go back to the top of the range. You're just not seeing that. And so I honestly have kind of just been waiting on the sideline. I think, as you mentioned,
I think that's what a lot of longs are doing.
Yeah.
I don't think that there is an urgency to buy.
It's just not in the spotlight. Like it's
it's just not in the
there's
spotlight.
Just like so much else going on that, and there's no there's been no. You need the big $5,000-$10,000 up move to get people to talk about it again and get people to start being interested.
We see this across the trade desk with trading activity as well. It's been pretty quiet, as you can imagine, over the last couple of months. Now, given the more recent volatility, we have seen people come in and try to buy the dip. At times, you do see a little bit more volume there. But yeah, it's been quiet, even though it doesn't really feel like that. It's been pretty volatile still. But to your point, a lot of other places to play. You've got earnings, obviously. So we got NVIDIA earnings this week. If you look around the market, we've got a little bit of a sell-off here. It does kind of feel like
a lot of bit of a sell-off here. I mean, which I expected from last night. I think the move higher was
but then in the morning it was like we're going to have a nothing day.
Agreed. Which I thought really could happen, and I was wrong. Yeah. Apple is still higher by $2.50.
Apple and Google.
Yeah, I don't mean to take away from your expected moves here on Bitcoin and Ethereum, which we'll get to. Please, I'm so sorry.
Oh no, you're good. I was going to say, there are other areas that have kind of held up pretty well here. So, up until today, and you're seeing a bit more relative weakness in the Russell, but the Russell's actually been a bit stronger. I would argue that you've seen the NASDAQ roll over, the S&P has rolled over a little bit. Those have been on a relative basis weaker. And you look at earnings coming out of small cap equities, and they've just been on an absolute tear year over year. Yeah. They've done a lot better, and obviously those are a bit more cyclical. So that's been a place to hide out, but that's a little bit weaker today. The other thing that I will point out in the market is energy-related names, whether that's the ETFs, OIH, XOP, XLE. They've all done really well here. Crypto's caught a bid. You get a little bit of that geopolitical premium that's been priced in. We'll see what happens. It seemed like we were about to strike Iran, given some of the developments over the weekend. But for now, that's not the case. So those have been some of the areas that I've been looking at outside of crypto as we kind of wait here. But to get back to expected moves, again, nothing has changed. So $5,000 expected move in Bitcoin. Your range is 61, 71. I think we were closer to 60 when we did this last time. ETH, $200. That's also looking pretty weak here. We were back in the 1800s overnight. So again, until volatility rolls over, until you just see price action get a little bit more constructive, I'm looking at other areas where there's some opportunities. Gold continues to do well. Silver was kind of on the fence for me, but looks like you're seeing a little bit of strength in there as well. So more places to play.
Good job out of you, my friend. Not so good job out of the market. I mean, the S&P is down 63. Volatility did not make a new high at 2080. New low in the S&P is at 68.55. I'm going to ask you, is the floor in?
Yeah, I think 68.50 is probably a good spot.
I agree with you. 55 is the low. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with...
Do we nibble long here then? Maybe?
I did.
Yeah. You do?
I did.
You go NASDAQ or you go E-minis?
Yeah, pick your poison.
Both, maybe a little bit. We'll do small. We'll try and get
24,787 on the NASDAQ.
58.
58.50 on the E-mini S&Ps. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We've got Liz and Jenny next. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I'm running Snow Leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force quits.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you've walked a mile in those high-heeled shoes and your velvet suit. Two eyes on the prize. Once you win it, then it's yours. You've got all the time.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. We need to do the red leather, yellow leather, red leather, yellow leather. We are ridiculous for this show.
It's been a crazy morning, but welcome back. I'm happy to have you. TP is wonderful, and I do miss that lightning bolt shirt he had on. But
Oh, we didn't go the fire shirt?
No. He got it. He had something new on. But you're a sight for sore eyes. I missed you on Friday.
I was whooping it up in the college town on Friday. I heard you had a great show. What the heck did you guys do to the market on Friday?
What do you mean?
It was crazy.
I don't know. We didn't. Our show was. We had a lovely show, Liz. We had
lovely, calm show. Look at that big bar. I mean, it's kind of like today. So the big bar Friday was.
Here, let's go on the platform. So
a big move from up to down on Friday. That's all I saw on my account, and I was like shaking my fist, Jenny and TP.
Because we single-handedly moved the market.
Well, the market was shot up, and it's so funny because it's now giving up what it took. The market take it away what it gave on Friday.
Okay, so we weren't even we had conversations on Friday. We talked about we answered lots of viewer emails, lots of questions, and I as far as the SPX go, or the SPOOs, or the move in the market, we did talk about the 0 DTE trades. I want to give a huge shout out and a giant air hug to Florida 7, who I mentioned a trade I'd been doing.
Hold on. Florida 7, even an air hug from Jenny is a lot.
I I mentioned a trade I've been doing, and Florida 7 back tested it, tweaked it again, and kept tweaking it to find some positive results and emailed me the results of his study. So Florida 7, that was the best part of my weekend. That really warmed my heart, getting all that back testing that you did for me on my SPX trade.
All right, let's hear the results. Give me the actionableness.
Okay, so I said I'd been selling $10 wide put spreads for $250.
It's usually the 30 delta, 20 delta ish. There you go. Yeah, so, no matter what time of the day it is. Sometimes it's going to be in the morning, it's a lot farther away.
So I had said with these, I'm either taking close to full profit or closing them when they hit, 2 times loss, or not 2 times loss. Like if I take in $250, I'm closing it for $5. So double the credit. So if they hit $5, I'm closing it. Otherwise, I'm taking close to full profit, thinking that one win would offset one loss. Now, Florida 7 back tested this, and he found the only way for this trade to have positive results was to put it on down days close to the open. The $10 wide put spread for $250 on down days close to the open. On down days close to the open that was the only scenario that reaped positive results. Waiting until 9 a.m. didn't reap positive results. Wow. And even on up days, maybe not, but down days close to the open. So today
was a down day.
No. On the open, SPOOs were up too.
Oh, were they really?
Yeah, but I did it anyway.
But you know what we are doing right now? We are crashing the market. Yes, we are, Jared Kramer. I can see you in the chat. And they're blaming us for this 81-point down move in the SPOOs. I accept.
I know. So I already closed mine for the loss. I sold a $10 wide for $250, closed it for $5.
So your definition of a down day is if we open and it's red.
I'll have to look at Florida 7's results again, but to the best of my knowledge, it was close to the open and on a down day.
Okay, I get it. I like it.
But okay, so then I closed my loser for $5, and then I put on another one because then it was even further, which that's probably at $5 now at this point. Was SPOOs down 85.
I'm 100% positive that it is because I know when you closed it, so I know when you opened it, and you are for sure at $5.
Okay, no, so then I took that one off for $5. I'm on my third, 3 times charge. And then I put on another one, and now that one's trading for $6. This is not a good day.
Leather, rinse, repeat. Leather, rinse, repeat. Hey, we could get a turnaround time. Let's take a look at the VIX, Jenny, because we've been talking the last couple of days about, I did take Friday off, but about how the VIX is, your precursor, 2183, which is...
Whoa, up 274.
Yeah, that's big. That's big. Up 274, 14%, 2183. So that is telling to me that we might not get that reversal today. Look at that.
My account is not looking good today. Not looking good because... Well, we've got the SPOOs down. I'm long deltas here. We've got some things are taking big hits. Did you watch crypto last night? Did you look at crypto before you went to bed?
I did. Luckily it recovered a little bit this morning but last night it was UGLY.
It was down to 63. Now, crypto trading down to 63. Yeah, what was the low yesterday?
So you can't tell. This is the Bitcoin future. You can be looking at Bitcoin Cash. You can be looking at different things.
Well, whatever I looked at when I went to bed last night, it was 63.
So if you want to say the low here, it's 64, 62, but that's just the futures in Bitcoin. You could be looking at Bitcoin Cash.
Wait, hang on. I'm going to tell you what I looked at. I'm going to tell you what.
Let me go to.
Because I was just on the Tasty Trade phone app. That's all. Tasty Trade phone app, BTC USD. BTC/USD. There we go. There, you're on it. You're on it, sister.
So that was the one that never got that low. So that's what I'm telling you. That's the one that's low is 64, 625.
Hey, when I went to bed, it said 63. The handle was 63. I don't know how, why, where, but it was like 10 o'clock at night, and the handle said 63 when I went to bed.
And I'm laughing because, we've been trading for years and years and years and years and years. And this is the one thing that it never closes. So you never know when you're looking at it. But look at this. The 63 handle we have not hit on this chart, if this is the said chart. Since
no, like 63 and change. It could have been 63 9999999.
No, I get it. I'm well aware. Look at this. 63
Yeah, we've got it. It's there.
We haven't been there since February 6th.
Well, that was a couple weeks ago.
I know, that's what I'm saying, but it wasn't last night.
I'm telling you, last night when I went to bed on the Tasty Trade app, when I looked at Bitcoin, it had a 63 handle.
I believe you because it's kind of crazy when you look at it. And I always say that it does look, the futures and the Bitcoin Cash, and they all are different.
And as soon as I woke up this morning, I'm pretty sure, or maybe it was last night. I'm going to see what time I texted you. I texted you something about Bitcoin.
Here, look at this, Bitcoin USD. So the Bitcoin USD is 65. Bitcoin Cash, oh, that's cheap.
What time did I text you?
You texted me like 9:30.
Oh, 8:56. At 8:56. At 8:56, I saw it with the 63 because I texted you at 8:56 after I looked at it.
Yeah, I believe you. I do believe you.
That's how early. That's how early I went to bed.
You went to bed before 9?
I don't know.
Oh, I'm only laughing. Who does that? It's usually me. I was up super late last night, though. Okay, so let's take a look at what we've got going on. I also want to put in a Delta Airlines trade, and I'm going to slowly put it in. I thought it was a pretty good return on capital. We were talking about it this morning. The airlines are, kind of getting beaten down because the huge storm that's hitting the East Coast. Yeah. I mean, you listen to the news, and it's as if New York is underwater. It's like a polar vortex out there. Not a polar vortex, I shouldn't say that, but it is a snowstorm of epic proportions that they haven't had in like 5 or 6 years.
Well, and you remember, we've spent our fair share of time in New York. We've done many money shows, speaking engagements, whatever. So we have been in New York during snowstorms, and they don't handle it as well as Chicago.
Everything shuts down.
And I'm not saying they shouldn't be. I'm not saying like this is a bad one. This is bad, right? But we've been there when it snows, and they just don't quite have. I don't know why. Things.
Well, my husband has informed me that the runways are shorter in New York, which is why air travel gets halted really quickly in New York because the runways are shorter than they are in Chicago.
Okay, I remember standing outside of the Marriott Marquis with you, and our flights getting canceled, and we were like, "What?"
Yes.
What?
That is the day. I still have pictures of it. I still have pictures of you and I standing in Times Square with no one. It's just me and you in Times Square with everything lit up. And I was like, I remember coming home and telling my husband, who is a New Yorker, by the way, that Times Square is the most beautiful place I've ever been to. And he's like, Times Square? Are you sure? I was like, it's a magical place. We have to bring the kids back. And
we were there. Yeah, it was the middle of the snowstorm. We were the only ones standing there. And it was beautiful then. When I was there mid-July, not quite as pretty.
Not as magical?
Still magical.
Okay, so let's take a look. Do you mind if we take a look at this Delta Airlines in honor of the snowstorm in New York?
Okay.
Delta Airlines is down.
All the airlines taking a hit. Spoo's down 86.
I know, 86. Okay, so we usually say it sometimes during our show, things change. Okay, all the airlines are still wrapped around 5% down. Now, I liked Delta Airlines this morning. We don't necessarily have to do that. American Airlines is cheaper and it's down more, but Delta did have an outage this morning as well, meaning a tech problem as well as all of the delays from there. So that's kind of why I looked at Delta.
And it's not even, it's down, it's only down 4%. The other airlines, I think, are taking a little bit bigger of a hit.
They were taking a little, but it was a tale of two cities early this morning because Delta was down more than everybody else.
Okay.
Yeah. But nonetheless, I took a look at this, and I'm just going to sell these. I think 65 put. I might actually sell now that markets have moved. I might take it down a little bit.
Yeah, 285 is aggressive.
285 is aggressive,
and a 40 Delta is super aggressive.
Yeah, it was super aggressive. But take a look at this. You can go to the 62 Delta for about 176, and you're putting up $888 to do it. Just playing for a little bit of a bounce after they cleared the snow. What do you think?
Yeah, I'm in. Delta put, 62 put. Sure. Okay, filled. You're filled.
Did you trade anything on Friday with TP that I need to know about?
Oh, did I trade anything? Don't even go to activity, Liz, because we were busy. I actually did not have our show account up. I had my in-laws account up because it was a day. Friday was an expiration where their some of their like boxes were rolling off or closing, and I needed to put more positions in. So we looked up dividend aristocrats, dividend champions. We put on some new positions, and so I wasn't
even know when they signed up that they were going to be a show account.
They have no idea. They don't watch. They're happy as clams swimming in the pool. I saw them swimming in their pool at their condo in Florida yesterday. Although there's a cold front coming through right now.
Yeah.
So, but I did do a little bit of cleanup. We had a Microsoft put spread and we were assigned on our short put in Microsoft. So when you're assigned on a short put, whatever the put strike is, you take stock at that price. But it was a spread and we had the offsetting long put. So our risk didn't change, but our buying power changed.
Well, that's going to change significantly in a $385 product. Your buying power will change significantly.
Yeah. So we had that going on, but that's gone. We had a lot roll off. And Palantir, I want to look at Palantir because Palantir rolled off. We had an old calendar, and with the down move in Palantir, which is pretty decent today, the chart, we're getting near its recent lows. What do you think of just selling a put in Palantir?
You know me. I love Palantir.
I have not been in. I have not been in Palantir since I bought it at 7 and sold it all at 10.
And they don't have. I know.
I don't mind getting back in, and look at the premium here.
So there is quite a bit of premium. This is decision point here because you have March 20th with 25 days, and you have April 17th with 53 days. So you could go either way with these. You've got a 27 rank. I closed it up because I want to see if earnings were on the horizon because I know they are an NVDA. So that we've got earnings on February 25th, which is 2 days from now. So all eyes will be on NVIDIA.
I think Palantir already had their earnings.
They did, yeah.
So honestly, if our mechanics are 45 days till expiration, and unless there's like something huge going on, and we're in, and TP I talked about this contango and backwardation. If we're in backwardation and the VIX is huge and there's tons of vol, I would be okay going the 25 day. But with the 27 rank in Palantir, maybe I would just stick with April.
You could stick with April. I just wanted to see the difference. I want to see standard deviation and 16 delta, how much we're getting. I figured it's a good comparison. Okay. Because if we were going to roll it anyway, it's fine to start with a little bit. Okay, so I'm starting with a 16 delta put in the March 20th cycle with 25 days till expiration. Look at how tight those markets are. I'm going to give you a slow clap Palantir because we've been opening things, and sometimes those markets are pretty wide. But here you've got 203 at 208. They're keeping it tight, these market makers, which is good. So you're getting 205 by putting up $1,100 on the 16 delta in the 25 day. Okay.
Okay.
Then I'm going to clear that out, and I'm going to go to the 16 delta in the April day. So right here, 16 delta. I'm $5 away because that was the 110. I'm getting $5 more in break even room and about 85 cents in credit. I like the 25 day.
You know me, I'm more of a short-term girl. I don't have a lot of patience. But what I do want to look at, just in case, and I know these are long-term trades and they hold up buying power for a long time, but I would really just love to take a look at Bob on Fire's trade just to see.
Okay, so I like Bob on Fire's trade, and then I'm going to give you another alternative too. So Bob on Fire's trade is buying the call spread. So
I'm gonna walk you through for people who are newer and don't, and just to walk through slowly. You buy the at the money call, and then you sell a call that's half the price of the at the money call.
In an ironic turn of events, you don't really have to do any math. It's always this brown line.
Hey, I like to follow Bob's written out rules. You buy the at the money call.
It usually is, though. That's what I was going to say. You buy the at the money call, and then you can go to the expected move for the cycle and sell something, or you can take 50% of it.
So this is pretty good. The 130, 180, 50 point wide call spread, which means this call spread, if we cover the cost of this, which we're going to, if we cover the cost of this, and Palantir goes up, this has $5,000 in profit potential. We're going to cover the cost of this by selling 2 puts to pay for it. So
you are not going to like this at all because it's the same puts we'd be selling in the near.
No. You're getting $7. You need $7.
Oh, I was thinking, you can just sell one.
Yeah. Keep going.
Oh, then you will like it. 85.
All right. So we're going to sell 285 puts. You could even sell the 285 puts. You're taking in a credit. You're still taking in a credit with 85 puts.
Yeah, you got the 85 puts.
Okay. So then we sell 285 puts, and we have the 130, 180 call spread. So $5,000 in profit potential in the call spread. When do we lose? If
85.
Palantir drops to 85, we get long 200 shares at 85. Now,
Bottom Fire has been doing these. I like them in the. I have quite a bit in my account, and I do like them. If you get the up move you're looking for, you can get out for 50% of this pretty quickly.
Yeah, if you get a pop. Now, the for every gimme there's a gotcha. So if Palantir doesn't go up and this call spread never makes money because Palantir doesn't go up and Palantir sits right here and we're just sitting on this trade, we're not making anything. If we're instead selling out of the money put, out of the money put, out of the money put every month, March, April, May, June, July, August, September, October, November, December, 10 times and get about $200. That could be $2,000 we have versus sitting here waiting for it to go up and make $5,000.
And make 5,000. Now, like I said, with your gimmies and gotchas, the other thing too is it's going to hold up $3,200 instead of $1,000. With the out of the put that we were in. So you're down farther. I just want to show you something too, because this has been the buffer ETFs, the buffer trade, and all that stuff has been pretty prevalent as well. So I just want to show you something here because it's something that I'll look at Bob's trade or the buffer trade and kind of flip flop back and forth between the two.
It's similar. You're getting your break even to a similar spot.
You're getting it to 80,
or
right?
bring it to 85 and do the apples to apples. Take it to the. I almost think it is the buffer. It is. Let's see. If you do the same strikes, they're 130, 185.
Okay, here, I'll go to the 130 just in case. And then you got to find something for $17 to sell. So it brings it in a little bit, but you're only selling one put instead of two. So here you're using $2,000 instead of $3,500. $2,100 instead of $3,500, and it cuts your max profit. But it is.
Take it up to 180. I just want to see. I feel like Bob's trade is the buffer.
It's not.
Well, go to the analysis page.
So it's not because it's close, but you have the two puts. Do we have anything else?
Oh, because you have two puts instead.
Yes. So here
it's very similar.
This brings us to. Your break even is going to be.
It jumps up a little bit.
Yeah, I don't have anything in Palantir. It jumps up a little bit. It's just a way to use less capital.
And break even same spot. And
same spot. And that's what I love about Jenny. Don't you love options that you can be like, okay, well, if I don't want to use $3,500, but I want a similar trade, I can use 24 and do it this way.
And I know I said break even same spot. You have to, in order to not have this dip down, you got to move that 180 call back to like the 170, 160. Just slide that 180 call.
Because it's got to be.
Okay, and now we can see a break even with same spot of that, 85.
It's close. The problem is that you have to tweak these a little bit, but it's a very similar trade.
Right.
And I'll show, to be fair, because we didn't show Bob's trade. I do love Bob's trade a lot. I have a lot of them in. 130, 180. We'll do that. Buy one, sell one. And then we went down to the 85 and sold two. I'm just going to show this on the curve view too, to be fair. Because I don't mind this either. You're using $3,200, and here's your analysis.
Right, there we go. Oh, this is Bob. Yeah.
This is Bob's. So at 85, you are then long 200 shares of a PLTR. That's the gimme and the gotcha, is that you're then long 200 instead of one.
Right. Now for us, to keep things simple, let's just sell an out of the money put in March. We're just going to go with the shorter term. Let's take in I'd like to take in at least a couple $100.
Oh, I do too. I was just seeing delta to delta. And if I was delta to delta, I like the 25-day better. But I also kind of like going with the 120 because you're getting $400.
I know. That's where my eyes went. Like for me in my account, I would go with the 120 for about $400. I'll take the 120 for $400, please.
Take a pill, Phil. Ship this. I'm going to ship this. Oh, you got us some buying power backs. That's good. So we're then in Palantir, which is Palantir's been a mover and a shaker and a hot topic too. We're rallying Spoozle on 74, Jenny.
I know. Let me check my third put spread that I sold. Where are the strikes? My third put spread that I sold is the 68.50, 68.40. That was my third.
Oh my God. Let's go to SPX 68.50.
And that's trading 560, but I'm not closing it. I need a full win on that. I need Spooz only down like 50 today. I need a full win on that one.
Your lips to God's ears, Jenny. Your lips to God's ears. You know what else was moving big today too? And it was this morning, so sometimes things change. But gold was up, wasn't it? Like your GO.
Oh yeah, they are. Silver's up to 80. I mean, I cannot believe it that put we had, that 80 put we had in silver now silver's back up to 80.
Yep. Silver's back up to 80. So we have the 64.90.
Yeah, we have a strangle.
Yeah.
But at least it's the 25 day. Oh, now we just kind of wait on this strangle.
I mean, silver has our ticket because silver has our number because we're also opposing forces, which is why it's got our number. And depends on the day.
83 rank, we have a strangle. That makes sense.
Yeah, for sure.
83 rank, we have a strangle in silver. I don't like the puts. You don't like the calls. They're both out of the money equally. We've got the put and the call are both about $7 down, $10 up. No, even more now.
$10 down, 16 down, 10 up.
Hey, unless you want to, with the way silver has been moving,
we gotta hold up. We just have to sit on this for 4 days. We're gonna. This is Jenny, and it's gonna be hard for us, but we're gonna follow the mechanics.
No, what I might do, because I have positions like this in silver, I might buy those 64 puts back. Those 64 puts have made 57%. They're only $1.50. After we've had a run in silver for the last week, I might just buy those back for the $1.50 or move those out to April for some extra premium. Move those out to April, move them to the 65s.
I think you can give them the same strike. Let me see what 64 is. So
I want to get enough. Yeah, there, get $2 for the 65s.
You can even stay at 64. You're getting 172.
Yeah.
Same strike. I don't mind moving it out because the 83 rank. Then you're locking in that rank. That's fine. I accept that. I don't want to close it and just be short silver because this is where we have to follow the mechanics of selling both sides. Like if we have both sides in, we're staying with both sides.
If you look at, but we just had the put and then up day, then we added the call. So if you go to the chart in silver, it whips around. I almost think I want to take off one, take off the other, take off one, take off the other, because we're getting two-way action in silver. So I'm going to take off my puts right now and then watch the calls and take those off on a down day. I'm going to wait for a down day. Maybe we'll get one. Maybe we won't. But that's how I'm going to treat silver.
If you break it apart, then you are just short by chance, which is fine. Like we've done that before, and that's how we got into a pickle.
Yeah, but what is that?
We did that about here, and then we got into a pickle because it was about the 60-ish range where we got to like 70. That's where we got ourselves into a pickle. I don't know. All I know is I don't know which direction silver is going, but I know it has an 83 rank, so I don't mind being in both sides.
All I'm going to say is we sold that put for about $4. Now it's worth $1.50. What's that $1.50 going to do for us if silver keeps running up? It's going to move our break even by $1.50. That's it.
We're trying to, but what we're trying to do is sell it again. We're trying to get, what are we trying to get in here? Let me see. Where is it? 64. We're trying to get, we'll then have, $3 in extrinsic value for it. We're trying to do something with it. If we get filled, great. I'm not going to chase that either. I'm definitely not going to chase that. I just wanted to look at something because I don't remember what it was. And maybe I'm having a mind eraser shot. What was HRL? Hormel, of course. Would you remember when we sold this? We've got a 59% on a 24 put, so I'm going to take this off.
That was one of those we were looking for high dividend paying stocks for my in-laws. So this was one of them that was going into my in-laws account. Let me see what else. What did we put in? I don't even know what we put in on Friday. Telephones. Let's see if telephone's taking a hit like the rest of the market.
There is no T.
No, we don't have it in here. We were in their account.
Oh, okay.
The IGV, if you're looking at the pair trade, it was with SMH. Not looking good. We're down. We have 5 shares of IGV and 1 share of SMH. SMH, we're up 540, and IGV, we're down 26.
Yeah.
Great.
It's not great, but that's a baby. Like this, we're down $20. That can't hurt too much. Mm-hmm. Only in the essence of time, Jenny. Ooh, Spoozer down 69. We are actually getting a rally. I'm going to jump in and take a look at Twitter today. Hims. Jenny, your favorite stock du jour, Hims. I'm kidding. We just have been talking about it a lot. And Home Depot. Oh,
I added to my Hims position. DOCN. That's not DocuSign.
That's right. It caused me to do a double take. Let's take a look at Hims and see what we've got. So in Hims, we have downside ratio spread. Downside ratio spread. That's kind of like, well, we made our bed with that. So that we just have to keep. There's nothing. And I don't mind that. I don't mind that at that level. That's saying it's not going to move, and we're going to leave it at that level. I don't mind it.
So I added and bought more stock today. I just did. I don't know. How many stocks have I ridden to zero? A lot. I thought of one that we forgot. Besides Spirit Airlines and besides Walter Energy, Smile Direct Club.
Oh, SDCCQ that you still have in your account?
Yeah. So anyway, I added I have stock in HIMS. I added more shares. I've made adjustments to my HIMS over the course of this year, and I've cut my position down. But now I cut my position down significantly, but now I ramped it up a little bit. They have earnings, and I'll take my chances.
I want to see if there's a decent amount of premium for this 19 or for this 15 put. And you get $1 for the 15 put. How much capital? It holds, it's 50%.
Yeah, 652. I mean, when I'm buying, I don't know what goes through your mind, but there's too much premium in those options for me to buy options. When I bought my shares, like if you click on 100 shares.
No, I mean, that's why I was looking to sell. There's way too much premium because I would sell that put for $1 because I haven't been in it. So I know you've been in HIMS, but if I'm looking at this with a fresh set of eyes, I'm jumping in with that 15 put. I'll take the $100 if it goes up, right?
Yeah.
Because I haven't been in it. But to your point, I get what you're saying. If you're buying the stock, you're not using much more capital.
No, it's not using much more buying power. And I mean, I don't know what to say, but I've been in HIMS since their first Super Bowl commercial 2 or 3 years ago. It's been a long time. I've been a fan of the product, and not that I even use any of it, but a fan of the concept. But I don't know. I have a new. I wish I had it here. I don't. I'm looking around. I ordered a new product. You know, I'm a sucker for everything I see on the internet.
Yeah. What'd you get?
It's like this red light, blue light hairbrush.
Oh yeah, you showed it to me.
And I got it. I got it. So this morning, as I'm preparing for the show, I was just brushing my hair with my red light, blue light hairbrush.
Did you get it from HIMS?
No, I got it from an online ad.
I'm gonna guess you got it from Amazon.
No, I didn't get it from Amazon. I had to order it directly through the company. It was like a Facebook link.
Oh yeah, I'm not allowed to do that anymore.
You're not?
No, I have to order things through reputable. As my husband tells me, you have to order things through reputable sources.
Oh,
make sure you know where it's coming from because I got in trouble 1 or 2 times. Okay, let's take a look at some other things. You know what I wanted to look at too? I might be wrong on this. CRW, is it CoreWeave? No, CrowdStrike.
Oh, CRWD?
CrowdStrike. Yeah, they were talking today and it was down a ton. So CrowdStrike is down, and I have no idea why. I'm not going to lie to you, but that's a big move for CrowdStrike.
Yeah, look at that, taking a hit.
Mm-hmm. So, but they do have earnings. So they have earnings on your birthday.
I'll be gone. I won't be here. You'll have TP on. I will be laying on the beach, and the weather's turning around, 80 degrees and sunny. Actually, March 3rd, I'm going to be at Miami doing a college tour.
I can't wait. Hopefully it's 79 and sunny when you go to Miami. I'm not even giving you an 80th percentile. I want it 79 for you.
So it's not too hot?
So it's not too hot. It's going to be not too hot, not too cold. It's going to be just right. You need a Goldilocks tour.
So yeah, that's where I'll be on my birthday. Okay. CrowdStrike, are you
Speaking of your birthday, did you see the chat from Mexico? And by the way, thank God we went to Mexico when we did, and we are out. But did you see the chat from Mexico? They all want to buy the suitcase that I got you for your birthday.
The Noble suitcase. and that's another thing that just pops up online.
I know. You can't get out of that once you say it. Once you say it online, you're going to get it. Okay, what were you going to look at?
Wait, so do you want to do something in Crowd? Do you want to do...
No, it was just topical for me because I was looking and I was like, whoa, why is it down so much?
Yeah, but go to the trade page again, please. Go to the trade page. This week, in 4 days, we've got an expect to move of $22 and then $34. I just see how much a slightly upside calendar would be for earnings. Or maybe let's try to get some premium this week. Sell the 365. Try to get a lot of premium.
Excuse me, 365.
Sell the 365, and in the 11-day,
it's expensive.
What if you took a little risk and bought like the 370?
It's 566. Now, I like the way you're thinking, especially because it's down and it's an earnings setup calendar. Mm-hmm. It's not that bad. We have been here. The last time was around April Fool's. Just a little FYI.
I think it's too expensive. It's too expensive. I don't know. It's not.
I like your thought process. I think it is too expensive of a product.
Yeah.
Jenny, dreams come true. We're only down 66. We're going to be down 50 by the end of the day.
I hope so. Can you take a look at App11 for me? Because that is one of those.
Down another 10% today. So I had heard Friday they did a good job rising like Phoenix from the ashes, and then they gave it right back today.
Now we did. I sold. This was a long time ago, and we have them in here. And so these December puts in APP. We sold them, 12 days ago. Feels like a long time ago. We sold the 125 puts in APP 12 days ago. Our trades are not trade recommendations, but I have gotten some questions on this. What are we going to do with them? Now, what I'm going to do with my...
on your hands right here. There's nothing you can do here.
Yeah, they're the 125 put. We're trading 382. As long as App11's above 300 or 125 in December, they're out of the money, and we'll keep that money we collected. But for now, with App11 down 8% today and chopping around, there's nothing we can do except sit on that. And that's the one problem with going far out in time. With going far out in time, you have no choice but to you kind of like stuck in this trade. But if we would have done a short-term trade, it would have blown through our puts. So we are well out of the way.
No, I agree. And taking a look, I just took you on a walk down memory lane. So this is 2025. So 2024 is the last time it was 120. And it seems to have broken out from that range. So that is the problem with our show account with those farther out in time trades. I don't mind them at all. But that's the problem with the show account, because once you place a far out trade, sometimes it's stuck with you for an extended period of time.
Yeah. So just to answer that question, look at Hood. What do we have in Hood that?
Hood, we have a 70 put. It's fine. It's still out of the money, which I think is crazy.
With Hood down 380, do you think we should roll that to April?
We can with 21 days left till expiration. I don't mind. We can take it. It's rolling early doesn't hurt. I like to roll when it's still slightly out of the money. Maybe.
Because usually, we could probably roll it and move it to 65. Oh, then we're not taking it. So it's tricky.
You're taking in another $2 for the 70. So that's a really juicy premium, $6.
And look at the chart. I mean, look at the move Hood's had. But this is like crypto. Crypto's been cut in half. Hood's been cut in half.
Yeah.
I mean, Hood's been more than cut in half.
Hood went from peak of 150. Yes, 150 to 75. It's pretty much cut in half. 50%.
More than that.
It was cut in half. Hood's cut in half. Yeah.
And it's coin. So I would say let's roll it either.
It doesn't matter to get it the heck out of the way. I mean, I do like taking in some juicy premium because there is still $6 is a lot on an option. That's what I'm saying. So we're going to get another $2 on it. There's nothing wrong with holding it though either. Let's follow the mechanics. We'll wait for this Friday, 21 days till expiration, just because. I'll just roll it out in time now.
I mean, it doesn't. Honestly, right? Like we're at the point. If we have another down day, another down $3, then it's in the money.
Yeah.
Then it's in the money. So
yeah, I've got the roll in. We'll see if it can come to us. We're working the roll. I wanted to make sure that we got to everybody too. So we've got Bob on Fire, which is great. And then take a look at this.
Oh, look at our message. There's our underwater message. Can you read that, Liz? Click on it so we can see it bigger.
Let me go one. There it goes. Hello, Rattan. Hashtag Liz and Jenny. I love it.
All right. That's awesome. Thank you, Mikey and Mrs. H.
I know they're the best. Hold on. Let me get out of this. Okay. There they are. Pina coladas. This is going to be you soon, but you're not going to be snorkeling. Look at Mikey with a turtle. He's chasing a turtle.
Mikey, they're living the life. They are they go scuba diving, I think every year, and they love it. They're great. And they're living the life. And they always send us a little message on their underwater board.
I love it. Frank the Great, who's the man on the YouTube chat, is coming in with our activity for today. I don't know that there was much. I don't know that it was. This would have been 9 a.m. This is 9:30. I don't know that any of these are the ones that took the market out today. But we did have breaking news from Frank via our text. It is Jeff, his nephew's birthday tomorrow, and we're going to be on the
tomorrow. Oh, we're going to be on tomorrow. We'll be live from the SIBO, sitting in the SPX pit, and let's bring him something. Let's bring him. I have a whole bin here, because I have my little on-air office here. I have a whole bin of like party hats, Hawaiian lays, noisemaker.
Is gonna love that.
So I'll bring some to the floor tomorrow to celebrate.
Love that. Love that. Love that. I think it's a great idea. I wanted to show you this too. Now, granted, I think this came in this weekend, right? This would have been Saturday because it's the 23rd today, and this is February 21st. He's showing, and I love Jack Tucker because he's very, open and honest about everything. And he says, I sell premium using strangles, condors, vertical ratio spreads, jade lizards, see Liz and Jenny, both futures and securities with high IV rank. I also like to carry short MES and MNQ futures and use 0 DTE SPX to offset the days when those short futures are grinding up.
Okay. Now, Jack, I like this because honestly, Jack, we know you've been selling the big SPX iron condors, but I did not know that you carry short futures to offset, and that would help you. So today he might be losing on his iron condors, but he's winning on his short futures. So, and we have, I think it's Blue Wackadoo too that often has like long vol or short market against his SPX iron condors. So I do like that concept.
I do too, and I found it fascinating. That's why I wanted to make sure we got to it. And I love the transparency that he's got here because he is big by big with the SPX, and that risk in and of itself alone, it's nice to see that he's kind of offsetting it with different things.
Yeah, and he's got the MES and MNQ, and like I wonder if I would have. Like if I'm just selling put spreads, maybe it makes sense for the day to short some MES and have that to offset my put spreads because I wouldn't need too much if I did.
So, and you can use this, and I'm glad you went to MES. I think I don't know if he used the big dogs or not the big dogs, but
he used MES.
If you're shorting it, take a look at this. You're using, now granted, when Jack Tucker's doing the SPX trades, they are really big, right? So here, I don't know how many he's doing. I'm going to assume kind of along the heels of that, he's not going risk for risk. It's not like if he's collecting, X amount of premium.
Yeah, sure.
In a couple shorts, right?
Right. So this would definitely have offset my. And I guess it depends. Like Jack Tucker's big. He's doing many, many, many contracts. So it'd be nice to have a lesson. We always say we want to have Jack on. A lesson in how many short MES or MNQ do you want based on how, and maybe this is something that you could talk to TP about because you're going to have TP on next week, Monday and Tuesday. If you wanted to hedge, if you're selling short spreads in SPX, short put spreads in SPX, how many short MES for the day would help? But then it can hurt you on days where we've seen plenty of days where we'll have 100 point SPU up move for the day.
Yeah, we have. You've seen
like,
that.
I feel like we have more days like that than down days like this.
And what is the mini VIX that Mikey? I know he can't respond because he's underwater right now. But what is the mini VIX that he scalps?
Is it VR? What's VRO?
No, that's the settlement price for the VIX. VRO is the settlement price for the VIX, and that'll give it to you.
Well, okay, just go to toggle table. You don't even need to go to table.
Go to table. Oh, right here.
Yeah. No, up. There we go. Go to table and go to pairs. You might have, no, maybe it won't be there. If you go in futures, there's not going to be. Maybe if you go to the watch list and go to the future watch list.
Let's go to watch list. Okay, let me get off this. Let me get off this. And I'm going to go to
futures.
Tasty futures. Micros.
Yeah.
I can't for the life of me remember what it is.
VXM, the mini.
Yeah. Okay, so VXM, and that's what Mikey uses. So here's your mini VXM, and I just want to show this. If you wanted to get, so if you are long volatility, right? So this is you can use $733 to get long volatility. You're buying the future for scalping purposes is the same thing as shorting the market, right? So you can go the opposite way with it in a very, very small nugget-sized bite. So I understand Jack Tucker is big by big, and he's using those futures. And even the MES is smaller than it's not a nugget. It's using $2,000, $2,500 for the MES. This is using $733, and this is what Mikey does while he's underwater.
Do me a favor, hit $/VXM and then go to the chart. I know Mikey, you need the X.
Yeah.
VXM. I know Mikey shorts it every time it gets to a certain level. So Mikey's not like buying this against his SPX. Mikey shorts this every time it gets to a certain level.
Right, but I was just saying there is a smaller vehicle that you could. I mean, they are one and the same. If the market goes up, the vol will come down. If the market goes down, the vol will go up. And that's just the relationship of those. So there is a smaller vehicle, but Mikey does every time it gets to 20, I think.
I want to say in the 20s.
Yeah.
And we always are like, Mikey, shorten the VIX. You're brave.
It's a little one though. It's a baby one.
It's a baby one, but
it's a baby one. So I thought that was pretty interesting. It's a good discussion point. Okay, I wanted to make sure, I think we did, hold on, that's a perfect thing. I wanted to say, and then this is Feb 20, so that's from a week ago. So we did get to everybody. Punished Pixels. Oh, here we go. Hold on. I'm not trying to jump around Punished Pixels because you got to get to bed. Good morning, ladies. Actually, good night to you. Closed this one for $400 today. Did you enter this into your personal accounts?
Oh, his crab.
The crab, yeah. I think I'm 5 for 5 with Punished Pixels.
Punished Pixels, nice work. He's a sage.
He is a sage. He is a sage.
And Florida 7, SPX opened down this morning, so you were correct in entering a position 2 minutes after the open.
That's what I'm saying. You said it was green. I thought
we were up 2. When I logged in, and I think maybe it was like a couple minutes after, we were up 2.
Maybe it was a couple of minutes after. So I thought it was Florida 7. That's what I'm saying. I like that you're chirping in or chiming in because if it's just red on the day, is that down? So let's take a look.
Florida 7. I'm going to be in Florida this weekend, and I would give you a giant hug for doing all the back testing for me.
So if I go to today and I go to open, it was 69.01.
Yeah, so it must have been down a little bit.
So it must have been down. Thank you very much for clarifying. I just wasn't sure. So if it's
okay, and then Fabio, hello ladies. How is your Tilray position moving today? Any thoughts on DraftKings? DraftKings, I mean, we're just holding on for dear life to DraftKings. DraftKings, this isn't bad here. Oh, we've got a 20 call. And it was 670 when we bought it.
Yeah.
It was deep in the money. That was that March deep in the money call.
Yeah, we had 2 of them and we gave up 1. So here.
Yeah, sell a put to get a little premium.
And we just had the combo.
That's fine. At least we're getting premium and not losing it.
And it's not holding up too much. Then we're washing our extrinsic value. Then we can't lose. Then we're just bullish DraftKings. And it's funny because I was with a bunch of college boys this weekend and all they do is talk about their DraftKings account.
Hey, again, there's so many people on DraftKings. They need to figure out how to monetize all the people.
I was saying that to them because hold on, overview. I was saying to them, I go, DraftKings is still negative earnings per share. Ooh, it's almost there.
Yeah, it's not bad. It's getting better. But DraftKings at $21, in my mind, I'm just a long stock. Let me look at mine. Let me see what I have right now. But I think
I'm just long stock. I know I'm just long stock. I've just been holding on to that thing for dear life. He also wanted Tilray.
I'm just long stock, and I could see when I transitioned my position from options to stock, it was at $25.86. So I bought all my stock at $25.86.
Okay, so what did you and TP do in Tilray?
Nothing in Tilray.
3 days ago.
What?
So 3 days ago, which would have been Friday.
That was me rolling because we had an in the money put expiring. So a TP, we weren't in our show account, but I went. So Tilray was expiring. We had a put expiring. I just rolled it out a month. That's all I did.
Perfect. That's it. So hello, ladies. How's your position in Tilray moving today? So that's just it. Is we moved it out in time. Now, granted, it became we would
have been long stock if it. We could have let it expire. We could have and we would have gotten assigned, and we would be long stock.
Yeah, and so all you have here, and I'm kind of glad you rolled it out in time because you're getting an extra. I mean, I'm not trying to say this is the greatest trade in the entire world, but you're at least getting 30 cents in extrinsic value for that 9 covered call synthetically.
Liz, you look at some of these markets, and if I look at, if I go and look at some of the positions I have, do you feel like this is a big buying opportunity for some things? I mean,
I think so. That's what we've been looking at. Is I'm looking at this more of an opportunity. I've got a little bit of powder dry on the sidelines. We do too in this account. So it is
like Archer Aviation down to 676.
Yeah,
you've got some of these stocks that have gotten so cheap as I'm running. DraftKings $20.
Silroy is $750. These are all very inexpensive stocks. But you even look at the high flyers. The one thing that has kept its wings up is Costco. When is their earnings? Because Costco's the one that can't stop, won't stop. It's still trading near 1,000. But you look at your Nvidias and your Microsofts and your Apples. Everything seems to be at a discount. Take a look at Apple. I mean, it's now down from its highs.
I don't know. I don't know. I don't know that some of these like big high flyers I think of as like this is a great discount, but a lot of these little products where how much further do they have to fall? Your bottom is zero. I prefer those.
So I prefer those as well because you do know your bottom is zero. And that's when I'm looking at something, I know we looked at it in Palantir, which isn't at its bottom, but I don't mind taking some of those ones that are pretty low and going pretty far out in time. So like, you're a Bob trade or something of that nature, but there is that like gimme gotcha of making sure that you're getting far enough. Sometimes those are two. Sometimes they work, sometimes they don't.
No, I agree. Some things that have a big fall go a little bit further out in time just to get your break even much further. Give yourself room in case we continue to fall. Because again, I don't want a replay of last March where this is kind of leading up to last March, how it was. We were down. We had these down days. We saw lots of opportunity. We started getting into quite a few products. And then March hit
yeah, all the way down.
Yeah, where are we? It was that April or end of March?
No, here's April 1st. This is March. Here's February and March. We bottomed right here. Now here was what the problem was, and it could be the same thing again. Up here, we came down on March 12th or something around here, and we're like, ooh, this is a buying opportunity, and that was the problem. So we got a high implied volatility. We loaded up the flotola on short puts and short premium, thinking this was a gift from the gods, and then this hit. That's what hurt really bad.
Yes, and so I always have that in the back of my mind. That was last year, and that was really, really painful because we thought that we were given these great buying opportunities back in the end of February to load up, and then we had this big fall in April. So everyone's cautious about that, and I think has that in the back of their mind, and we don't want a repeat of that. But then the year turned out great, and everything skyrocketed, but we went through a lot of pain.
We did go through a lot of pain. It's so funny because then here we go. It's like April 1st, April Fool's Day or whatever, right around here. And then we never looked back.
Yeah.
But you don't know when the bottom is. And you don't know, even when you get to here, it could still fall more. That's what I'm saying. You just have to be able to keep trading and live to trade another day.
And you listen to some other networks and everyone's talking about, so many people are putting their money into international companies. And you take a look at, as emerging markets, EEM, is that still up again today? What is that?
Let's take a look. EEM, hold on one second. I got to wait till something moves and I can type it in. Emerging markets I don't know.
Or just, yeah.
It's down.
Look at that chart. But look at the move that's had.
I know. EWW, I thought for sure this would be down a lot more today, and it's not.
Mm-hmm.
And it's not. So yeah, look at the moves that they have. So I'm just going to go back into, because I want to go top down, because I did see some come in. Hold on one second. So Punished Pixels. Bob's trade of funding a call spread by selling two puts is very cool, but in case of a crass IV expansion will make the trade very costly. I used to trade the he's still up. I don't know why I didn't get tucked in. I used to trade the 112 trade in ES. Fund a put spread by selling two puts further out. It burned me during August of 2024. I get it.
If you're short puts and we have a huge vol expansion.
And they're far out in time, the leaps. Yeah.
I mean, Vega's greatest further out in time, right? So when you talk about Vega, that's an actual dollar amount that those options can move with an 1% increase in volatility. Like Liz, we've got 3 minutes. Just go to SPY and look at.
Wait, I just wanted to because I want to make sure we got this. SPX open.
Yeah, we got to everybody. Oh, no, except we didn't get to Patty Handy.
Oh, PLTR. We already went through that, so that's good.
Okay.
We looked at it. Okay, now what do you want me to do?
So if you just go to SPY and go open the trade page in SPY and go to December. Go to December options. Go to December options and go to pull up Vega. Okay, and so look at the 30. Look at the 30 delta put, or or the 20 delta put. So there's the 20 delta put, and Vega's 260.
It's a big Vega.
Yeah, so 260. So that option at $26.36. If volatility goes up 1 percentage point, so volatility goes from right now it's 24.2%. If it goes to 25.2%, that option price will go up by that 261. So instead of being 26.37, it'll be almost $29. So that Vega is the actual dollar amount that the option will change by a 1 percentage point increase or 1 percentage point decrease in the volatility of that cycle. So when Punished Pixels is saying he really got hurt when there was a huge vol expansion, if vol goes to 50, look how much that put is going to go up. Now, if vol goes to 50, we're not going to see vol in December 50. We're going to see vol in the short term 50, but maybe it's 35.
Yeah, but it could be high. So take a look at these recent VIX spikes, right? So here you've got this is high of 25.30. So there are some recent spikes, and he's talking about 2024. Let me go back.
Yeah, there we go. It's right there.
Yeah, like something right here. Yeah, that's painful. That's painful.
So it's big. I mean, 260 for 1 percentage point move. If we go up 10 percentage points, that's $26.
It is. That's
in the
good.
option. So,
all right, Jenny, it is the time in the show where we're going to talk about where you think things are going for the rest of the day. We showed where the VIX was. SPOOs are down 71. We've seen them down as low as 85. VIX is coming down a little bit. It's only 21.18. I can't believe I'm saying 21.18, but it's come down slightly. I'm thinking we're going to be down 43.
I mean, I hope so. I don't know what to do. I still have the SPX put spread. I'm tempted to close it because I'm afraid we're going to be down about 90 at the end of the day. We've seen ourselves level off. We've seen the market level off during our show, and by the end of the day, it gets much worse. So I'm afraid that
I'm going 40. She's going 90, just rounding. All right, everybody, good luck with your earnings trades. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow from the floor, everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered.
The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal and, of course, Ryan Grace. It is his Crypto Monday on this red sell-off of a day. Kind of crazy. Seeing the same thing over and over again. Markets down, precious metals up. What's going on?
Fear. That's what's going on. It's a lot of fear. Once again, though, no new lows. We're still in the channel, 6,800 to 7,000. Nothing has changed in that regard. And I don't know, though, man. I mean, it just occurred to me a few hours ago that State of the Union is this week. Maybe that's something that changes the narrative. But again, this goes back to last Friday when we had, obviously, tariffs were struck down. That didn't matter. We're going to add more tariffs onto that. So it's been, I don't know, it's been a lot going on here. I don't know. What say you, Ryan?
Yeah, I mean, I think you look back at the last couple of weeks or so, and momentum has broken down a little bit. You know, started in tech, of course. You look at the Mag 7. You've seen, people move out of those concentrated positions, and there were a lot of opportunities elsewhere. We talked about the Russell relative to the NASDAQ as one opportunity. But volatility has hung around. The VIX is at a 20 level. Like you said, there's some fear in the market. People are nervous. You're starting to see these themes percolate, and this is a long tail, but it's AI will destroy the job market, will destroy all white collar jobs and the economy, the service sector, et cetera. Not that that's driving, price action day to day, but you have geopolitical risk that's heightened as well. And I think, you're seeing a little bit of a slowdown, or could see a little bit of a slowdown in terms of what the market's pricing in around rates here, in terms of the economy. Maybe things are not as strong, kind of ebbs and flows month to month, quarter to quarter, but coming off of where we were, maybe you see a little bit of a decline or deceleration in that sense. But yeah, I think you watch the VIX, and if you get this back underneath 20 and you find a little bit of wherever that bottom is, I think you're right. It's 6,800 to 7,000 or so. But you've got to probably be a little bit more patient at these levels.
Yeah, and speaking to the interest rate discussion, the March 18th decision is basically all but concluded, even though we have a whole month left almost. Staying pat, there's like a 98% chance that we don't change rates. But this is the first time I'm seeing the June cycle, June 17th decision. That was where the first 25 basis point cut was projected. And now we're seeing a 48% chance that we do nothing, 44% chance that we get that 25 basis point cut. So first time that we're seeing the current rate outweighing the probability of a 25 basis point cut. So we will see lots of market movement today. What's interesting though is volatility futures ultimately unchanged. They're all at 20, 21. So they're somewhat elevated, but they're not reacting as you might expect to a move like this to the downside.
Well, I can tell you, you mentioned that March 18th date, and I just looked. I think I'm going to be a little bit more concerned about the first four in the NCAA tournament at that time more than the rates. I'm just saying, I'm just getting excited a little bit about college basketball. It's beginning to get a little interesting. Big games this past weekend. By the way, the whole Duke team was at the Wiener Circle. Did you guys see this?
No.
Yeah, they played a game in DC because they played a big game this weekend against Michigan. They won that game, and then I saw that they were at the Wiener Circle, and I was like, wait, what are these guys doing at the Wiener Circle? Like, aren't you going back to Duke? So apparently, I think they play Notre Dame this week. So they came here, hung at the Wiener Circle. I think they worked out at the Bulls facilities. I saw like pictures of them working out like with Bulls weights, and they were working at their facility. Like, how nice is that to have those kind of connections?
Yeah.
To be able to do stuff like that. It's pretty sweet. I digress. You're right. Market. The interesting thing I think about today, there's two things that are interesting. A lot of this, as you said, Ryan, is almost like deja vu. It's almost like Groundhog Day. You come in again, the markets are down, software is down, tech is down. I don't know, is Walmart? I haven't even looked. Are the oh, look at that. It is totally a lot like Groundhog Day. Walmart's up. I'm guessing a lot of the names in XLP are up. Consumer staples are positive, which is why we're down. But realistically, 73 handles is not a whole heck of a lot. That's only 1%, right? If all of those other things were down, we'd probably be down 2% or more, and volatility would probably be close to backwardation. But the real interesting things about today is, again, bonds are up, which tells you there's something going on. And once again, we got gold and silver being the gold and silver we've seen for the last several months, right? It almost like ever since the big move, they were kind of neutered a little bit. Even though they've been moving around, they weren't as scary. They're starting to look scary again. Yes, on Friday we saw a little bit of that, and today we're seeing that continuing. It's been bid all throughout the night, and it's staying bid throughout the day. Even as we've come in, sometimes you'll see these moves get faded. It's staying bid, so that I think is a big tell. Oil was positive earlier today. Oil started out negative, then it went positive. So again, you got the commodities starting to do commodity-like things again, and I think that's probably the one nerve-wracking thing in this market.
Yeah, for sure. Speaking of oil, I ended up closing that iron condor. We're like 1 point away from the short strike. 68 was the short strike. We're just sitting right there, and I saw it was $100 profit. I'm like, there's just no reason to leave this on when you have a winning trade that's 1 point away from being tested, and oil has gone from 56 to 66, and given the tensions we're seeing across the globe, I mean, you could see this thing spike even higher. So
yeah,
just got out of that, booked the win, and we'll revisit at a later date.
I'm going to hold on dangerously for a few more days.
That's fair.
Yeah, we'll see. We'll see.
Yeah, if you get a sell-off, that'll come in nicely.
It will. I'm waiting for one more sell-off, but you're right. It could be dangerous. It could. I was a little, when I saw 67s today, I'm like, oh no, 68s to 70 might be incoming. But now that it's pulled back, if we get another pullback to 65 and change, I'm totally taking it off because, yeah, you're right. This is hanging out up there. It's found a new range, I think. And that's what we've been saying for a couple of weeks now. I think it's found a new range around 64, right? Before it was around 58. Now it's risen up about 6 points.
Yeah, big move there. And then only other thing I've done today, corn, closed that call diagonal spread, long April, short March. That was a $125 winner, just booking some wins where we can find them. And then into this rally, we're getting closer to that 21-day range where we typically roll short premium positions. So into this rally, taking the opportunity to roll from March to April. I had the 87 straddle. I bought that back and I rolled it to an 87 100 strangle in April. So widened back out and moved that short call way higher, and I still picked up $3.60. So I have $1,500 in premium with a now 87 100 strangle in April. Feeling good about it, especially if we continue to rally here in silver.
That's actually a great idea. I think I should close my March. I'm up $200 on it. Again, my short strike is a 75. I did roll down to the 90 strike from the 100 strike last week, and but I'm still winning on this trade. It's probably best to move it out to April. You're right, and collect some more premium and widen out a little bit more, which I was investigating earlier. I think I'm going to do that. It's a good idea. It's good risk management.
Yeah. And then, I was looking at the SPX butterfly. So have a ton of positions on an SPX. The butterfly specifically is the 66, 67, 6800. And I was considering closing that. However, if we look at the value of it, it's trading for $670 now. We bought it for $550. So it's a $100 winner, $150 winner. But given the nature of this market and the fact that this hedges a lot of my downside risk in some other positions, I'm just going to leave it on. If we get another day like today and we get a $200, $300, $400 winner, then I'll take it off and then look to redeploy into a rally if we see it.
That's kind of how I feel. The one thing I do want to do, and I don't think I want to do it today, I probably want to do it closer to, which is not far away from 6,800. I do want to put on a Super Bowl. I haven't fully fleshed out what expiration I want to do it in. It's going to be on the other side of March, though. I just don't think. I think we're going to end this month weak. I just kind of think it's how it's going.
Fair. But yeah, lots of wild earnings while this market flies around. We've got Home Depot, we got Lowe's, we've got Nvidia on Wednesday. So keep that in mind. There's going to be plenty of volume there. Nvidia already has almost 100 million shares traded today, which is pretty insane when you consider SPY only has 40 million. The Qs only have 30 million. So Nvidia has more volume than SPY and QQQ today combined. And you're going to see that continue most likely up until the earnings announcement and after the earnings announcement. But yeah, lots of discussion points there. I've got an earnings preview linked in the YouTube chat if you want to click on that and check it out. I also pinned the Tasty Crypto newsletter, Substack there at the top of the YouTube chat. So if you want to join us on YouTube, just go to Tasty Live. We're streaming live there. You can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them shortly. But it is Monday, 11:11 a.m. We've got...
Make a wish.
Yes.
Sticks.
Isn't that what they
That's
say?
what you say.
Yeah.
Sticks. Yeah, this is what they call it. Sticks.
Make a wish for crypto to rip higher. What say you? What's going on in this market? Maybe not much has changed since last week.
Looks like trash, Mike. Yeah, I mean, wish, hope for higher prices. As they say, that's not a strategy. We can talk through why you might want to just remain patient here. But yeah, you look at this week over week. I think we missed last week, but let's just go back to the beginning of the month. I think the last time that we were all together, nothing's changed. As I put together the slides here, I think the spot price for Bitcoin was 65.5. Maybe it's slightly lower, but we've been just trading sideways. If you look at the chart, a little bit of weakness last night, but over the last couple of weeks, I mean, this has gone absolutely nowhere. Volatility remains somewhat elevated, which I think is a signal we can talk through. But same thing with ETH. And then outside of that, there's just not much that looks very good at all. Hyperliquid, Hype is the token, not on Tasty Trade yet, but that's been an outlier in terms of relative performance. Bitcoin Cash still has held up fairly well, but there's not much to write home about or to get excited about, I suppose, when you look outside of Bitcoin, ETH, and most of the large cap tokens that we're tracking. So if we jump into our slides, you can see this visualized, I suppose. Price momentum looks weak, getting weaker in some cases. I would personally just stay away from Solana for now. Litecoin looks pretty bad. Doge has looked terrible. Year to date, Doge is up against Bitcoin. Bitcoin's down about 25% year to date. But again, nothing has changed. Is the bottom in is really the question that everybody's asking. I think you have to look at volatility for that, which we'll talk about in just a second. But in vol terms, if we go to the next slide, these are the expected moves, and not much has changed here either. About a $5,000 move for Bitcoin, almost $200 for ETH, Solana, Sui, XRP. They've all been about the same expected move. That volatility for a lot of these tokens has certainly remained elevated. It's come off of the highs that we saw earlier in February when we did get to that recent or local low in Bitcoin, which was about 60,000. But you're still relatively elevated. It's not necessarily captured there when you look at IV ranks, because you did get that massive pop here just within the last month. But when you look at where implied is for Bitcoin at about 55%, above 50% here, it's a lot higher than it has been for the majority of the last year. And so I think what you need to see is for volatility to roll over. And if we just jump to slide number 5 in the deck, you could see what I mean when we're talking about this is Deribit vol. So this is going to come from the Deribit Options Exchange. This is a 30-day implied. They have a couple of these metrics. So there's others out there that you can use too. But this is for Bitcoin. There's an ETH devol as well. But when I look at the correlation between Bitcoin and Bitcoin volatility, or devol right now, it has a strong inverse correlation. We don't always see that. But in a market where it's continuing to get weaker, there's selling pressure, and you have that strong inverse correlation with volatility, that's a signal. When I look outside of crypto, you also have a very strong inverse correlation between the VIX and Bitcoin. And so that's another signal where, point being, we need to see things calm down a little bit here. Traders, investors become a little bit more confident in the path forward, which I don't think you're seeing at all right now. You need to see those correlations short-term break down. If we look at those 30-day correlations, we want to see that come in quite a bit. I mean, it's negative 0.8 when you look at the devol correlation and the VIX correlation at times. I think in this slide here, we've got that 30-day at negative 0.72. So I want to see volatility come in. And I think that applies to what we're seeing in equities too. So my approach has really just been to remain patient. I'm not chasing 65. I do think we're going to be higher over time. Is that 6 months, 12 months? Maybe it's 3 months. I don't know. I think there's an opportunity here with a long-term horizon. But for now, the way that the market's trading, it certainly is trading in a way in which you could see 62, you could see 60, you could see sub 60. Doesn't mean that we're going to stay there, but that's how I would read this. So I want to remain patient. When I look outside of crypto, the VIX right now is about 21. That's a regime in which you're going to get a lot of chop. It's not crazy high vol, but the trend has been bullish in there. If you measure momentum the way that we do, bullish momentum in volatility. The next step, vol, VVIX, also looks like it's going to move higher. Maybe it gets to where we were in November. The VIX could then be closer to 30. That might present a huge opportunity on a multi-month time frame to buy a dip. I don't know if that's right here in front of us in terms of this is the low for the dip. And so you're seeing some similar signs in equities, in other areas of the market. You're certainly seeing that in crypto, and you've got a bit of weakness that's persisted. And I think, again, you want to just remain patient here until you get those volatility signs. And we're just not seeing, after that spike, we haven't really seen a full contraction in volatility. I want to see VIX sub 20 for sure, and I want to see devol back in the low 40s. So that's my little rant about volatility signals there, but that's what I'm looking at, and until that changes, I'm not really too excited to put new money to work in crypto specifically. I'll dollar cost average in, and I've got my recurring purchases set up at tastytrade. But aside from that, I'm not coming in and saying, okay, you got to buy this because this is the low end of the range and this is the trade. But if we go through a couple more of these here, go back to slide 4. you'll see this all kind of looks the same. So Bitcoin market cap dominance has come down a little bit, but still kind of hanging on towards 60%, which has been where it has stayed for the majority of the last year or so. ETH versus Bitcoin, Solana versus Bitcoin, Solana versus ETH all look terrible. Doge versus Bitcoin looks terrible. So if you are going to jump into this market at these levels and you think there's an opportunity, I think you stay with Bitcoin, maybe ETH, but ETH versus Bitcoin, aside from a little bit of a bounce over the last week, that trend has been lower. So that said, we were taking a peek at cross-asset correlations. The thing to probably call out here is that strong positive correlation over the last month or 3 months between the NASDAQ and crypto, or Bitcoin in this case. And that's what you've seen, right? You've seen that correlation between software stocks. Everybody's seen that chart going around by now where the price of Bitcoin has been almost perfectly correlated to software. Software is selling off because it's the end of software, or software as a service, right? Given AI. So that's the narrative right now. That's caused a bit more volatility and underperformance in the NASDAQ. Certainly, when you look on the margin, crypto is going to, most of the time, trade in that same direction as a long duration asset, doesn't have cash flows. And so we've seen that volatility result in just a lot of weakness in the market and people taking positions down. But at the same time, there's been other opportunities that you could be in. We've talked about the Russell, certainly precious metals you guys have hit on. Up big today. Looks like we might be making a run back at the all-time high in gold. We shall see. The other area that I would focus on, as we mentioned at the beginning, is energy. I would love to buy crude oil at 64. I think that bullish trend that it's in, it continues. And I also think that you can look at opportunities on any pullback to maybe sell put options in XOP, OIH, XLE, go into some of those individual names. But energy has been a bright spot, at least for now. And so the last thing that I want to highlight here is the next slide, which gets us outside of crypto and just taking a look at a similar approach here across a variety of different assets. And we are seeing some of that price momentum in terms of the exponential moving averages crossing over and price breaking down beneath those levels. In the S&P and the NASDAQ, the Russell's held up a little bit better. Earnings performance out of many small cap companies has been pretty positive, at least in terms of rate of change year over year. Gold remains very bullish relative to silver in the short term, though, silver went up 100% or so. So,
help.
The other thing that I want to call out here is you do have that bullish momentum in the VIX right now. I want to see that come down. Dollar's been bearish and yields have been bearish. I don't think it's a negative macro environment, but it's certainly not every single dip is being bought in the S&P and it's instantly at new all-time highs the next day. So again, remain patient, pick your spots, and I still think it's a market environment in which we probably trend higher, but you got a little bit of volatility here in the short term.
I like it. Yeah, I think when you look at some of the crypto pieces that are moving on the crypto watch list, you can see there's plenty of volatility, realized volatility here. Bitcoin Cash moving to the downside today, but there's some other ones that are still very volatile. You see a handful of them moving up over 1, 2, 3, 4%. And a lot of them are those meme coins we talk about all the time, Pepe, Doge, you name it. But yeah, it's kind of been interesting to see that strong correlation with software and Bitcoin. There's a lot of similar sentiment where, to your point, software is dead. What's going to happen with some of these products like Adobe, where now you can just go to ChatGPT and create an image in 10 seconds. We'll see where the future lies with a lot of these products, but at the end of the day, I think it's still an asset class you would want to have in your portfolio from volatility alone. And sitting at 65 and kind of bottoming out at 65, it's an interesting time for sure. And volatility of this product too, we know this from history and we know this into the future. If Bitcoin does rally in a big way, you could see volatility explode to the upside too, similar to what we've seen in gold and silver and some other products. I think we were looking at crude last week and the same thing happened where you have this one-sided move to the upside and you see volatility expand into that move, I'd be looking forward to that as well if we do get a rally, especially because where do you go from 65? You go back to those benchmark levels, 100K, beyond, and that's when the public starts paying attention, a lot more attention again.
I mean, as long as it does that along with a market, like an equity market sell-off, I think it's fine, honestly. I mean, again, it's not like we're at new all-time lows here in Bitcoin. I know I sound like a broken record when I keep saying this, but I mean, we're not at new all-time lows. We're not in a situation where we've had a failure in some type of crypto-related entity. It's just weak right now. But guess what? So is the market. The market is kind of weak right now, too. Like, as much as I talk about getting a Super Bowl around 6,800, I'm not super confident and it's going to work right away. Again, I mean, it's just been a weak market, and this is, this has been a long period, as you have the chart up here. This period between 6,800 and 7,000, it's been a while now, and we've benefited from, different bounces. But you wonder at some point if there's going to be a point where the levee breaks. Or are we just going to keep trading in between this area? Because for those who believe in seasonality and believe in year two of administration and midterm elections and all that, is that going to keep us in this area? I'd like to believe no, because that's just not really been much of the case over the last several years, except for 2022. But I don't know. We'll see. That being said, look how many different things we're talking about, how many different things you can trade.
Yeah.
It's not like the market is boring. It's just a little bit annoying that we can't get one sustained move.
Yeah, I feel like every day we have a new sector that's ripping or dipping, and that's been the story for the past couple of months, at least for 2026 for sure. But yeah, I don't remember the last time we've seen this flat 200-point channel that we've traded in since literally December 1st. That's when we kind of hit that floor of 6,800, and we haven't gone above 7,000 for any substantial period of time at all. So it's been nuts. 3 months in a 200-point range.
It's literally like Groundhog Day, particularly over the last couple of weeks. When I look at a heat map, again, we're down 70. We're down a percentage point in the S&P. Walmart's up. Coke is up. Procter & Gamble is up. Lilly is up. Johnson & Johnson is up. AT&T, names I don't even care about. Then there's some oil names, even though oil has just went down on negative. Exxon and CVX are up. I mean, this has been like the move. And then you got various Mag 7 names down, right? It's not all of them are down. Apple and NVIDIA is slightly positive, but Microsoft's down, AVGO's down. Like those names are down heavy. And then depending on the day, you might have financials down too. JP Morgan's down 4%, by the way, today. Wells Fargo down. So it's like we've seen this movie so much. And then just watch tomorrow. We'll see what happens. But just watch tomorrow. It's probably going to be different. And the tech names are going to be coming back. IGV will probably be positive. Walmart will be slightly down. Not down big, just slightly down because it's maintained a bullish narrative. So it's just interesting to watch that. Do you feel like you want to trade that every single day, try to trade the reverse of that? Or is this something that's going to completely be different in 3 months? I feel like it's going to be completely different in 3 months, but I don't know. It's been a long time.
Yeah, this move in Microsoft's crazy. 386 now, well below 400 into this sell-off here. We're getting back to the lows of May, the tariff lows. Crazy to see.
So I was looking today at IGV and the names that are in it, and in order by size, it's Microsoft, Palantir, Oracle, CRM, PanW, AppLovin. I mean, do you go out and I literally just spitballing this in my head a little before the show. Are you supposed to go out and sell call spreads in those names and get short put spreads in IGV? Or are you supposed to do a reverse? I actually don't even know which way I feel comfortable at this point. I don't know how much these names are going to bounce back, man. I'm starting to wonder. I don't know.
I mean, it's something to behold at the very least. Like this product specifically, IGV, like we are at the tariff lows right now, 76. This thing got as low as 80. So I guess we're below the tariff lows right now. Or pretty close. Sorry, I had my cursor on the wrong.
Might as well be there.
76.68 was the low, April 7th. That was the lowest point we've seen this thing. in quite some time. We're basically right there. So, yeah, lots of opportunity if you think this reverses. I think this is a multi-year opportunity in Microsoft. I just don't see a situation where Microsoft goes away. Like, they could pivot to something else pretty easily.
Yeah.
Even if software loses its luster because of AI, like, they're heavily involved in AI still. So
is CRM done? I mean, is it over? They got earnings this week. I mean, they got a lot of explaining to do, you know.
Oh, so
like Ricky
we used to
Ricardo
short
was
this
saying.
thing. Nick and I used to short this thing consistently. So this is interesting to see. But yeah, lots of questions. And you have your blockbuster earnings report of the week, NVIDIA, up today, up a point. I think the public wants this thing higher. I think they're going to crush numbers. I think they're going to report the most ridiculous numbers known to man. But that doesn't mean that that thing's going to rally. They could report these crazy numbers that you can't even fathom, and the stock could be down 10 points.
Yeah,
like that's where we're at in this earnings market at least. But
what's your expected move there?
Expected move is 11 points for this week. So not too crazy. I mean, you would expect, especially in this current market, you might expect to see NVIDIA closer to 20 points of an implied move. But you've got about a 5-6% implied move over the next 4 days, which feels low. And then you go to March and April, you're looking at a 20-point implied move, 25-point implied move. So I was actually looking at setups today, and I think this is one of those rare situations where I'll probably go to something like long April, short March instead of the weekly, because there's still a lot more premium in March relative to the weekly for this earnings report. Like if you look at the 200 and 210, $250, 60 cents here, and then you look at March, 200, 210, you're looking at way more premium, especially on these further out options, like the 210 call for $3 and change. Feels nice, especially if you do like a 20-point wide diagonal spread. That's what I was looking at earlier. Getting along the 190 in April, selling the 210 in March, and it's about $1,000 of risk. So
all of the plenty of other names are bid ahead of these earnings, those specific earnings too, as you mentioned. TSM front month vol is bid, AMD front month vol is bid. There's a lot of other names that are connected to or rely on NVIDIA.
Yeah, seeing a lot of, like you said, that 4-day cycle, getting a nice
ABGO
applied volatility there. Yeah. Yep.
Intel, I'm sure. Qualcomm, probably. Micron, our best friend.
Micron. Yeah. Craziness. But yeah, we will be paying attention for sure. It is wild though to see NVIDIA up today on this broad-based sell-off for tech and other names. But like I said,
somebody always knows something.
Yeah, that's right. I think the public wants this thing to rally. I'm just not sure. I'm not sure what to make of it as of right now, but
gets the people going.
Yeah. Well, thank you, Ryan, for that analysis. Stay patient, find your spots, look for some key levels in implied volatility, and we'll see where we go from here. But hasn't moved too much from this 5K range, hovering between 70K and 65K. And yeah, strong correlation with software products. So if you believe that will continue, maybe you see Bitcoin rally as software names pick up steam.
Yeah, you know, when I look at, okay, what's that next really big level, I suppose, right? Where could you probably just see some energy? Where could this go to short term? You break 60, people are going to freak out, of course. But you get to about 58.5 is the 200-week SMA. So just the moving average. And what's interesting about that is every single cycle here, you've pulled back to right around that 200-week SMA, and that's been support. Now, the one exception is the FTX collapse in 2022, but most of the time you pull back to that level. So if you are patient and you're looking at this at 64, you could get another, about 10% to the downside here easily. That would be about 58, 58.5. That's where I would probably personally put some more money to work. Would have some working orders in there, pick a big round number, 55, maybe even 50, whatever. We know how violent this can get at times. And then it can snap back very quickly too, right? You could get back into the 60s, 70s within days sometimes. And so that's the level that I would key in on, is kind of that big 200-week SMA.
Yeah, and you can see historically between 2024 and 2025, we wrapped around that level on the continuous futures market, but found some support in there. And yeah, I think there's plenty of opportunity, especially if you're a long-term bull. This price action should not necessarily sway you, but this is the importance of trading small, getting chunks of risk as opposed to just going all in on one price point, because you've had plenty of opportunity to dollar cost average, to Ryan's point, setting up recurring purchases like that. These are the opportunities that really reduce your basis, especially if you were buying into this rally about a year ago. All right, let's pop over to the YouTube chat, see what kind of questions the peeps have. Again, sign up for the Tasty Crypto Substack. I've got that linked at the top of the YouTube chat. You can click on that. It'll bring you right there. Newsletter updates every Saturday and Wednesday. Yeah, let's see. Some people talking about the VIX. Not wanting to go under 21 makes me think we are not done selling. Yeah.
Bubbling.
Yeah, the VIX rising higher one day, picking up some steam. But as we always say, we keep our eye on the vol futures. The vol futures tell us a lot. And we're pretty much flat right now, which is getting into ominous territory, but still not seeing too much of a reaction. And I think this is it's the same story. If we get an 80-point sell-off and then we get a 100-point rally tomorrow, it doesn't matter. The 80-point sell-off is just normal. And I think we need to see a continuation, especially because we've seen this 200-point range that we've traded in. If we end up dropping below where we're at now in a violent way, that's when you get into backwardation. But as of right now, last time we saw this move, you saw 5 straight green days right after it, and then we sold from there, et cetera, et cetera. So it's until this chain is broken and we see a continuation to the downside that looks and feels violent, that's when the VIX will really pop and vol futures will go into backwardation for sure. But that has to happen first. Hasn't happened yet.
True.
Only 6% move expected on Nvidia. Yep. Feels kind of low. But it could be exactly what we said. Everyone expects them to post crazy numbers. But if the market is just this is what was expected, maybe you get an inside move, even though it's a small move.
I'm almost feeling like that could happen. I mean, that was largely what we saw from a lot of the Mag 7s, save for 2 of them, I think. That's kind of the cycle we're in. I mean, it's just, again, they're going to post incredible numbers. They're just held to such a high standard at this point.
Yeah. But, we will be trading it for sure. Wednesday will be the last day you can enter in new positions. They have earnings Wednesday after the close. Let's see. SPX Iron Condor we put on Friday has a positive P&L with the VIX up today. How come?
Friday Iron Condor.
Yeah, we put this on when the market was down 100. Right?
On Friday? Did I do it with you?
No, I think it was me. It was a 15-point wide or 20-point wide. Oh no, this is the calendar spread I've got. So yeah, the 73.30, 73.30, 73.50, 20-point wide Iron Condor on the upside and downside, 6,600, 6,580. Yeah, it's just we're chopping in this range. You're going to see P&L fluctuate as we chop. And right now it's flat. It's not up today. But I see your point. It's basically unchanged, even though we're selling off. We were selling off when I put this on.
Mm-hmm.
So we'll see. Will silver run up to 100 again? Is it within the expected move for March? Let's take a look. What do you think, Ryan?
I'm going to guess it is.
Yeah, I think you could get close to 100. I mean, the stuff that I look at right now, I mean, is pricing in with the vol, is pricing in a short-term move back to 90. But you look at gold, you look at silver right now, starting to trade a lot better than they were a couple of weeks ago.
Yeah.
I'm guessing the question we asked, speaking of a couple weeks ago, still holds. Where we were asking about which one of those was going to hit 100 first, whether it's 100 or 100K. I mean, it's
I
still
think it's
there.
silver. That's still my vote. Yeah.
It's not over till it's over.
Yeah.
Tortoise in the hair. I mean, you know what I mean? There's historical precedents. Yeah, tortoise in the hair.
Yeah, the implied move is up to 100 in April. So 93% implied volatility, 80 IV rank, 20-point implied range, up or down from 80. So yeah, kind of crazy. This is what we're looking at here. I've got $1,500, 1,505 in the 87-100 strangle. So if we look at the curve analysis and just look at the expiration risk, we're right there. Seeing a marked extrinsic value loss right now, which is basically equivalent to the P&L Theo. But any kind of continued rally will be golden. Even if we stay right here, we'll be fine. And that's just a reflection of when we put this trade on, silver had like 120% IV. So, and we've had $1,000 of premium after one adjustment when it dropped from right here, from 110 all the way down to 75. And we just kept rolling the calls down, rolled it out. So as long as you're taking advantage of the premium, you can be really flexible with these types of positions. See where it goes though.
Mm-hmm.
Yeah, that first pullback off of those all-time highs after running up there, you don't get opportunities like that to trade that sort of vol, right? I'm looking at per strike vol and the 0 DTEs, or let's just go out to the maybe end of the week or so here. Yeah, you can't really even there's nothing you could sell that would even be close to 200% IV on a per strike basis. And when we had that initial pullback off of those all-time highs, you could sell 600, 700% with hours to go in the day.
Yeah.
I'm waiting for that to come back around again. We're definitely not seeing those levels of volatility or anywhere near those levels of volatility right now in silver. Gold vol has picked back up though, closer to 38%.
Yeah, silver has done well in terms of implied volatility staying really bid for what it is. Like silver implied volatility, I remember a couple of years ago, this was like gold. It was in the 20s and 30s. Now it's at 90% IV. Crazy. And to Ryan's point, GLD, this one was historically, I remember distinctly saying, when this thing was ripping higher and then you look at implied volatility and it was like 25%, like this doesn't make any sense. There's a disconnect in implied volatility. So we weren't necessarily selling a lot of premium. We were taking shots with butterflies and definders trades, but silver is the opposite. You've got 100% implied volatility. And yes, the product moves, but it's a very affordable product for what it is, $78. Markets are 10 cents wide. And again, like this opening position was $900 for the 87-210 strangle. Yeah. And then the next day I rolled the 210 down to the 150 for another $1.50, rolled the 150 down to the 87 straddle for another $1.50. And then just today rolled out the straddle to a 13-point wide strangle for almost $4. So feel good about this one. And as long as IV stays bid, this will be another good example of a extended trade or year-long trade, if you will, where you'll just pick up so much premium that as long as silver stays around this range, like you'll be fine.
Yeah, I think it's one of
the variance.
I think it's one of the best trades on the board.
Yeah, definitely from a premium standpoint. What about a long play on the miners? Assuming PM's range around current prices would be great for earnings.
Like GDX, you're talking? I never really liked trading this thing like that.
Yeah, I just stick to the actual product. But there's plenty of opportunity wherever you want to look. How about
Problem with some of those, because I've been pretty active at times in GDX puts, just trying to sell puts at levels where I wouldn't mind owning the ETF. GDXJ is going to give you a little bit more vol there. They're just not super liquid. If you look at the March, you're looking at, in some cases, almost $1 wide, not quite 80, 90 cents wide. So you do have to wrestle with that. But I think the idea makes sense. It doesn't mean that they won't pull back, though, after earnings, even though, presumably they're making more money with higher gold or silver prices. But, I think there's definitely a trade there. It's just you're going to have to work some orders in there.
Mm-hmm.
Yeah. Some of these strikes are better than others, but general rule of thumb is if you're going with these round numbers, 135, 140, 130, you can visibly see that they're much better markets. What is this, 40 cents wide? And then you look at some of these other ones, you got $1 here on the 133. You got almost $2, actually $2 on the 133.5. So just stay away from the weird strikes with very little open interest. And you'll find that the round number strikes, those easy to trade strikes are going to have the most open interest and volume anyways. So yeah, it's an easier way to get involved in this product and other products that are less liquid. For sure.
If you just say stay away from the weird anything, you can add anything after that.
Yeah.
It works,
It's a good life hack.
It is.
How about those products we were talking about a few weeks ago, TerraWolf? Any updates there?
I've been selling puts in a lot of those names. That still, for the most part, is going to have a pretty strong positive correlation to Bitcoin's price. That said, when you look at where we are today, so you got a sell-off in crypto here, pretty significant sell-off, picking up steam, down 5% across the board. And some of those names that we called out, given they have pulled back quite a bit off of their highs recently, but Iron is up. Wolf, TerraWolf, WULF, is basically flat. But there have been opportunities to sell premium in there. One of the things that I like about these names, and I also like about some of the higher vol, I guess you could call them defense stocks or contractors. With these higher vols, you have a great return on capital. Now, you could realize that volatility, but when I look at something like TerraWolf, you have a $15 stock, you're going to put up, if I just pull it up here, we go into the March expiration, you do have earnings upcoming, but let's say that you want to sell something a little bit out of the money and you want to sell that 14 strike put there. So you could do that, let's say $1.25, $1.30, somewhere around there. Your buying power is about $200. So again, you are running the risk that you're going to see some decent realized volatility there, but the requirement versus the credit you receive gives you a nice return on capital. I've been doing that a lot in Rocket Labs, RKLB. Think of it as a competitor to SpaceX, publicly traded, of course, since we're trading it here on the show. But you can see you get some juice in this name here. So you're looking at a $15 expected move for that expiration, but you can sell an option for $3 and put up $600. So nice 50% return on your capital. You have real risk in there, but your max loss is what, $5,000? So I don't think this company goes out of business. And the reason why I like this is because these are names or areas where it's going to ebb and flow, of course, short term. The macro is going to dominate. There's periods of time where you just do not want to be in these sorts of companies. But there are also periods of time where you do. And I think if you have an outlook that's a little bit longer than a month or a few months, this is the direction that I think we're going in, right? Are we going to be doing more with payloads going into space, with satellites, whether it's for defense purposes or commercial purposes? I think that's only going to continue to expand. And so I want to be in some of those companies that have a chance to participate in that growth. And the way that you can set up some of these trade structures is interesting to me.
Yeah, both of these, Rocket Labs and Wolf, both have earnings on Thursday after the close, which could set up for a spicy trade here. And even when you look at the 4-day premium, if you look at the 60 strike 4-day premium relative to March, picking up $1. And I would imagine, and you can see this in real time, this thing's trading at 70, we'll call it. If you look at the 60 strike put for $1, and you look at the 80 strike put, Seeing a little bit of a call skew here, but interesting setups nonetheless. And I think if you were to even go defined risk, like let's say you want to inventory some long delta in April or March, you can sell this 4-day against it and pick up tons of premium relative to notional. And then same thing with Wolf. If you look at this, $2 expected move over the next 4 days, that's what's priced in, $3.50 over the March cycle. So looking at that same put, 4-day put, collecting 60 cents, you keep that regardless of whether Wolf stays the same or goes down a little bit, as long as you stay out of the money above 14. Lots of premium there if you're trying to emphasize that implied volatility. Do you make anything of these earnings reports coming up, especially in a product like Wolf? Do you find anything that might be interesting? Like, would you listen to this conference and see what they say?
Yeah, I'll probably listen in just to kind of get what the outlook is. I think more than anything is what you want to understand. We've seen some of the deals that they've signed with some of these hyperscalers. We know there's continued CapEx. We know that this is all being built out and requires a lot of money. But I would be mostly curious in what's the forward outlook, of course, from management at this point, given that there's a pretty strong narrative that this is a bubble, it's not going to end well. I get that, but I don't think we're there. I've said that many times now. I think you've got a bit of road ahead of you here, but that's what I'd be curious around. And then any surprises that you could see as you get at times. Hey, we're doing a deal with XYZ company, or this is what's in the backlog, sort of thing is something to pay attention to.
Yeah, and I think with both of these, Rocket Labs, Wolf, Iron, all three of them really, you have plenty of premium relative to buying power requirement. Iron's a little bit higher, but between Wolf and Rocket Labs, like collecting 60, 70, 80% of premium relative to buying power on one short put is kind of wild. You don't see that efficiency every day.
Yeah, I'm also curious just to see how a lot of these names that are very similar in nature, how they trade post earnings, right? Are they all going to be very positively correlated to one another? It's quite possible, but are there any outliers? How does the market kind of pick and choose here, given they're all going to be reporting earnings? So that's the other thing I'm keeping an eye on. Excuse me.
NEM?
NEM.
You guys traded this recently?
I haven't traded Newmont in 10 years.
Yeah, this thing is ripping higher, sitting at 122, near the highs of the last year or so, and not too much premium, 52%, 54%. Still, it's fine. Like, you can see the premium is okay here, but limited strike selection, 5 points wide in April, better in March. But yeah, same kind of story. I would just make sure if you're selling premium or buying premium, sticking to these round numbers here, 105, 110, 115, you get much better markets. All three of these markets are 10, 15 cents wide. You go one strike below it or above it, and now you're dealing with a 60, 70 cent wide bid-ask spread. You can run into some issues there.
For the last several years, the only thing that I trade when I'm trading gold is GLD or GC options. That's pretty much it. Or MGC at times. Of course, that's gotten a little pricey to trade now.
I think it's the same story as anything else. Like when you have bouts of really high implied volatility with realized volatility, you might as well go with products that are super liquid like GLD, SLV. When you have really low implied volatility, like the old days of gold and silver, that's when you would kind of fabricate implied volatility by going to these other products that may be less liquid but offer more implied volatility. So yeah, personally, I've been trading GLD, SLV pretty much exclusively, but always something to consider.
I think that's an excellent point. Yeah. Gold at a 40 vol, probably you can stick with that.
Yeah. It's like when we have these bouts of super high implied volatility, like that's when we're really going for trading SPY. Like I don't trade SPY normally,
right?
But if the market sells off 300 points and you can sell a deep out of the money put at like 4,500 or 450 for $2, I'm going to do that.
Agreed. It's way more interesting, and it's also way more liquid too.
Yeah.
To do.
Couple minutes left here. I thought I saw something about Netflix. Netflix is under the tariff lows, way under. Yeah.
I know. I mean, it's not the same reason, but it looks very similar to a lot of these software names. I mean, I think we made a diagonal last week. I think it was last week. That's about as much as I'm willing to do. I'm not really willing to sell puts in here because I just don't like the way it looks right now.
Yeah, I mean, this chart's not great. Not
great,
at all.
Bob.
But yeah, we did do a diagonal spread. It's basically flat, but anytime you're trying to buy the dip or catch a falling knife, I'm gonna keep risk low. I'm gonna keep my time frame longer. So we went with the 80 long May call, sold the 90 against it in April. So a much longer term diagonal, but it was only $4. You pay $4 for a 10-point wide diagonal. It's a really strong return on capital if you're right, and you have limited risk if you're wrong. You can see this coming into play here. It's only down 50 cents, and we've had this on for 10 days. You can see where Netflix was 10 days ago, significantly higher.
God, it was 10 days already? Wow.
Time flies.
Yeah, it does.
Interesting point here. If AI is successful, software stocks get sold. If AI fails, the whole market tanks, lose-lose. Do you think there could be a silver lining in one or the other? I mean, all these stocks are heavily invested in AI,
right?
But what matters more? Or is it all blown out of proportion?
I mean, I think there's a point at which there's an opportunity to take the other side of this move. I don't think that you try to catch the falling knife. It hasn't really stopped falling, right? But at some point, maybe that's selling out of the money puts, far out of the money at higher vols, or maybe it just gets down to an attractive level in terms of some valuations. I think there will be that. So I don't want to say that the narrative is overblown, but like, what's the narrative? And if we kind of work through that. So you have all of these software as a service companies that have recurring revenue, and that's going to first likely see pricing pressure, and then second, maybe ultimately go away. So the companies no longer exist if we play it out to that extreme. But that would indicate or mean that every company that has a contract with any service provider, I don't know, call it Salesforce or Zendesk or any of these others that are used across corporations, it would mean that they built their own, I suppose, with an AI agent. And maybe that's possible, but I think that that's what that assumes. And I just don't think that that's going to be true of all companies. I think it'll have an impact on jobs, of course. I think that you're going to see these software companies themselves invest more and more as they are in AI. But I don't know how all software companies go away because all companies replace those software services with their own, in-house services that are presumably better. I don't know. So I just don't think it's worst case scenario, but it's definitely hit valuations, which you're seeing. And then to some point, that gets a little too far extended one way or the other, and it maybe presents an opportunity.
Yeah, just to add on to that real quick, I don't know the answer enough about software to know what's going to happen with these names. I mean, I see them all right now, and it makes me want to get long all of them, but that's not the real, probably educated thing to do. Truth be told, having seen this type of movie before, not with software, but with other industries, when there's a disruptor that comes in, like you said, Ryan, there are going to be companies that are going to struggle and probably go away as a result, and the ones that learn how to adapt will be the ones that move forward. And so that's essentially what's happening here.
In these big name tech stocks, they are solvent. They have the ability to make quick moves, and they have a lot of cash to withstand all this variance. So I think same story with what we talked about with gold and silver, where when those are super volatile, you can trade those. Same story here. When Microsoft's down 30% from highs, there's the opportunity, in my opinion, especially if it's a long-term opportunity. And to Ryan's point, if you're selling out of the money puts in these things, if you have a big enough account, when was the last time you were able to pick up shares of Microsoft at $350? Mm-hmm. That's when the poster board was out at 4:00 and we were talking tariffs. So definitely a opportunity here if you're willing to take the risk. And if you don't have a big enough account to sell undefined risk premium, still diagonal spreads. I've got one on in April, getting hammered on it a little bit.
That said, I'm going to go out on a limb and say, like, when I'm looking at these names in the IGV, Microsoft, Palantir, Oracle, all of them, the scary part is one of them, these big companies that we've known for a while, might not exist in like a year or two. That's the real scary part. You just don't know which one. I don't know if it's CrowdStrike. I don't know if it's Intuit. I don't know if it's Adobe. But that's the thing that's going to happen.
I'm willing to bet it's not Microsoft.
I'm willing to bet it's not Microsoft too. Agree.
But yeah,
I think like if the view is it's going to be completely disruptive to a number of these different companies, and I think the trade is to continue to invest in AI. I don't think there's a scenario where both don't exist, right? And so when you look at Microsoft, I would think that was a more direct AI investment versus a software company. I get it, Microsoft, but is AI going to completely rebuild and replace Microsoft Office for all corporations? I don't know. There's the security concern as well. And so, yeah, I think if you are worried about further downside here, then you can't necessarily in the short term at the same time be calling for this bubble and this CapEx to end in AI itself or the the build out.
Crazy times. Crazy times. That's it though. We have a few minutes left here. But if you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Ryan's at Ryan Fred Grace. And give Tasty Crypto a follow as well. Again, I've got the Tasty Crypto Substack linked to the top of the YouTube chat. So click on that. Get involved there. And plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby. I like the looks.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. From Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward. Happy Monday. Got a little bit of a red Monday going on here. We got some turmoil. Well, I was going to say some turmoil in Mexico, but really some turmoil all over the place. It's a bad time to be long the peso. I'll tell you that much for sure. I'm joined as always by my wonderful co-host, Errol. Errol, how you feeling? What's going on?
Doing good, doing well. There has been a little bit of turmoil, a little bit of a negative sentiment over the weekend. Shout out to everybody in Mexico. Hope everybody's doing well. I know I hit up Luis too because I was like, yo, started seeing all these headlines. I'm like, what is going on right now? So just a lot of uncertainty everywhere. And I know we also got a little bit more news on the tariff situation. So there's a little bit more uncertainty brewing over there on that end, and how all of that's going to go down. But nonetheless, happy to be back. Happy to see everybody. Let us know what you're trading. Let us know what you're managing. But it's been a lot over the weekend. A lot of news, a lot of headlines, a lot of uncertainty. I'll put it that way.
Yes, it has. It's a bad time to be long the dollar also. Fortunately, I am not, but I'm long the peso against the dollar. So it's sort of working out because the dollar is simultaneously weakening, but the peso is weakening a whole lot faster. So not a great time for that. Not usually one to open up with Forex talk, but it's just it's what's been on my mind today. Outside of that, slightly red day in the broader market. We're down about 1% right now, pretty much across the board. Actually, I'm not super sure about NASDAQ. Yeah, actually, NASDAQ lacking a little bit more. The rotation out of tech has seemed to be more aggressive than the rotation out of the broader market on the red days in the past few months or so. I saw Rhett in chat predicting Oracle will be gone in a year. That is a bold prediction. I don't know. I totally agree with the logic that you're presenting, Rhett. A year is just an aggressive timer, but I could see that. I could see that manifesting. They have a lot of holdings to fall back on, though.
That is pretty aggressive, though, right? I don't know. Oracle is a really relevant name. What have they been up to? I actually haven't taken a peek at them in some time.
Yeah, I haven't either. Let's have a look.
I think I was doing something in Oracle maybe a few months ago, and I think I had caught in a falling knife a little bit over there. I don't think I've touched it since, though.
Yeah, I know they've been hurting. It's been pretty bad, but yeah, I didn't realize how bad Friday and then obviously today are down another 6% today. Luis is doing well. We're told, right?
He's doing well. Heard. He's in. I'm not going to drop it. He's doing well, though. He's great.
Drop his very specific town.
The coordinates.
Here's where you can put it in your Google Maps.
The mafia.
You want to find Luis's house.
This is where you hide it. No.
Yeah, no, but he's doing well. We've heard from him. He's still working hard. That's for sure. So you would never know that things are going on anywhere remotely near him. And yet some of my Mexican stocks are up today. It's true. Sometimes uncertainty can breed good things for some Mexican companies. What's going on, everybody? Good early afternoon, Destinies. Yeah, what's going on, big deal? BDH, good to see all of you. My portfolio is hurting today. A lot of long delta here. We're just kind of getting killed left and right. Meta has been so insanely volatile. I have days where this thing is up and down 3 figures all the time.
It's been in some good days as well.
Oh yeah, absolutely. Yes, these swings have just been so immense. We fly to local highs. We come soaring back down. We do 3% here, 3% there. We're down another 2% today. Not quite engulfing a very good day on Friday yet, but it's this thing has been bonkers. A very good vehicle for directional traders, and particularly if you're a shorter term directional trader. Lots and lots of volatility here. Gives you all sorts of options to you could buy, you could sell. I mean, there's so much that you can do with this. There's good times to sell premium. There's good times to get long, and I've just been long through all of it. So obviously hoping for some sustained upside growth in Meta, but the volatility here has been immense. The star of my portfolio today is Affirm, buy now, pay later service Affirm.
Oh, Affirm is the star of the show.
Yes, it's the star of the show in that it is slacking off. I don't know, it's a meteor, perhaps a sort of star. But
the star of the show in your perspective, though. I mean, you've been calling out a lot of the buy now, pay later services for quite some time now, right?
Yes, and I'm happy to see Affirm down another 7.5% today. It's been a really bad run for Affirm, which is great for me being short. I didn't time my shorts super perfectly. Bought them, I'm not exactly sure where, somewhere here in this range, about the 70 level. So we were well above that and hurting for a little while, and there was some theta decay that came into the equation, but we are finally starting to flip back to green on those, and I think this could have a lot more downside left in it. I'm really I've said this before, I mean, there's very few companies that I am just super long-term short on, legit think could go to zero, and these buy now pay later services are among them. I'm looking for these liberation day lows on Affirm. I have no faith in this company whatsoever. I saw PayPal was trending on Google Trends earlier. I can't say I know what's going on, but they're having a great day. If anybody in chat could tell me what happened to PayPal, is this just good earnings or is it something else? I do not know.
Massive gap over there, it's looking like.
Yes, they've gotten into buy now, pay later themselves over the last few months. They now have.
You know what? Might have to add that to the playbook the next economic cycle. Once things get a little tight, debt is going up. It's like, yo, everybody get long buy now, pay later service, or maybe sell into the. I don't know. But it's kind of funny how we're seeing these things deflate a little bit as it feels, right? We don't want to go off the feelings, but it feels like we're getting to a little bit of a tipping point.
For sure. And
Anyways.
when you talk about like, the debt situation, the consumer debt situation, you're usually talking about credit card debt, which plays into these bank stocks, these bank stocks. I'm combining GameStop in there. The JP Morgans, the Wells Fargos, the B of A. Why am I blanking here? What's the Bank of
Which one is
BAC?
Yeah, there we go.
Which are all actually slacking the day themselves. But the difference between these and the buy now, pay later services to me is that banks will get bailed out. If the credit card debt goes so bananas that these banks default, the government will just swoop in there and take care of them. We're at whatever, $1.2, $1.3 trillion in credit card debt right now. But that's not as alarming because the government is simply not going to let JP Morgan fail. The government will, however, happily let Affirm or Klarna fail. Klarna, the other big player that's publicly tradable in this sphere, not having as bad of a day as Affirm today, but having a way worse run than Affirm.
So what you're saying is JP Morgan has officially gotten too big to fail.
Oh, certainly.
Right.
Certainly. And I don't even think it's just JP Morgan.
Enormous.
I think if Wells Fargo is going to default, I think the government's swooping in there to save them.
I watched a documentary not too long ago on JP Morgan. I know they opened up a new building out in New York again, the JP Morgan building. Wow. I actually didn't recognize how massive, I mean, we knew all these banks are massive, but I didn't recognize how far JP Morgan was taking strides, even on their competitors.
Oh, yeah.
I mean, they're a lot more mad. They could eat them right up for lunch all day.
Yes, they could.
Massive. Anyways.
Absolutely.
Bank stocks.
And then, there's other, pseudo bank stocks. You got your Goldman Sachs. Sorry, everybody gets mad at me for my pronunciation.
It's an accent.
Goldman Sachs. Logging a bad day as well, but they tend to move like a bank stock, even though they're a little they're not necessarily conventional consumer bank. I don't know anybody who's walking into Goldman Sachs with $500 and saying, "Let me open a checking." Who's buying PayPal, or who is rumored to want that trash? Oh, there's like an institutional buyer, is what we're saying. PayPal has attracted takeover interest from potential buyers, including at least one large rival that is looking at the whole company. At least one large rival.
I mean, is PayPal trash?
I don't know. I mean,
I know there's other alternatives you can use that are great, but I mean, is PayPal really trash? I feel like they still hold a lot of brand equity in the name, at least.
They definitely do, and PayPal really has more inroads than most like P2P money transfer services with the amount that they're used as a payment processor. Like how many websites have the quick PayPal checkout option? It's like you're not seeing that with smaller competitors like a Cash App or a Zelle or a Venmo. I know Venmo has gotten into payment processing, but that's just a PayPal holding. So that's really just the same ecosystem. I'm not surprised to see PayPal trying to execute on that with Venmo. But I don't know what large competitor would be in the market for PayPal. It can't be another like payment processing.
Another competitor.
I mean, unless it's like, is it like Square or like something like that? Oh yeah, sorry.
I remember, Square and PayPal were definitely heavily correlated as they were moving side by side, even back in 2020, 2021, I remember.
Yeah. Or it could just be like Amazon or something. I don't know. But I mean, if large competitor is the vernacular used, that's interesting. Maybe Elon will buy PayPal back. That's possible.
I can see that.
That's possible.
I mean, he can do it. I mean, if anybody can just scoop up whatever they want to scoop up, I mean, it's Elon. And I feel like that's still not too far out his wheelhouse, depending on some of the things that he's looking forward to do on X. I know he's trying to get a lot of back end infrastructure set up for X in terms of moving money in and out in different facets. So I wouldn't be surprised.
Yeah, as we discussed last week, he originally wanted to call PayPal X.com and was overridden on that decision by Peter Thiel and others in that PayPal founding party fraternity.
Yeah.
So that's definitely in the equation. And also, he has expressed wanting to make Twitter X a payment transfer service now as well, letting people transact and do things like that directly on X. So perhaps that's in the equation. That's sharp, Death Sneeze.
Maybe Venmo got something up their sleeve.
They're gonna buy themselves out of PayPal and they're gonna buy PayPal. Oh, that would be funny. But yeah, everything else, aside from Meta and, this is my Pelosi position, Alliance Bernstein, lagging hard on me. I might just buy more. She's never wrong. We'll see. There's pretty good technical resistance here at this 38 level that we're testing right now. But I don't think I want to get too much longer. I'm already fairly long here because these contracts were so cheap. And then, I guess I'd be remiss if I didn't mention Bitcoin, which is logging just more red. It's
a tough one.
Keep testing lower lows.
I continue to go on social media and I see another new headline with a screenshot of just 3 fat red candles to the downside. And it's just a headline, Bitcoin now reaching 64,000. Bitcoin now done another 500, whatever the case might be. But all weekend was just getting a lot of updates on how Bitcoin's taking a little bit of a tumble.
Did you see the thing with Scottie Pippen trying to post bullish technical analysis for Bitcoin? He was actually totally just highlighting a bear flag.
Bro, I seen something and I think they smacked that off the backboard.
Yeah.
I forgot what it was. Can you refresh in our memory? I think it was within a week or two ago that happened.
Yeah, it was I think it was last week. Scottie Pippen tweeted a picture of a Bitcoin daily chart, basically what we're looking at here, and he had just drawn a consolidating triangle on Bitcoin's current price action, and he was trying to imply oh look, it's going to consolidate, and then this is the breakout point, but it's a bear flag. Is what he highlighted. For that to be bullish consolidation, it would have to be a bullish run up into the consolidation, and then maybe you could begin to make that case. But that is not what has happened here. So everybody quickly jumped on him and pointed out.
The comments were hilarious.
Yeah.
I forget what the post exactly. The comments were hilarious.
Yes. Yeah. When Scottie Pippen starts trying to tell you that a stock could go up, that might be an indication that it's time to sell. But yeah, everything else pretty much just routine redness in the middle of the portfolio here, just tied into the red day, but nothing burning me too bad. And then I guess CoreWeave is slightly green as well today.
That boy CoreWeave.
Yeah.
What's he been up to?
Yeah, up a good 4% against the market today. So congratulations if you're long CoreWeave and short everything else. You're probably doing pretty well. But that's pretty much the synopsis on what I got going on. Nothing new for me.
You know, it's been pretty crazy. Man, I don't know. I got a little bit of short delta on some of the metals, but good Lord, gold and silver, it's not done, apparently. I guess the show's not over. I thought we were over the last week or two, but I hate to bring it up again, bro. But good Lord.
See if we can get a fill on this VIX here. I forgot I'm 1 DTE on that and dead in the water. But yes, gold and silver with the war sentiment kind of happening. We are continuing to bounce a little bit on gold and silver here. We have still on silver at least we have yet to surpass the initial dead cat bounce that we got out of the initial drawdown. But with gold, we certainly have past that and firmly so. Gold much closer to retesting its highs than silver is at this time. But yeah, little war, little uncertainty. It'll keep these metals going.
Yeah.
So anybody who was bold enough to get long some metals against this drawdown, congratulations to you. You should be doing pretty well.
Yeah, I still got a little bit of short delta in both of those. I know we took part in GLD, a little bit in SLV. SLV we bought a put, and then GLD sold an out of the money call spread. So if gold can pull back around to the 5,100 range, I'm going to at least try and take off one of those positions, either the out-of-the-money call spread or the silver put to reduce that exposure a little bit, and then might even get a little bit of long gold if we can get the pullback. But if not, it might be a runaway train, so we'll keep eyes on it.
I'll definitely be looking to get short some more here. Now that we have more attractive levels, I didn't want to do it during this rundown because you just never know, and this could very well happen. This does seem like an attractive spot for that, and I do like the idea of just buying a put. Yeah, what if we get something out here with a little bit of room to run? Like what are we at? 78. Holy, expensive.
Tipping going from no look passes to no look trades.
That's sharp. That's apt analysis. Let me look at this chart. What are these levels looking like? Yeah, I wouldn't really want to go far beyond 65. But these premiums are just so elevated. What if we try to sell some premium with how elevated this all is? Something like this. This is more attractive. 75 level, perhaps. Can I find some better liquidity than that? 76, 77, 75? Yeah. I'll fire on just kind of a couple of these. We'll keep this small, keep it, within the bounds of reason here. I'm just going to go ahead and reasonably assume I'm not getting a fill at that price, so we'll let ourselves slip a few cents. There we go. Oh, they did fill us at the mid. Beautiful. Thank you, Tasty Platform.
Here we go.
And then I really need to get out of this fix. Get me out. Okay, there we go. I don't see VIX compressing anymore anytime soon. I'll leave this naked put on for a little bit longer. We'll see if we can get more out of that. That's basically the synopsis for me here. And yeah, now we've added a little bit of short silver to the account as well. So that's where I'm at. What do you got going on your side?
Not too much. We can go ahead and jump over here. We can actually just jump right to the TradingView platform. I don't really have much to show you outside of, what you had shown us just now. But no, we were just looking at the metals a little bit more here. This value area low is correct. I just want to preface, but I do need to readjust this value area high over here. So just take that with a grain of salt. But as you can see over here, let's turn the trades on. Trades are, there we go, 0 trades for the day. So just a lot of uncertainty, seen a lot of the sell-off in the morning. So we took a pause on that. Market is looking like it's trying to find a bottom right now, but I'm not buying it. Just so far at least, I don't feel confident enough to take anything, even in a short-term manner, like a scalp right now with all the uncertainty. Vol's expanding, a lot of volatility. So I'm going to take a step back. If I do take something, maybe even just use one micro, just because, again, I'm recognizing even just a little bit of a pullback. Like you chase a move, your risk is widened by an extra 30, 40, 50, 60, 70 points quickly without you recognizing it. So since we're in that environment, just going to stay patient. But the thing that's been catching my eye is just that gold trade, like we kind of been looking at. It's been really difficult to figure out how we kind of want to position for this. But we can kind of see that we were consolidating on gold for the last few weeks after we got the crack in momentum. So we produced a pretty large value area over here. So, I mean, if we get pullbacks to the value area high, we can, check to see if we want to reposition ourselves at all. But right now, it seems to be a little bit of a runaway train. So getting long at these levels, the risk, I don't like the risk reward. I don't think the risk reward favors a scalp in my opinion. So that's kind of the boat that I've been in, just really on the sidelines watching, but not taking anything impulsive at the moment.
Yes, to the end of Agent's comment here, you're seriously going to be at risk shorting silver. Mexico is a good chunk of output that is going to get slowed down now. Yes, for sure. That is a high risk trade that I just put on. That is not lost on me. But high risk, defined risk, yes. And high risk means elevated premiums. So it's a little too juicy for me not to attack right now. They squash this thing in Mexico, the uncertainty goes away to an extent, and we could see it easily come right back down. And we're still just so elevated above what I believe to be reasonable levels for these metals because of how high we started. If it was just now, if we were just now starting the initial run off of like reasonable increases in the price of metals over the course of the last year, I would be a lot less inclined to get short as silver was on the parabolic run up the entire time. But because of how much of a head start it had, and now we're trying to rally back to these insane highs, I'm a little bit more prone to want to get involved there. But yeah, keeping it very small, that's something like a 2%, 1 to 2% portfolio trade that I just threw on. Got the NBA Jam voice in my head now. Hey guys, with SLV, I finally sold a 100 call in March to go with my 100 put in March. That's underwater significantly, trying to make some premium back. Yeah, I think that's a good way to attack it. And I assume you mean you have a short 100 put, but perhaps you mean you have a long 100 put. Depending on when you bought it, it would be hard for a March expiration 100 put to be too red. But I don't know how early in the silver run up, initial silver run up, you got involved with that. DCAing more Netflix today. Parabolas can get a lot bigger, heading to 300 plus. Okay, that's a bold prediction. We'll definitely take that prediction into account. We'll see what happens. 300 plus would be nutty. And with what we've seen out of this recently, I don't think like it's out of the bounds of reasonability. Like I wouldn't be shocked if we saw like a 150 test or a 200, 300 SLV specifically would be pretty insane. And then adding more Netflix. I think Netflix just has to turn around sometime. We seem to have found some kind of support level here at around 75. So hopefully that will manifest. But yeah, I just can't believe these lows out of Netflix. I mean, we're well below Liberation Day levels now, just down here totally in the doldrums. And Netflix is just too strong of a company to do this for too long, I feel like. I mean, that's why I'm long as well with a ladder.
Netflix has given me that Oracle kind of sentiment. That's the same kind of vibes it's giving me over there. Parabolas can get a lot. Oh, parabolics. I almost said parabolas. You almost got me there.
No, it's parabolas.
Oh, is it parabolas?
Yeah.
Okay. Parabolas. Yeah, parabolics. I guess I'll go with that one. It can get a lot bigger heading into 300 plus. No, 100%. I mean, some of those parabolic. That's the thing, though. With silver and gold, it felt like we already went on that parabolic type run. So, I mean, silver taking the highs, I wouldn't be. I know we have war conversations around the corner, but I mean, legitimately, if gold or especially silver, if they take a new high, my mind is broken. My full brain is blown. I can't believe that if something like that does.
At least now there's more legitimate reason for it. Initially, I was just searching for a reason for this the entire time. At least now it would be, justified to an extent.
Yeah.
What's Netflix IVR compared to other streaming services? Netflix is at 40, 39.9. I'm rounding. Compared to other streaming services, Roku, you're looking at 21.2. Paramount, you're looking at 80.9, 81, which I guess that's not too surprising with the way that Paramount has traded recently. There's some other publicly traded streaming services, not Hulu. I could do Disney, but that's not really an isolated, good vehicle for a streaming service. If you're curious, Disney's IVR is 21.
Twitch is owned by
Amazon. Yeah.
So that's not isolated enough for us either.
That's not nearly. that makes Disney look super isolated. Yeah.
That makes Disney look like a streaming service for real.
I can't imagine what fractional percentage of Amazon's revenue comes from Twitch. I'm sure it's not insignificant, but I'm sure it's not too significant either.
No, it's probably pretty minuscule. To your point.
Of course it's short. I tried to get $100 to buy some Girl Scout cookies, and then they pulled the rug on Silver the next night. Oh man, I'm sorry to hear it, Rhett. Yeah, that reminds me. Also, I need to find somebody selling Girl Scout cookies in this office.
Oh yeah, why is that?
I need some Girl Scout cookies.
Oh, I feel you. That's what I thought the sentiment was. Sometimes you just need a
I'll default to the girls that are in front of the grocery store on my way home if I must. But I would like to support the daughter of somebody here in this workplace. But it's I've been having a much harder time than you would think at our company of several hundred people finding anybody who has somebody selling Girl Scout.
Is Girl Scout cookies getting out of style? Is Boy Scouts and Girl Scouts not as popular?
No, I don't think so. I think it's just nobody has kids the right age. Like everybody.
Having kids are going out of style. It's not the cookies.
Well, there's just funny brackets of ages of people here. Like there's just nobody with kids the right age. If anybody on the production team
has kids the right age.
Has the plug for Girl Scout cookies, let me know. But yeah, it's everybody everybody on our side. There's a lot of people with kids, but they're all 4 and younger. Right. There's nobody that has Girl Scout age kids. But I need me some Girl Scout cookies. I'm a high value client as it pertains to Girl Scout cookies. Okay, I'm like Kevin from The Office in the way that I purchase Girl Scout cookies.
That's a very valuable lead right there. Actually, I'll tell you that one. You're a valuable lead. But I gotta ask, what cookies? What cookies? I was gonna say mimosa. What is it called?
Oh, there's are you thinking of Samoas?
Samoas.
Yeah, I love
mimosas. It's not like a brunch.
Yeah,
but no.
Love Samoas. Samoas are top tier. I like do-si dos. I like tagalongs.
No, none of the mint.
I like
mint chocolate.
I'm not a big fan of the Thin Mints.
You skipped it right away, so I was like, you can't. You either love them or you hate them.
I'm not huge on the Thin Mints. I don't dislike them, but I'm not going out of my way to buy them. If somebody else has them or sets them out, I'll eat a Thin Mint or two. I also really like the shortbread ones are solid, but that's not what I'm thinking of here. Oh, the s'mores. I really like the s'mores, but they just redesigned the s'mores this year. I was looking at the menu online the other night. I'm dedicated to figuring this out. But they've done a new type of s'more thing, so I'm not sure if I'm going to like that as much. I liked the s'mores when they were the big square chocolate ones. That was my ideal s'more. But now there's some kind of different thing. They shake it up every few years.
Okay.
They also have gentrified the lemonades. They're called Lemon Ups now, and they have some kind of what am I looking for here? Positive messaging.
Lemon Up. What is that? 7 Up?
Yeah.
Heads up 7 Up. What are we doing here? Heads up 7 Up.
Don't gentrify my lemonades. Just give me some lemonades.
Yeah.
I don't want positive messaging while I'm eating Girl Scout cookies. I want to slam a bunch of Girl Scout cookies and then turn the box over and say that was 1,100 calories and then eat 3 more. That's how it's supposed to go.
Lemonade already has a great vibe to it. Whenever you think of lemonade, so it's positive in my eyes.
Did the box shrink? Probably. Everything's getting shrinkflated now. I see somebody mention Fubo. Is Fubo publicly traded? I'll do this right before we get off. I just realized we're at our time. I'm over here yammering about Girl Scout cookies. Fubo is publicly traded. Fubo at 81. So considerably higher than Netflix. Netflix at 4.
That's another streaming service, right?
Yes.
They play a lot of soccer.
I think so, yes.
I think. Anyways.
But anyway, that's what I got. You got any closing remarks?
No, that'll be it on my end. We'll circle back around and see how these indices are performing and some of the metals.
All right. Well, that's everything we're going to have for today. Thanks so much, everybody, for watching. We dearly appreciate you taking the time out of your day. We never take it for granted. Errol and I'll be back here same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming up next. We will see you guys next time.
We We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
But this was not a paid, you're not getting paid for this advertisement.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. It's still Monday, February 23rd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, what's it like outside where there's not snow?
Well, it's sunny here. I know you're dealing with a blizzard. It's all over the news. It's snowmageddon there. I don't know if you're going to make it, but it was nice knowing you, Chris.
It was nice knowing you as well. I think we're going to make it. There was so much snow that when I opened up my fireplace today, a bunch of snow came down the chute. So I just got to have the distinct pleasure of cleaning out ashy snow for about a half an hour, which was nice, but we got to keep the house warm. Yeah, there's a town and a county ban on driving right now. So we will eventually get out of the house. Another 18 inches, Thomas. This is fun. You wouldn't see it by natural gas prices, though. Oil prices are obviously doing their own dance when it comes to Iran and, well, whatever we're doing over there. Today feels like a Sell America kind of day. Gold up. We're seeing that stocks are down, the dollar's down, even bonds are getting a little of a haven bid. it's a war trade kind of situation. Is it about AI eating the world, Thomas? Software's down another 5%, cloud computing off another 5% today. Pick your poison. It's an ugly market out there right now.
Yeah, I was talking about trying to pick a bottom in some of those software stocks last week. I didn't do it because I didn't get around to looking at the trades, and I saved myself through just being too busy, I guess, with other things. But I was going to do CRM. I was going to try to take a long stab at it. And today there's another report out. One of those the future of AI reports that SaaS stocks, software stocks, they're not going to be able to compete. So big dump there.
Yes, we'll talk about how AI is eating the world today, and we'll talk about the genesis of that quote in a little bit. But before we get there, let's talk about these tariffs because we have so much to discuss for today's show. Thomas, the new tariff rate, handy chart from Bank of America, tracking how each of the various events have shifted the effective tariff rate. We come into last year with a 2.3% effective tariff rate. And then you get your fentanyl and Liberation Day, your China escalation, the various pauses and reductions along the way. The most recent tariff data shows us at 10.6%, given the prior tariff regime, given the data collected in November 2025. Both Goldman Sachs and Bank of America, their scratch math on these tariffs, they're saying if the 122 stick in the form and fashion that the administration's proposed, it's going to keep the effective tariff rates down around 10, maybe even 9%. So all things considered, perhaps this is the silver lining. These would be the lowest effective tariff rates that we've seen since prior to Liberation Day. Still, obviously, the market's not having that perspective, given the fact that the EU is telling us that they're going to reconsider the US-EU trade deal, Thomas. But forest from the trees here, right? It's not like we just saw or we're seeing dramatically higher tariff rates than what the market's become accustomed to in recent months.
Yeah, I mean, it's a lot with this recent court decision. There's a lot of confusion. Even, people that review the tariffs, for a job, there's a lot of confusion there. The administration seems to be, not exactly knowing the best path forward after this court decision. So I think some digestion's in order, wrapping our heads around it. But I think overall, it's I saw the court decision. If it comes out, you at least have the uncertainty removed from that. You don't know which way SCOTUS is going to rule, but not quite a risk-on reaction today following a weekend of digesting that news. So I don't know where we go from here. I'm not sure. I'm not sure how the market's going to play this.
Of course, Trump on Saturday stepped up the tariff rate under Section 122 to the maximum 15% allowed under law. There are other provisions by which Trump could try to further escalate the situation. How those proceed, how long they stick around, it just leads to a lot of policy uncertainty, which the market doesn't like. But that's not even the main cause of concern for the market today, Thomas. I would argue that the tariff news isn't really all that big of a deal. I'm paying more attention to what's happening in the software names in the cloud computing space. You mentioned that there was a report out over the weekend. Coming into this week, we see that Anthropic has a new code detection tool, which could render the likes of various Cloudflare or just pick a name out of the hat related to cybersecurity, render their tools useless. CrowdStrike's CEO is talking about how their Falcon platform is still the best and top in the business. And, you can't trust AI to make those kind of decisions. You have to trust the battle-hardened platform, I think was the exact terminology he used. It's not doing much to provide any comfort to investors today, Thomas. So there is that Grim Reaper meme where the Grim Reaper is moving from door to door in a house, and it feels like it's now coming for, well, it's been coming for the software, but it's coming for anything that can be replicated or where code can be replicated at scale quickly. We call this episode AI is Eating the World because it plays off of a Mark Andreessen blog post from 2011. Mark Andreessen, the founder of A16Z, he noted that at the time, software was eating the world. Thomas. But now we find ourselves in a situation where AI is actually eating the software. So if software eats the world and AI eats the software, it's kind of a rock, paper, scissors situation, or at least transitive property, AI is eating the world as well. When does this stop? I know last week, and I wanted to start with this here today because I know last week you said you were looking at bottom fishing opportunities. You didn't jump on it. Sometimes not getting in a bad trade is just as good as getting in a good one, because net it means that there's money not going out the door. So what's the play here now? I mean, this feels like the albatross around the market's neck for the foreseeable future until this fever dream over AI consuming every single job on the planet ceases.
Yeah, for me, if you're looking at, let's see the chart here. You got the cloud computing ETF. We're coming up against the swing lows from April 2025. So that is down at, where's the low for that? 1773. We're trading 1812 right now. 99.6 IBR. I think it still makes a little bit of sense to try to, you could sell a put spread here. You could do it with a lot of volatility there. So, you could make it small. I think that's what I'm going to do. I think it still makes sense to put on the trade for me. Try to call some kind of technical bottom here. If it doesn't work out, it's going to be small. That's what I'm going to do. So, I'll try it, but there's more fear in the market. Overall, what does this mean for the market, though? It's hard to rally when a big segment of, such a high beta component is dropping like this. And it doesn't inspire confidence, if you're trading long NQ or anything like that, or even the broader market. I'm just going to be tactical. I'm going to take a small position like this and still stay small overall. So that's what I'm doing.
Yeah, again, it really depends upon where you're looking right now, because although the NASDAQ itself is down over 1%, depending upon where you look, you're not seeing terrible weakness abound. Telecom is just a few days off of setting a all-time high. Semiconductors here, they're only off by 0.7% as we get ready for NVIDIA's earnings on Wednesday, and that's a fairly decent-looking bounce. Former resistance becomes support, a market that may be just consolidating before the next leg up. Perhaps if you're being ticker agnostic and calendar agnostic to the earnings around the corner. Software is difficult right now. And I keep going back to this over the past 2 weeks, because as the NASDAQ attempts to make a turn, a pivot to climb out of this morass, this malaise that it's been ensconced in over recent weeks, software, cloud computing, it's not making life easy. So 25,000, I think we should just stick to our daily chart here, where over the past several days, Thomas, really, as we make our way into February, we've lost any semblance of positive bullish momentum in the market. We had it at sometimes in recent months where you look at topside acceleration to range highs. But right now, with today's action, 1 week moving average, prices below there, prices below the 1 month moving average, prices below the 50-day moving average. Each of those moving averages have negative rates of change. It's just an ugly looking set of circumstances right now. So if I'm trying to get long deltas in the NASDAQ, I'm effectively saying I'm trying to catch a falling knife to some degree here. It's not great. It's not the environment that you want to be long deltas in. This has been my drumbeat over the past week. A dispersion environment, second half of February, volatility tends to rise, stocks tend to suffer. This is not the time for directional beta. So I'm not putting on directional beta still. I was thinking maybe we'd get around that corner perhaps. With Friday's close, this week would be set up for a little bit more optimism, but the tariffs and the Iran and name a catalyst, insert news story XYZ. I mean, it's just too much right now. So I will not be picking a bottom in this market just yet.
AI, tariffs, and war. It's a lot to navigate. There's a lot of risk, a lot of things people are thinking about. Dynamic situation, anything can happen any minute kind of thing. It doesn't feel too great to try to get long right now. There's just a lot going on. There's a lot to digest in this market. So I don't know. Even like if you look at stocks like American Express, payment service processors, American Express down 8%. you know, it's there's other places that are suffering. I'm not sure if I think the American Express sell-off is related to AI. The report coming out from Citrini, I think, is there risk to those kind of sectors?
Did you read that report today?
I saw a couple of bullet points from it. I didn't read it yet. I'm guessing you did, Chris.
I did read it. I am digesting it. Citrini, for those Citrini 7 on Twitter, for those that don't follow him, we've referenced him a lot over the years. He was really big on the GLP-1 kick before Eli Lilly and Novo Nordisk just exploded as a result of Wegovy, Ozempic, yada yada. So I think he's a bright guy, right? And he clearly has made a lot of better individual stock calls than I have in recent months and years. So I'm not going to knock him for that. It kind of reads like a piece of Marxist fan fiction to me. And I mean that very specifically, not like, oh, it's a commie piece of writing. Like, no, the stylistic and narrative framing that is used in the piece, which I encourage everyone to go seek out, is effectively how the market is a hollow set of circumstances. Everyone is basically a rent seeker, and we're finally developing the technology to kill all the rent seekers. So what happens to an economy that is built upon consumption if the people who are doing the consumption are no longer doing the producing? And that is effectively what Marx said in his critique of capitalism would eventually happen. Businesses would rise up. They would have new technologies that would displace labor. Labor without the means to consume would fall further behind. And so production would just be occurring. But who's there to consume it? And eventually the whole system collapses on itself as profits go sky high and no one can afford to buy a single thing. The long and short. So I found that really interesting because that's not how he typically reads Thomas. Also, that's not observed history, which would be my pushback to it, just as I'm thinking about this on air in real time, right? Creative destruction emerges whenever a new technology comes out. Part of what makes creative destruction and the forces of capitalism so incredible is that when new technology emerges, new industries come along with it that people never dreamed of, right? When the automobile first came out, Thomas, no one was thinking, oh, wow, we're going to have all these mechanics. I can't wait to be a mechanic in a few years. Once the automobile comes out, it wasn't even a job back then. Same thing for anything to do with airplanes or before then trains, right? People who laid railroads, those jobs didn't exist in 1700. So there's always displacement. The market finds a new equilibrium. The technology eventually sees that the marginal cost of using it or implementing it gets whittled away and competition takes hold. And, is it going to be uncomfortable if the technological pace of change is so rapid? Yeah, of course. But we've seen this in the past, and governments typically step in with fiscal stabilizers to redistribute the outcomes. Wouldn't surprise me if we see universal basic income coming out of all this, as an aside. But you mentioned the Citrini note here. People should take a look at it. And if they want to email me or shoot me a message on Twitter to share their thoughts on it, I think it's a good thought exercise about what the market would look like in a few years from now. Which, Thomas, you mentioned 3 things a second ago, by the way, and it got my brain laughing. You said AI, tariffs, and war. You told me 4 years ago that, the stocks are down on Monday, February 23rd, 2026, because AI looks like it's going to be eating cloud computing and software. Likewise, another strike group has moved into the Persian Gulf to get ready to attack Iran. And the EU-US trade deal is canceled because Trump has levied a new round of tariffs. Like, what the heck is going on in the future? What kind of future are we living in? But
can't say it's a boring one.
No, but the market, if you said that 5 years ago, where would you think the market would be given the state of the world? Would the S&P be 3, 4, 5% away from 7,000 all-time highs? Or would we have been mired in something much worse? I digress. I don't think a single person's Substack post is catalyzing an entire market sell-off today. Although, before I get off my soapbox here, Walter Bloomberg, the guy who posts all those automated Bloomberg headlines on Twitter, he was tweeting about the Citrini report. So clearly it's reached some level of FinTwit collective consciousness that warrants us bringing it up here on the show.
Yeah, I mean, the fact that one report does have some market influence shows that, there is some vulnerability, maybe some underlying fear that, this rally isn't going to get back on track. And, we could keep waiting for that, right? For the rally to get back on track. How long does it need to go to where you just say you're going to have a chop fest for a while, maybe even the whole year? We have whole years where the S&P really just goes almost unchanged from start to finish. It could be one of those years, it feels like now.
It could be. We go back and forth, and at the start of this year, we were having the back and forth on whether or not this is year 2 of a president's term or year 6, because the implications are very different. Year 6 of a president's term has typically been very good. If you think about Reagan or Clinton or George W. Bush or Obama, right? Year 6 has typically produced double-digit returns in stocks. But if you're thinking about this as a year 2 presidency, year 2 of a president's term has often been not great, where you get a lot of chop for the first 6 months, a little bit of downside first 9 months of the year. And then once it becomes clear about which way midterms are going to resolve themselves, the market starts to pick itself back up as policy certainty, or at least clarity, emerges once again. So we're kind of behaving more like a year 2, and then you sprinkle in the fact that we got on the naughty list, no Santa Claus rally, and this seems to be a difficult period. And forget the year 2, year 6 stuff. Second half of February is already a mess, past 10 and 20 years for the stock market. So there's just a lot of little factors right now that if you were someone in my shoes, it's not so comfortable to try to get directional long again and shut up and just buy stocks, which has often been a winning strategy in these parts.
Chris, as we get closer to November, do the midterms have any influence, you think, on where this market goes and whether or not it's, forecasted to Democrats to take back the House or the Senate or anything? Are you watching any of that? As far as you think it's going to impact prices or the outlook? I mean, I know you're watching the midterms.
Yeah. So on paper, it's a really interesting thought exercise, because on paper, the prospect of gridlock and just going right for it, impeachments. If Democrats win back the House, they're impeaching Trump. The question is whether or not there's enough votes in the Senate there, which again, 60 votes is a lot of votes. I don't think we're getting there. Does it really matter? Haven't we had numerous government shutdowns? Don't we kind of already have gridlock where, because of the thin majorities in the House, we can't get a lot of legislation going on? We can't get a Republican caucus that's unified. So what would fundamentally change in that regard? I don't know. I mean, I think the bigger concern for us is going to be whether or not the impeachments come. But in terms of the policy outcomes here, Congress hasn't done anything much meaningful outside the one big beautiful bill. So is there much of a change coming if Democrats win the House? I don't know.
Yeah, I think that's a fair point. It has been some gridlock for a lot of things besides for the big beautiful bill, whatever it was called.
You're not like, oh, Democrats are going to get elected and the government's going to shut down. We're doing that right now.
Yeah, right. I don't know what I'm doing here today in the S. I know I said last week I was thinking about iron condors. I think it's time for me to put one on and stop talking about it. I actually did have an order in last week for it. Time ran out. It expired. But yeah, looking here, 36 days out, there's, you got to go out to April 30th for the next monthly there.
Yeah, well, I'm actually working in the March 31st right now. Last week, we put on that short iron condor position, the 66.25 and 71.25 short strikes, going 25 points wide on either end. Right now, that's still a 44% probability of profit trade, risking basically 1 for 1, a little bit more than 1 to make 1. And the rationale there being that the lows that we have over the past several months, going back to September, are right around 6,600, and the highs that we have are right around 7,050. Even if we go over to the M6 contract, which is, taking a look at other, you say longer term beyond this current 36-day expiration cycle. 66.50 range low up to a high of 71. And we're pretty close to the midpoint. The midpoint of this trading range comes in at 68.70. If we're in a period where the market is going to chop, again, dispersion over directionality, then even if vol stays elevated and sticky, a market that just grinds around can work to our benefit, even if it's not typically how we have done well in the stock market in recent months and years.
Yeah, I have a trade working right now between 65.30, 71.40. The same one, the March 31st, 36 days out. I'm going to wait for this to get filled. I'm going to keep that on, unless, we get near the limits of that and see how it goes. I think we're in for some chop. I think it's hard to pick a decisive direction with a lot of these developments still happening and not knowing how they're going to turn out.
I do want to turn our attention to the Russell, where I have been an advocate recently, where directionally neutral in S&P of recent more. The Russell's still bullish. Today, the Russell's the hit hardest, 1.7% to the downside. If there is ever a place for the Russell to buck up and show some strength, this would be it. Not only is it the uptrend from the November 21st, and we'll call it the early February swing low, you likewise have your 50-day moving average coming into play here today, Thomas, which, for what it's worth, we have bounced from thus far. It would be another test of the 50, which after crossing through it back at the end of November, it was support here at the start of the year, and then again as we made our way through the early week of February. So failure to hold up at the 50, that would be a change in trend and relative character of this market going back to late November. And it would probably warrant a reconsideration of those long deltas that we currently have on. Looking at the Russell, quite frankly, I think that the futures, 30.8 IVR, given the liquidity in the Russell futures, folks may want to go over to IWM at the moment. That's how I'm handling things right now. I'm not crazy about, it's like kind of like with silver futures. They're great if they're working for you, but if you Hotel California yourself into a position, you can get stuck. And you don't want to get stuck. Thomas, bonds are finding a bid here. This week, we have a few auctions on the calendar, short end, belly of the curve, so no 10s, 20s, or 30s. But we will be looking at the 2, 5s, and 7s. Ultimately, it's a day where the bond market is finding a little bit more strength. 113 and 11 ticks here on ZN. That's up almost 0.5% right now. ZB, where are you? Up 0.6% here, 22 ticks. How do you square up the bond market performing the way that it is today when oil has been showing signs of resiliency? Is this just a market that's, defensive? Are we seeing a classic stocks down, bonds up kind of session, and we need not think further than that?
That I think that's like the simplest explanation. And I think a lot of the times the simplest explanation is probably the right one. I think that makes sense. I think that's what I'm going with. Kind of a war risk trade. And that's really all there is to it. Some safe haven demand coming in. War is going to happen, buy some bonds. I don't know. I think it makes sense when, you think simply about it. I didn't get in a trade last week. I was going to get long the ZN position. Not sure if it's worth it getting in right here. I think the Iran issue, it's going to stay visible. Now it looks like there's some pushback day to day. It's like hawkish, dovish on war. You hear about people like close to Trump, JD Vance, Kushner being a little bit more dovish, and then there's hardliners. But I don't know. It's hard to predict, what military decisions are going to be made. But the way the market's looking at it, I think it's like, a war on trade. You look at bonds, you look at what crude oil has been doing. You get a really small pullback in crude oil today. It's not much. We're still elevated. There's still premium built in. You look at the IVR, it's higher. I don't know if I'd buy right here on ZN or ZB. It's kind of ZN's coming out of this like nice bull flag pattern. I wouldn't be surprised to see us test the October highs, but I'm not sure if that's worth getting in there for me.
Well, Thomas, it was not worth getting in there for me because our best laid plans of mice and men, timing is more important than being correct when you're trading. The
I've
short
heard that before.
reverse iron fly died. Not at max loss, though. Went off the board on Friday. At one point, had been like a $1,300 loser. I think it goes out for like $800 loser. If maybe this had another week, it would be working out even better. You know, another day like today, and all of a sudden this thing is at 114. So could we have traded that better, made adjustments? Yes. Would I put the trade back on right now? No. Volatility is not, IVRs aren't negative. So lesson learned to a certain extent in those really, really, really low IVR. I mean, we need to give ourselves more time. If that was put on in early December and it's now late February, those shouldn't be 60-day trades. Those need to be more like 90-day trades for me to feel comfortable moving forward. So we'll explore that at a future crossroads, should the opportunity present itself again. But in terms of that directionality, you mentioned that it looks like we got some flags going on here. I would turn our attention to the weekly ZB chart, which, as longtime watchers and listeners of Futures Power Hour know, I've had this quiet obsession with the descending trend line from the highs that we had during COVID to the swing high that we had coming out of the tariffs, which over the past several weeks, really going back to September, we've been trading sideways out of that downtrend. If that means anything, if those major highs in the market around COVID and Trump's April 2025 tariffs, that counts for something, then this should be a meaningful break. Since September, it's been a sideways shuffle, maybe a triangle consolidation. Symmetrical triangles can go either way, but a symmetrical triangle coming out of a downtrend like this, which is breaking to the upside, we would think of as a bottom, a fairly significant bottom at that. So 118 right now, Thomas, we are in a place where, territorially speaking, we should only be looking at long deltas, looking to buy dips structurally. If the market goes up, we're on the long side. If it looks like it's going down, we take cash off the table. We look to get long exposure. But a chart that looks like this is not one that I want to sell. So with respect to ZN and ZB, given what they're doing and how they're behaving here, new positions may need to be applied and put on that above 114 in the 10s, you're probably looking at a new world where whatever weakness and hesitation that we've been seeing at the long end of the treasury curve, that's done. And we don't want to miss that move. So I will be on watch. Bonds and notes are definitely on my radar right now for a directional swing that I'm not comfortable putting on in equities.
Interesting. Yeah. So the long-term technicals are aligning with your fundamental outlook, I think you're saying.
Well, with my fundamental outlook, it's nowhere close to that.
Okay, man.
Well, all right. So let's go through like Section 122 tariffs. Let's say the courts deem them illegal, and the administration has to refund all of the money that was brought in over the past year. We were already running the largest deficits that the country has outside of times of war or COVID. What's going to happen to our treasury issuance? Will the Fed have to? That would be dramatically, diametrically opposed to my technical view, right? So I'm watching this right now. I'm really paying attention to the courts. If the courts don't need to refund the money, or if the courts are like, no, the administration, it's bad policy is bad policy. If it was, but we can't return, there's no mechanism to return the money. Consumers and businesses are just, out on their butts. Totally different impact on the treasury market than if issuances are required to pay people back. So the technicals are great. Ticker agnostic. This is looking like we may be on the verge of a significant breakout. And I got to keep that first and foremost in my mind because the price action is what pays us, not our opinions. And certainly never my opinions on what this Trump administration is doing.
Yeah, that's interesting. I'm going to watch this. I'm not going to get in yet, but It does look. It's starting to get enticing the more you talk about it.
Feels like we're
Yeah.
turning a corner.
Wish I got long last week. Yeah.
The belly of the curve, likewise in focus this week. Interestingly enough, the belly has shown throughout the 2010s, it showed greater sensitivity to changes in perception around the Fed's extraordinary easing measures like QE than either the long end or the short end did. So the fact that we're having fives trade so aggressively to the upside right now, in context of all the news flow, you're not seeing Fed rate cut odds move. And I think that's a really important tell here in this market today, Thomas. If we really thought this was a market that was getting jazzed up on the Fed, or back to where we were in terms of those cut odds from last Wednesday, we've been oscillating around the same levels we've been trading through all month. If the bond market is moving up across the curve, short end, belly, long end, and it's not with a dramatic escalation in Fed cut odds, the market is leaning into, and it's only one day, but my initial reaction, the market's becoming more open-minded to a recession concern, and that the Fed isn't going to be able to cut rates as fast as the market wants it. Maybe lower rates would be good for the metals. Maybe the news flow is good for the metals. Thomas, AI's eating the world. The paper that the equity for the stocks that you own is getting diminished every single day. So might as well own those shiny rocks. Gold is up nearly 3%. Silver's up 6.1%. We broke open higher yesterday. We also cleared out the highs that we had earlier this month. So it does look like the gold rally is back on track. As for me, I did take profit today in the short dated 4600. What was this? The 4600, 4625 call spread that was put back on weeks ago. So we're able to cash that in that max profit, which is very nice. The question is now, should we be looking at new gold exposure with some of the gains that we have on the books, Thomas, going out to 92 days, looking at a return to all-time highs? 5,600, we'll call it $5,700 an ounce. It's a big position, no doubt. But if gold is breaking out and we just rode out the entire pullback at the end of January into February to realize a gold trade north of $5,200 an ounce again, why on earth we wouldn't keep putting money back into that machine? This is a momentum trade after all, right?
Yes. I mean, breaking the February range, I'm going to be getting back in. So
click, review, and send. We will see you in 92 days gold at new highs. As for the other position that's currently on, sitting at 63 days, that's the 5,000, 5,100 call spread, which, that's 31. We go to 63. That's the 5,000, 5,100. It's working out beautifully today. But it's a market that's now behaving differently. And that's why I'm so jazzed over the metals again, Thomas, which after getting burned about a month ago, quite hard, did you notice that silver's doing something different than it had been doing in recent weeks? You go back to January 30th, we get a close below our 1 month moving average, that yellow line, and we have not successfully been able to place a close back above it since then. And yet here we are today with a gap open higher and we're running away with it. It's not exactly an island reversal where we gap open higher and pause and then close the gap the following session. No, we're up here today. We're back through that 1 month. We may actually see a bullish crossover with the 1 week moving above the 1 month. We haven't had that since January 30th, but the last time we had a bullish crossover here, you have to go back to November, which was the start of the uptrend. I'm not saying we're going to see another move like we did between November and the end of January in silver. What I am saying, though, is that the corrective price action, the characteristics that defined it, those have started to move on. Stochastics here, Thomas, likewise, getting ready to move back into overbought territory. MACD on the precipice of giving us a bullish crossover. And volatility, 88.8 IVR, up from lows that we saw last week in the 50s. So momentum's back. We're seeing the volatility profile reignite and the characteristics of the decline having been negated.
Yes. Yeah. Silver's an interesting one. Definitely breaking out here. Looks like we're wanting to. I don't know if I'm going to get in here. I think gold's going to be my vehicle to try to play this. Silver definitely, if gold starts working out and I get an itch, like I did back in last year, I'd probably get in silver too. But in copper, actually copper not behaving with the metals or the precious metals today, kind of different from what I think we've seen over the past few weeks. Gold, I'm going to get in a call spread. I think at the 63-day one, I will get in there and go out to probably, I don't know where yet. Maybe keep it a little closer, 5,300, somewhere around there.
It's not a bad way to play it. I just think we should recognize the fact on a day where it is a sea of red out there in the market. If you were to go to FinViz, for example, and pull up their heat map and go to their thematics page, there is one little green dot, and it's gold and it's silver. Now, I saw a question earlier. Could some of the news out of Mexico this weekend have to do with silver's rise here? It's a worthy discussion. Mexico is the world's largest silver producer. They produce twice as much as the next largest producer, Chile. There would be a place to look for that. So supply constraints, it makes sense, right? An oil pipeline's attacked, oil prices go up. Supply could be hit hard. But usually in those scenarios, what happens to the equity of the companies that owns those pipelines? The stocks fall. It's going to require greater capex money to fix the pipelines. Maybe they get state support, maybe they don't. But generally speaking, now more money's going out the door than anticipated. I point to Newmont Corporation because they operate Mexico's largest silver mine, and their share prices are up 1.65% today. It's my view, not saying this is the truth, Thomas, but I would speculate that if the news in Mexico over the weekend was something that was deemed to be materially significant to the country's silver mining operations, Newmont Energy would be under a great deal more pressure because the threat of their assets being materially impaired would be problematic. So silver, maybe it's getting some speculative news flow on what's happening in Mexico, but the companies that are publicly traded that actually pull the stuff out of the ground, investors are not saying, oh, we're worried about their mine being attacked and production stopping and they won't be able to continue on with the business for reasons that we did not anticipate. It's like it's a non-risk, in fact, if anything at all. But there's a way I think that we can look into this story a little bit more over the next few days. But my first blush here looking around, I don't think the Mexico news over the weekend is a significant reason why we're seeing silver rally today.
Yeah, I definitely agree with you. Cartels aren't going to go after mining operations, or at least that my knowledge of them, I don't think they would. Their MO is to instill fear, when they do it, and attacking mines doesn't really scare people. There's a lot of other things you can do that. I think you're right. If it was a big concern, you'd be seeing the prices impacted probably more to the downside. That said, yeah, I think it's something to keep watching if you're trading the metals, but I don't think it's something you really make your trading decisions on for right now, at least.
Not for right now, at least, Thomas. We keep moving forward as oil looks forward, and we're going to go to this chart here instead of that. We head over to crude, which is down by 0.5%, and it's had a really back and forth kind of day. Another weekend where we go into the weekend effectively near the week's highs, anticipating some sort of action by the United States towards Iran. And when we get to the Sunday open and the bombs have not dropped, oil has pulled back. So we have our gap open lower last night because the news out of the Middle East this weekend did not show us any images of bombs falling on Tehran. We find ourselves pulling back into the former highs that we have at the end of January, likewise the 1 week moving average. And that's where oil gets its initial bounce. So over the course of the session, it's been really decent two-way trading where first part of the day after the open, we start moving up. As we get into the U.S. trading hours, the news flow from Axios, the president's son-in-law, Jared Kushner, what a mensch. He's trying to solve the Middle East quagmire, Thomas. Him and Steve Witkoff, another one of Trump's buddies who's handling these negotiations as they are for Gaza and Ukraine. Quite the portfolio there. Apparently, they're pushing for more time, for more negotiations, for greater diplomatic efforts. And these are Trump's lead negotiators, after all. So a Thursday meeting is now planned between U.S. and Iranian officials. Oil has dropped from about 67.20 to about 66.20 since that news came out. This geopolitical risk premia, ebb and flow, matching the news here, Thomas. It's probably going to be another week where oil prices just bounce back and forth depending upon the latest CNN or Fox News or, I don't know, insert OANN story headline. But this is clearly the most important thing right now, and we have to keep watching it. Oil is not going to give up its gains until it sees a clear path out of the woods. And as long as those carrier strike groups, Thomas, are sitting around, then there's really no reason for oil to give it up just yet. Technically speaking, I think we should just watch that 1 week moving average, watch the former highs, 65.5, we'll call it. Above 65.5, we're good. On long still, below there, maybe see a pullback towards range lows near 62. But I really think that's the paradigm that we're working with. 62 to 66 when it looks like the attacks are less likely, 66 and above, as long as it appears that they could be imminent.
Yeah, I mean, like you said, I think it's spot on. You're going to be watching headlines this week. One headline might nudge us up a little bit. Another headline might nudge us down. Talk's good, talk's going bad, things like that. Until there's decisive action, there's a deal. If there's not a deal, we probably get some kind of military action because you don't move this many military assets to a region generally without using them in some way. So, it makes sense. I think the IV is going to stay a little elevated for now. My position that I still have on, and I feel fine having this on right now, is Iron Condor. I'm between 58 and 68, so we're at 66.20. I got $1.40 a room on the upside. Maybe I'll try moving those the call side up a little bit, give myself more room. But, a lot of premium's been baked into this already. If we get an attack, we probably do get a pop higher. I don't know how high it would go. Overall, I think the market still has oil that it's absorbing. There'd be disruptions, things like that. I don't know. I'm going to keep that on for now. Like I said, I'll give myself some more room to the upside. If I want to play more directional, I might put on an MCL contract outright. But right now, I think it's like you said, you're going to be seeing headlines nudges up and down a little bit. For right now, it looks like we're going to be waiting till at least Thursday. A lot of people were calling for an attack weekend. I think that was premature, but it's likely going to come over a weekend when it does. So right now, we could say, we can hold this trade or hold our view until Thursday, see what the outcome of the talks are, and then take it from there.
CLK6 contract. Much like what we're seeing in the CLJ6, I put these circles on the screen because after we break through the 1 month average at the start of January, Thomas, every little bump into that 1 month has been a place of support. And so that support's inching up here right now. Yesterday on First Call, we talked about how I was going to be fishing for a short put spread opportunity in the market because just last night when we were looking at the 52 days to expiration, there was no trading volume in any of the strikes I was interested in. So had to kind of press it a little bit. But now that we're back here and live, 63.5 is effectively where that 1 month average comes in the CLK6, 63.28 in the CLK6 contract. So thinking about 63.62, right? If I want to be bullish in this market, I could buy out of the money calls. And I have that old 70-71 call spread on from weeks back when the Iran news started becoming a little more prevalent and oil was still below 60. Would I want to put on a new call spread here now? No, because volatility is too high and it could be a market where oil moves up and vol comes off and all of a sudden I don't get what I need. So tactically speaking, if I want long deltas, I do think short put spread is a better way to do it. Yes, there could be a good deal of velocity to the downside if the US and Iran announce a peace agreement, of course. But given how oil has traded here recently and how vol has declined when prices have come in, being short a put spread now in an elevated vol environment, even if the market pulls back, if vol gets crushed enough, maybe this position isn't a loser, or if it is a loser, it's a smaller one. Whereas if a call spread, I could just be flat out the entire cost. So I think the short put spread is the better way to do this. That's one, okay? At 52 days, though, maybe we should be doing something different at 52 days. So I go back to the continuous, and I know this is a long journey to get here, but at the continuous contract, we find ourselves basically at the halfway point between last year's highs and the current lows that we had in November or December of this past year. So thinking about those up near 78 and down near 54, we could go to the 52 days. We could go, say, $2 wide, 52.54. We could go 78.80, and that happens to be right near the 1 standard deviation expected move over the next 52-day time horizon, Thomas. That's what this dashed line on the platform means. And so in doing so, there's your 62% probability of profit. There's your risking 3 to make 1. Fairly standard short iron condor type of math. I know that the Iran news is scary, but with a near 70 IVR and sitting at the halfway point of the 52-week trading range, this is the trade that I want to take right now. This is the typical tasty tactical 45 in, 21 out, closest to 45 in, 21 out as we can get. So short put spread if I want to be directional, if I want to take advantage of the vol and sell it and look past this next week or two time horizon, I go out to 52 days, I do the short iron condor. We can go $2 wide right at the 1 standard deviation move and get a fairly good risk to reward with a nice 60% probability of profit or so.
Yeah, I do like that iron condor out there. I mean, going up all the way to 78, it'd have to be a pretty intense conflict. I think maybe we could get up to somewhere like that, but ultimately it's sold off on the fundamentals. If you look at crude, the way it's been moving, it's been moving without corresponding effect in things like prompt spreads and stuff like that, where you usually see oil prices driven more on supply or demand. Right now, oil is being moved on geopolitical factors, and I mean, that's what you're watching right now. So it makes sense to do the trade this way, and you either say, the premium is going to come out of it, or you're going to get a little bit more premium. It stays in there for a little bit, but then it comes out.
Natural gas here today, Thomas. If I told you that there was a blizzard hitting here, and I think, what's the latest precipitation metric for me? Ross has 19 inches right now out where he is. We're currently at 16.3 inches of snow. Natural gas does not care, of course, down 2.2%. Because this is forward looking, not backwards looking. Thomas, IVR here, the lowest that we've seen in quite some time. The downside of today's IVR range puts us back to where we were in the beginning of December, which of course, natural gas was nearly $1 higher back then. So as someone who's had a little bit more success than me in this market, and as someone who's not trading this market because of my lack of success, please enlighten me. How are you approaching this given the sharp reversal out of the gate today?
The reversal doesn't surprise me. I'm not sure if it was driven by this huge, what do you guys call it up there? A nor'easter? That's what it's called, right?
Yeah. Yes.
So we do have to look forward because it's weather driven. We're at the end of the withdrawal season, so it's going to be getting a lot milder across the country. You're going to see these withdrawals stop, and then you're going to see, builds start as we get into April, May. Right now, if you look at the weather forecasting into early March, it looks like it's going to be very warm across most of the United States, even much of the East Coast. The only chance for cold weather is really in Maine, and there's not that much demand up there compared to the most of the other East Coast. So really right now, I don't see any chance for bulls to really recover this most recent rally. I think you're going to continue to sell down to somewhere around 2.7, 2.6 until you stabilize around there. I'd be really surprised to see if we hold these prices above 2.9 with this warm weather coming in soon. So if anything, I'm going to be trying to get short, maybe buying a put spread, so going long a put spread. The volatility at 39.7, we're kind of reduced compared to the past 12 months. I'm gonna have to get in there and look at the trades, but right now I'm leaning more to the bearish side than I am to the bullish side. And it's kind of flipped against what I've been doing the past 3-4 months. I've been trying to buy dips, wait for a rip. I think we're moving out of that environment right now because, like I said, March, weather's starting to moderate across the United States. So right now, I think playing the price action and technicals to the downside is probably more a better bet.
Thomas, we take a quick excursion over to the world of currency where the dollar continues to struggle. Tariffs off on Friday. Hey, risk on. Who needs the US dollar? It gets sold. Hey, tariffs are actually back on. Who needs the US dollar? And it gets sold. I'm a little more interested in potentially what's happening with our friend, the Japanese yen here today. I know it's only a 33.2 IVR, and that's not the high on the board. That goes to the Aussie with its 49 right now. The yen is potentially in the thrall of a policy divergence between the Fed and the BOJ. BOJ could raise rates soon. The policymaker last night gave a very circumstantial comment. If the yen keeps falling and the market doesn't stop pushing it lower, then the BOJ could hike rates in March. So where does that leave us? For me, as a yen long aficionado, I think that this is a market that's still bottoming. It's not a great looking chart, though. It's actually quite an ugly looking chart. The pound and the Aussie, perhaps more viable opportunities. The British pound, I'm still leaning short deltas here, Thomas. I like the fact that we broke our uptrend from the November lows. I like the fact that we're struggling below the highs that we had in mid-January, which were the lows in early February. I like the fact that we're failing against the 1 week, the 50-day, and both the 1 week, the 50-day, as well as the 1 month all have negative rates of change. So the dollar doesn't look great, but nothing has fundamentally changed. If we go back to the top of the show, where are the effective tariff rates now? At the same place they were under IEEPA? Is Section 122 even legal in the form and fashion that Trump wants to do it? Will the courts challenge? So, but the fact that the dollar still can't get itself off the ground, if it's good news for the tariffs or not so good news for the tariffs or war in Iran, and doesn't look like a healthy currency. And gold and silver are telling me everything I need to know about the dollar still. So I'll be looking for selective opportunities right now. Short pound, long yen. I guess that means I'm a long, or rather a short pound yen person in the spot market. Do you have any strong feelings on FX right now? Because I feel like a little jumbled.
I wouldn't say strong feelings. I do agree the pound looks like a good technical short. I'm actually looking at a trade in that right now. I'm probably going to put something on there, but strong feelings, no, not really. I mean, we'll see what happens.
I like being a person of strong convictions that are held exceptionally loosely as a trader, right? Pound the fist on the table one moment and argue the other side the next. I don't feel like there's a really strong argument either way at this time. What's next on the calendar? We don't see much of anything tomorrow by way of significant economic data. And quite frankly, there's not much this week on the US side of the equation. However, Fed speakers are back on the lecture circuit. There's a lot of them tomorrow. I count a Bostic, a Collins, a Walker, a Cook, a Barkin, and a Collins again. So at least 5 unique Fed speakers, 6 total speeches. Let's see what the Fed has to say post-tariffs, right? Couldn't they think that the inflation impulse is over and now there's a reason to cut rates sooner? That'd be fun. Thomas, we don't need to speculate on that, though. We'll hear from what the Fed has to say tomorrow, but there's more Tasty Live coming up well before that. Dr. Jim Schultz is coming up next with From Theory to Practice. I'll be back later on today with Ilya for Overtime for Eastern 3 Central right after last call. So go get yourself some coffee, sandwich, some lunch. Thomas, I don't know what people eat in Chicago, but what I can tell you is I'm going to go shovel some snow right now. Good luck trading.
Yeah. Have fun with that.
See you in a little bit. Yeah, see you in a little bit.
Look who's back testing. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Welcome to the Armageddon Has Arrived edition of what it is that we are trying to do. Thank you guys for being here and being a part of what it is that we are trying to do, because it's only because of you guys, it's only because of you guys that we can do what we do. So thank you guys so much for being a part of the network and being a part of my show and all the other things we have going on here at Tasty. If you are watching over on the Tasty Live network, then that's good. That's a good decision. But a better decision would be to hop on over to YouTube, because if it is real time, if it is right around Monday, February 23rd, 2:30 Eastern time, give or take a few hours, you can hop into the chat and communicate with your brethren who are also watching the show. Man, you can celebrate if you are a bear today. You can commiserate if you are a bull. But of course, it's going to be a good time had by most. So Josh, bring us into the market. Man, it's not good out there, guys. I don't know what y'all did to it. I don't know. Even the S&P is down 80 on the day. A little magenta Monday for you guys. Risk-free instrument, also known as the NASDAQ futures. Not exactly risk-free. And here today, you've got the NASDAQ down 350. You've got the boomers down 833. And then you've got the Russell 2000 futures index down 53 on the day. You got bonds up a little bit, flight to quality. You got notes up a little bit, flight to quality. You got UB40 up a little bit, flight to quality, obviously. Look at the Shifties up 148 on the day. The Hunt brothers probably doing something similar. I'm pretty sure they are. Cancel the cheese and pepperoni. Silver up 517 on the day. And so, yeah, the metals are rallying. The bonds are rallying. Volatility is obviously going to be rallying. Got volatility futures up 78 cents. And then you've got the VIX, the old spot volatility of $2.16 on the day. And so, yeah, obviously on a day like today, market down a lot, volatility is going to be rallying pretty hard. That makes perfect sense because of this reliably inverse relationship between market prices and market volatility. And so that makes perfect sense indeed. Across the board, I mean, guys, this is not good. I mean, man, look at this. So look at that. So if you're brand new to trading and you just tuned in, welcome aboard. I hope that you come back. This is not what you should be striving for on a daily basis. What you see in this magenta oval, this is essentially what you should be working to not have happen to you. This is essentially what you should be working very, very hard to avoid in your own personal portfolio. Really red P&L days, really red P&L opens. I mean, we got the P&L day bros. We got the P&L open bros. Like they're all coming for us here on a day like today. It's not good, man. It's not good. It's not good at all. But we're going to go through a couple of things here in the portfolio in the next few minutes. And then, of course, we are going to get to you guys. I want to see where you guys are at in the chat. But first and foremost, guys, huge announcement. Fairly like mega pint sized announcement. So there's a brand new show that is starting today that is hosted by yours truly. There is a brand new show. This is a YouTube only show. The first episode is going to drop on YouTube at 5 o'clock Eastern. Let me think. Yeah, 5 o'clock Eastern, 4 o'clock Central. The name of the new show is Calculated Risk. And the first episode is going to drop tonight or today, whether night, afternoon, whatever. It's going to be 5 o'clock Eastern. It's going to be a daily show. Every day we'll have a new episode going up, completely original content, brand new ideas. I mean, we're basically saying the same 5 or 6 things every single day. So it's going to be some recycled repurposing of those same 5 or 6 things, but it's going to be brand new. Right? Brand new content, brand new show, same B- humor. It's all coming your way today at 5 o'clock Eastern, 4 o'clock Central. So make sure you're on the YouTube channel. You're hitting it with likes. You're hitting it with subscribes. You're doing all the things. You're giving it that watch time because your boy needs it. And so, yeah, definitely hit that guy up later on today. So, okay. Well, there you go. You got a little market commentary, got a little calculated risk announcement, which is kind of fun and exciting. So let's go into the I just scanned I just scanned the chat really quick. I see you guys, man. Look at you guys. Joel James in the house, Sergio. You guys are just, man, I see the Jumbo life and I see Jared Kramer talking about banana natties on a Monday. So you guys you want to hear a funny story about banana natties? So over the weekend, I was driving around. I can't remember where we were going. We were going somewhere as a family. I can't remember. But it was me and my wife and the kids were in the back. And my wife was asking me about the show. It's like the third time she's asked me in 10 years. So I was like, oh, okay, that's kind of nice. And so we're talking about the show a little bit. And I'm just telling her about the new things that are going on, whatever. And then I started talking about banana natties. And she's like, well, what's a banana natty? And so I had to explain to her, because obviously, I mean, she was there for the banana daiquiri, because I mean, that was on her honeymoon. So for a week straight, I was slamming banana daiquiris. And it was absolutely my peak. Like everything since then, all downhill. But that week of banana daiquiris, man, that was my apex as a human, as a man. Like it was unbelievable. And so she knows all of that. And then she knows about the Natty Light Ice and like, you know, how that was a big hit for me in college. It was cheap. You know, it was nasty, but it was awesome, right? And so then I told her about how the banana natties kind of came together. You know, the gimme and the gotcha met perfectly there in the middle, and you have a banana natty is indeed born. So anyway, she knows all about the banana natties, but you guys are making me laugh, man. Oh, it's so good. I love it. Oh, I love it. I love it. I love it. All right. So, and of course, pump the algo. That is your number one job today. All right, let's go in here though. So what's going on? No time for banana natties right now. We got serious stuff to get to. So let's go into, so yeah, I mean, lots of red on the screen, obviously on a day like today, market's getting hit pretty hard. So anything that you're bullish, right? Anything you might be bullish, anything I'm bullish, whatever, like obviously it's going to be getting just, you know, just torn to shreds. I mean, that's just the way that it is on a day when you've got EME S&P's down over 80, NASDAQ down almost 400, Boomer's almost down 1,000. And so where are my Dow 40,000 hats? Because we might need those here pretty soon. The 50,000 guys are going back on the shelf right behind the molasses. But yeah, when you're bullish on a day like today, it's going to hurt. Like there's going to be some pain. And so you have to understand what you've signed up for. And so when I look at, you know, positions that are bullish, like short put in MES, right? Short put in MNQ. Short put in AMD, short put in Amazon, right? I mean, I've said this many times before on the show. This is my number one favorite strategy. Like I'm asked all the time, Jim, what's your favorite strategy? It's by far and away the short put. And by far and away, I mean the short strangle is kind of a close second, and then the ratio spread is maybe an even closer third. But the short put is my favorite strategy. Like when I think about it and I think about all the different moving parts that might exist in the world of options or with a specific strategy, the short put just checks too many boxes. Now, For every gimme, there's a gotcha. The gimme of all the boxes that the short put checks come alongside the gotcha of the few boxes that it doesn't check. And so you have to understand that with the short put, when the market does go down, especially if it goes down a lot, like a day like today, you're going to be getting hit from a few different angles. You're going to be getting hit on the delta effect. You're going to be getting hit on the Vega effect because volatility is most likely going higher, just like it is today. And so understand that it's not all strawberries and sunshine. Like every once in a while, like you're going to get hit with something that's just not going to work out so well. And a day like today is a perfect example of that. But you see it in the portfolio. I mean, I'm short put in MES. I'm short put in MNQ, right? We're short put in AMD and we're short put in Amazon. Now, MES, MNQ, and Amazon all share the common denominator of they're all out of the money. And so for all three of those, the do nothing strategy is certainly in order. And so again, if you're out of the money, I talked about this with Tony and Nick this morning on the skinny on options abstract applications when we were talking about break-even point losses, right? Which might seem like a bit of an oxymoron, but definitely go back and watch that show in the archives. If a position gets to break even too early in the cycle, it's most likely going to be showing losses because the extrinsic value is going to be increasing, the option prices are going to be moving higher, and those things are going to be working against you as a premium seller. But when you think about, a short put that's in the money or just premium selling just in general, again, if it's out of the money, it's doing its job, right? If the position is out of the money, then it is on its way to hitting whatever profit target that you might have. Now, obviously, the further it's out of the money, the better it's going to be for you, and the easier the job is going to be for you at the end of the day. But still, any point of out of the money-ness is good for you, right? More out of the money is better than less out of the money, but any out of the money is acceptable. So when I look at an MES, or I look at an MNQ, or I look at an AMZN, then I'm saying, hey, this is out of the money. I'm not going to do anything. Like this is out of the money. I'm going to go ahead and sit tight and let's let the strategy work. Now, AMD is the one that obviously is not like the others. And so AMD, let's even grab, we'll grab some Glacier Freeze. Yeah, we'll do a little something here. AMD at 195, we are short a 210 put. So being short a 210 put, stocks at 195, it was, believe it or not, worse just a couple of weeks ago, right after earnings when AMD went down to around, I'm going to say about 190. And we exercised the do nothing strategy then. I think it's still in order now. Now, of course, could sell the call, could do some things to neutralize directional bias, but I want to see how this week plays out. Right, we're at 25 days to go, I think, in the cycle, right? Let me go ahead and, is it 25? Yeah, 25 days to go in the cycle. So we're going to be adjusting this guy one way or the other come time the end of the week. For right now, I kind of want to sit tight. I really want to lean into our ability, our option, pun intended, to do nothing, right? Small enough on entry, you have that flexibility. Let's do nothing and let's just give this guy a chance to maybe recover back in our favor. And then later on this week, when we go to roll it out, if we choose to roll it out and not just take the loss or whatever, maybe we'll add the call at that time and neutralize some directional bias. But for right now, I'm going to continue to lean on the do nothing strategy. So AMD, Amazon, MES, and MNQ. So there you go, man. We covered 4 in one fell swoop. It's never been done before. It's never been done before in the history of From Theory to Practice. And so, all right, so we did those guys. Let's now talk about, we have Home Depot earnings tonight? Yeah, we do. I think, Josh, so thank you for that very, very much. So Home Depot earnings tonight, man, that's crazy. That's crazy stuff. And so, I mean, I'll light some stacks of cash on fire. I mean, sure, why not? So GDX up to 109. So I think the time has come for us to make an adjustment on this strategy, however. So, the metals are ripping again. Like, we're back. Like, man, we took a solid 20-minute nap there. But, man, the metals are back. You've got silver at almost 90. You've got gold back to 5,200 and some change. It's like, man, we are 100% back with the metals. So, GX, you got the stock up to almost 110. We have a 95, 103 strangle on. So, I think for our purposes here, let's go ahead. Let's roll the put up. We'll straddle it off, very similar to what we did in oil. And we'll go ahead and roll the whole thing out to the April cycle. So both of those things are going to bring in more credit. Both of those adjustments are going to allow us to have more premium to work with. It gives me more premium to work with and essentially gives me a wider break-even point on the upside. It doesn't give me a wider break-even point on the downside because I'm moving that strike up. So even though I have more premium to work with, I'm actually going to have a worse, quote unquote, worse break-even point on the downside. Let's actually look at that really quick because I want to make sure that's kind of clear. So if you look at GDX, right, I've got a 95. Let's get out the Final Jeopardy pen really quick. 95, 103. Right, so these are obviously my 2 strikes on the strategy. Let me grab a different color here. So if I grab my yellow now, so we have a trade price of $8.87. I'm just going to call that $9 just to make it really round and easy to work with. So if I go to figure out my break-even point on the top side, it's going to be 103 plus 9, which is 112. If I go to figure out my break-even point on the downside, it's going to be 95 minus 9, which is going to be 86. And obviously now we're writing all over like quotations and numbers and stuff, and this is turning into a hot mess. But still, hopefully you guys can kind of figure out what we're doing. And we're writing like right to left. I mean, this is some crazy stuff. And so my break-even points right now are 86 and 112, right? So if I roll this thing out and up, now we're going to see the actual prices here in a second, but let's just say I roll it out and up, I pick up another $4. Let's just say, right? We'll see the real numbers here in a minute, but I don't want to navigate away from the screen because we've already done so much work. I mean, look at this, man. It's a masterpiece. We got different colors. We got, all kinds of things happening on the screen. I don't want to lose all this work. And so if I go in here and let's say I roll this whole thing, I roll it up and I roll it out for $4. So that means that I'm actually going to be able to add 13 to the upside. So now my break-even point on the upside would be like 116. So you can see that the rolling up and the rolling out of the strategy is helping the break-even point on the upside. The problem is it's not going to be doing that on the downside because my 95 strike is no longer going to be the 95 strike. It's going to also be the 103 strike. Because again, my thinking here is, well, let's roll up to the straddle. Let's straddle it off and kind of, help to control risk a bit more prudently, right now before gold potentially slips away from us on the upside. The gotcha, of course, is if gold reverses and it's like now it comes crash, boom, banging back down, we'll wish we hadn't done anything. And of course, that is the benefit of, the rearview mirror. It's batting. I mean, Roman Anthony is going to probably bat about 420, 430 this year. The rearview mirror is going to be right about 410, 415. So it's in the conversation, not quite Roman Anthony-esque, but still pretty good in its own right. So 103, if I take 103 and I subtract 16 from that, you're going to see my break-even point on the downside is 87. So it's actually not as impressive as it was before. And so my break-even point was actually better on the downside before the roll, but now after I roll that guy up, I'm in a situation where, the break-even point is still okay, it's still very manageable, but it oftentimes does kind of deteriorate on the downside, or on the untested side, I should say, because that's not really the goal and that's not really the objective. And so let's go into GDX here. Now it's time to go ahead and erase all this. So it's a little bit sad, but there it goes. And so, all right, so GDX, I'm going to do this in 2 pieces like I normally do, just because I think it's easier to see. I mean, we could do it all in one fell swoop, but I think if you're brand new and you're brand new to adjusting strangles and kind of just got started trading, I think it might be beneficial to see someone actually slowly kind of walk through the different pieces of a rolling of the untested side and then also a rolling out of the whole strategy. So rather than having it all kind of compressed into one trade, we break it apart. It's a little easier to see the different moving parts. So if I go into GDX here and I go to, all right, so let's see. If I go to the March cycle, let's take our 95 put. I'm going to buy that back and I'm going to sell the 103 call. So that right there is going to bring me in $1.80 credit. So you can see just by rolling up the untested side, I pick up another $1.80. And then what we're going to do after we do this is pick the whole thing up and push it out to April and then drop it in the April cycle. And that, of course, is going to bring in even more premium because whenever you add duration to a short options trade, you're always going to be compensated for that. Like you always have to be compensated for your willingness to bear unlimited risk for a longer window of time. Like that just makes kind of common sense. And so if I look at this roll up from 95 to 103, looks like about $1.80. So let's go ahead and do that. $1.83, that's fine. All right, so we got filled at $1.85. How about that? Okay, so we got filled for $1.85. Now, let's do the same thing. Well, let's stay in the same stock, I should say. It's not the same thing. It's a very different thing. Let's highlight both of these guys and roll it out to the April cycle. Wow, look at that. We're going to pick up another $4 for this roll. So I wasn't too far off. We're going to pick up about $6 total for the rolling up and then the rolling out. I thought it might be closer to 4, but hey, I'll take the extra couple bucks. And so now we're rolling the whole thing out to April. And I'm doing this now because we're already adjusting this position. We're at 25 days to go. we're going to do something one way or another on Friday anyway. So let's go ahead and do it now. And then we'll have the straddle in GDX that we can manage, moving forward. At some point in the future, we may choose to go inverted. We may choose not to go inverted. You just got to watch the show to find out. And so let's go ahead and let's roll this guy out to, okay, Phil. Wow, GDX, man, it's trading like water right now. So there you go. So GDX, we are now in April with a straddle on, and we have collected a total of $14.85. And so again, to figure out the break-even points, just add that premium onto, each strike. So my break-even point on the top side is like 117, almost 118. My break-even point on the downside is like 87, just under 87, almost 86 actually. And so those are my two break-even points on the trade. And so there's the GDX adjustment. Okay, let's go ahead and do man, I see you guys in the house. Man, I appreciate you guys so much. Let's go ahead and do Home Depot. So if I go into Home Depot, let's see here. Home Depot is in the morning, I think. So yeah, Home Depot is tomorrow morning. I really feel like when you just think about Home Depot, right? Just as a thought experiment, you have to be Home Depot or Lowe's. You can't be both. Right? This is like saying that you've got Pepsi and Coke in your fridge. You don't. You've got one or the other. Obviously, it should be Pepsi, but I understand that some people haven't quite seen the light yet, and that's okay. Home Depot and Lowe's, very similar thing, right? You can't be both. It's one or the other. And when you think about the two, right, I think this is a pretty obvious choice. Right? I think this is pretty straightforward and pretty straight-laced. It's got to be Home Depot, right? Like you go to Lowe's kind of feels like they're trying a little bit too hard. Like you go into Lowe's and it's like, all right, I don't know if they're exactly sure about who they are. They feel and seem a little bit insecure. But you go into Home Depot, they tell you exactly who they are. Like, are there a bunch of people working there? Not necessarily. Right? Can you find what you're looking for? Probably not. But you know what? When you walk in there, it kind of feels like home. It kind of feels like, yeah, this just feels right. So I think for that reason alone, now you may have other reasons, like technical reasons or quantitative reasons or even probabilistic reasons, and that would be amazing. But for me, that's enough to play this thing to the upside. So I think we go to April. Let's go to 53 days to go. We don't need this thing to work out right away. Let's do something a little bit longer term. I'm kind of thinking, it's a $400 stock now, right? So we're not doing anything undefined risk in here because we can't. It's going to be too big from a position sizing standpoint. So we've got to do something defined risk in here, which, oh, by the way, first episode of Calculated Risk is about defined risk tonight. Well, how about that? Man, it's almost like I knew that the first episode tonight was on defined risk. It's almost like I had a part in developing the content for that show. It's crazy stuff, man. It's some crazy stuff. So let's go into Home Depot, and I'm kind of thinking, what if we just sell a put spread? What if we just sell a put spread and we just go ahead and, $10 wide put spread, $375, $365, $4.20 credit? Man, that looks mighty nice. That looks mighty nice indeed. And so max loss is going to be about $5.80. Max profit is about $4.20. So we're risking about $1.50 to make about $1. And there you go. Right? It's just a very, very plain vanilla short vertical spread for earnings. There's a bunch of other things you could do for earnings. You can do expect to move butterflies. We do those all the time. We'll probably do some more later this week. You can do strangles. You can do short puts. You can do at the money vertical spreads where you buy it. I kind of think, man, let's be a little bit more strategic than maybe just an at the money long vertical that we buy. And let's sell a vertical that's just a little bit out of the money, but it does allow us to tap into a slightly higher probability of profit, slightly higher P50, of course. The delta is going to be positive. We need the stock to go higher. The theta is only a little bit positive because you have that defined risk nature of the kind of the watering down effect of the weeks. Hey, that would be a great episode for calculated risk. Man, it's a good thing we're doing this thing every day because there's so many things to talk about. But yeah, I like this. I like this trade. It looks like we're going to sell it for about $4. So let's go ahead and just push this guy out there and see what happens. All right, so no takers at 4. Let's try let's try 395. The markets are a little wide, which is surprising, but for Home Depot, that's a little bit surprising. The Home Depot markets are usually fairly liquid. Try 385. No takers at 385. Wow, is Home Depot rallying? Not really. That's kind of weird. Let's see here. Let's try 375. Man, I'm not going to just... All right, so we got filled at 376. Okay, so there you go. 375, 376. There you go. Okay, so there's Home Depot earnings, and there you go, man. So we did it. There's a bunch of other things happening in the portfolio, obviously, but I want to make sure I get to you guys. I want to make sure I spend time with you guys. They're in the chat, and let's get in there, man, and start slinging some money at each other. And so, oh, by the way, Snapchat down 19 cents, and so it really is over. Like I kind of thought we had a chance, but apparently not. So, all right, let's see here. Let me see if I can surprise and delay. Can I surprise and delay somebody in the middle? I think I probably can. Where are we at? Here we go. Sparky Dog. What's going on there, Sparky Dog? This is a surprise and delight in the middle. I see lots of Banana Natty comments, which is great because you know who loves to see the Banana Natty comments? Myself and also the algo. And so we appreciate you very much. Sparky Dog. Doc, on a big down day like today, would you rather sell a put on a stock that is way down or sell a put on a stock that is not down as much as the others, or maybe even on a stock that's up? This is a very good question. So this question kind of speaks to, or at least my answer to the question, and I guess the question too, since they're kind of inextricably linked. This really speaks to how a given trader might view the market, right? Some traders like to buy things that are showing strength. So some traders like that. They want to see some strength before they get long. They want to see some weakness before they get short. And so this could come in a multitude of different forms. It could come in, the market's going down and then you see a little bit of a retracement, a little bit of a rebound, and that's enough to trigger, okay, I'll get long at that point. You see the market, going up, and then you see, just a little bit of a drop off, and okay, maybe that's where I'll get short. Or you've got obviously your breakouts for the momentum traders, your breakdowns for the momentum traders, and you can do all of those things from a kind of momentum type of framework in terms of buying strength and selling weakness. That's one way to look at it. Another way to look at it is to just say, man, my objective here is to try to buy relative low and sell relative high. And I'm not talking about from a technical standpoint. I'm talking about in even a more general framework, even a more generic way. I'm just trying to buy things that are cheap and sell things that are expensive, just generally speaking. Now, sometimes I buy them first and sell them second, and other times I sell them first and buy them second. It really doesn't matter. The way I view the market, I much prefer to not even necessarily wait for, some signs of, recovery or rebound. If something is dropping, I'm going to be looking to get long. And if something is rallying, I'm going to be looking to get short. Now, that could be, catching falling knives or rising knives or whatever the case may be. But even still, in a market that I firmly believe there's a ton of ebb and flow, there's a ton of back and forth, there's obviously lots of buyers and sellers, where most of the time it's just kind of meandering around. Now, of course, over time, it generally goes higher, and there are plenty of days like today where it's going lower in a big, big way. But if you look at a chart of over any length of time, you don't see a straight line down or a straight line up. I mean, every once in a while, like once every, 14 years, you'll see something like that. But that is so, kind of rare and uncommon. You're going to see it kind of make its way lower and kind of make its way higher, if you will. And so personally, to get back to your question there, Sparky Dog, I would much prefer to sell a put just on something that's going down. I don't need it to be showing any relative strength. I don't need it to necessarily be, breaking out of some range or some pattern. If something goes down, I'm going to kind of tap into my inner short-term contrarian, rightly or wrongly, and I'm going to be looking to sell some puts. If something is going up, then I'm going to tap into that same inner contrarian, rightly or wrongly, and I'm going to be looking to sell some calls, right? And so that's kind of how I view the markets. And so take that for what it's worth, and hopefully that helps you a tiny bit. And so, man, let's go back to the beginning. I see you guys in the beginning, man. I appreciate you guys. Look at iPod Touch. I see iPod Touch snuck in before the official comment to start the show. iPod Touch, we did it again. Man, look at you, man. You called it. You absolutely called it. I mean, you said the same thing every day for about 4.5 months, but you finally nailed it. You finally 100% nailed it. Nice job, iPod Touch. You are doing it out there. EME S&P's down 79.25. iPod Touch called the event horizon again. And so the last two event horizons, man, he called them 90 to 95 times. And so nice job there, iPod Touch. Very, very well done, my friend. Big Deal Donuts in the house. What's going on there, Big Deal Donuts? I appreciate you. Org Denu is in the house. What's up there, Org Denu? Hello, Dr. Jim. It's time to learn the gimmies and the gotchas that makes life interesting. That's correct. That is correct. Did the size video come out today? It did. It's coming out tonight. Right. Again, Calculated Risk, episode number 1. Tonight, 5 o'clock Eastern, 4 o'clock Central. Be there. right? You need to be there. And when you watch it on YouTube, watch it at a half X, because then your boy gets double the watch time. I actually just learned that the speed with which you watch the videos, it actually factors into the watch time. I had no idea. Like, that's crazy. So if you watch it at like 2X, then, you know, your boy only gets half the watch time. If you watch it at like 4X, we only get a quarter of the watch time. That's crazy, man. Like, that's so crazy to me. Like, it should all be kind of the same. Like, it should all just kind of be, you know, on an equal playing field, but it's not. It's not. And so it's coming out tonight there, Orgdenu. I appreciate you, my friend. And speaking of gimmies and gotchas, a very, very proud dad moment. If I could wax poetic for, you know, 1, 2, maybe 8 minutes. My kids now, all three of them, Penelope, who's 11, Eli, who's 8, about to be 9, and then Amelia May, our assistant for the show. She's 5, about to be 6 in 2 weeks from today, actually. March 9th is her birthday. She'll be 6. She's very, very clear with the concept and very, very excited, obviously. But what's really, really cool about all three of my kids now is they actually process life through the lens of gimmies and gotchas. Like, they will very frequently say, well, that's the gimme. And then my son, like Penelope will say, well, that's the gimme. And then Eli will say, but where's the gotcha? I'm like, that's right. You got to be on the lookout because it's always there. And I'll even hear them talking about it with each other. Like, they'll say it back to me, of course, because I'm the one that brought that into their worlds. But I'll hear them like analyzing a situation, and they're like, well, what are the gimmies and the gotchas? Like, we need to think about this and, you know, kind of get a list of the gimmies, get a list of the gotchas, and then we make our decision. I'm like, there you go. I love it. And so A. Will's in the house. Dr. Jim, how about a HIMS earnings trade? And yes, they're still in business. Are they really? They're out there doing the thing, man. How about that? HIMS, $15 stock, man. Let's go. We just buying stock now? Maybe. They have earnings tonight after the bell. Man, a $15 stock? I don't know if I can do it there, A. Wills. I mean, what am I going to do in here? Like, all kidding aside, it's like there's not really any premium to sell. I mean, I could sell the at-the-money put for $1.20, I guess. But I kind of feel like with an expected move of a couple bucks, it makes more sense to just buy the stock. Like, if I was going to play the earnings, which I don't know that I am at this point, with it being a $15 stock, I'm probably going to pass on this. I really feel like, you know, the move would just be to go straight stock. Long or short, you could go either way. And so Josh said he's long. So hold on, let's short some stock. Let's see here. If I go in here, I can go ahead and I can do something on the bearish side. Now, thank you, Josh, because I wouldn't mind making a little bit of money today. I think, you know, given the fact that Josh is long, let's sell this 16.5 call. I wasn't going to do it. But again, I mean, when you see a pile of cash in the corner, do you not pick it up? Of course you do. So let's go ahead and sell this 16.5 call in HIMS for 85 cents. I mean, this is it, man. Like, this show has really taken a turn. Good thing we've got calculated risk coming on down the chutes. Again, shameless plug today, 5 o'clock YouTube Eastern, 4 o'clock Central on YouTube. 16.5 call for 85 cents. That's really, man, this show has really become something. But let's do it. Buying power is only $600. Let's just kind of see if we can get filled on a HIMS short call. For 84 cents. How about that, man? That's really something. All right, we got filled. So thank you there, Josh. I appreciate you, my friend. I wasn't going to do anything, but then again, you know, free money's free money. And so Sam L, Doc, AI analyzed the macro situation. 1600 calories for your cheeseburger, fries, and aioli. That's not a cheat meal. That's a leverage position. Yes. Yes, we went to brick and mortar. I already told you guys about this. Yeah, we went on Friday night. I got the burger. Like I told, I mean, this was all given to you guys beforehand. I gave you all the ex ante analysis. And when I got there, I just executed, man. I just followed the plan. I just trusted the process. I didn't try to be somebody I wasn't. I didn't try to go off the reservation with, like, you know, grilled octopus or braised short ribs. It's like, yeah, those might be okay plays, but let me go with the tried and true. But what am I going to do? I'm selling puts on down stocks. What am I going to do? I'm getting the burger at brick and mortar, right? Once again, there's no reason to reinvent the wheel. And so thank you there, Sam. Yeah, it probably was every bit of a couple thousand calories, I would imagine. And then Samuel says, Doc, we need that TA expertise. Check out the HIMS chart from 70 to 15. Wow, we just got bearish. Man, we're selling them in the hole. How about that? Well, Josh took us down on that one. What's that pattern called? The timber? Earnings tonight. Can it go even lower? Burn and stack of cash activated. It is indeed activated. Now I feel even worse about this because I just got done kind of lecturing you all about short-term contrarians and buying things when they're down and selling them when they're up and whatever. And here we are getting short HIMS at the literal bottom And so, yeah, there's no way this is going to work. But anyway, thank you there, Sam L. Wolf Wolf is in the house. What's up there, Wolf Wolf? I appreciate you, my friend. Let's see. Oh, there we go. Hold on. I lost you guys there for a second. I just lost the, oh no. Oh no, I lost where I was in the chat. Oh my gosh, how about that? So I actually somehow scrolled and I lost the chat. So I normally go sequentially, but I can't now because somehow, because of the way that I scrolled, I lost like the first maybe 10 or 15 comments. And so I'm going to miss some of you guys in the beginning, which I never do. And so my apologies. So I guess we're moving into an extended version of the surprise and delight section of the show. But I see Rhett's Media is in the house. Rhett's Media is the next one that I see. He says, hey guys, with SLV up, I finally sold a 100 call in March to go with my 100 put in March. That's underwater significantly. Try to make some premium back. Yeah, Rhett's SLV was like, yeah, it was over 100 on the top, right? A couple days ago, or a couple weeks ago, I should say. SLV. Let me see here. Is that a daily chart? That's a weekly chart. We're doing weekly charts now? Wow. Yeah, okay, so daily chart, yeah, this thing was up to 110, almost 110, and then obviously a pretty big fall from grace there. And so now it's back down to 79 or 80. And so, yeah, I mean, relatively speaking, I mean, this might be the time to sell some calls. Yeah, sure. So, Rhett's Media, good luck to you, my friend. Rhett's Media goes on to say, of course it's short. I tried to get $100 to buy some Girl Scout cookies, and then they pulled the rug on silver the next night. Silver was at 103 for 103 or 104 when I saw that 100 foot, and then the rug pulled silver, yes. And, I mean, I understand the struggle, man. The struggle is real, right? I mean, those Girl Scout cookies aren't going to buy themselves. Right? I mean, you've got to go ahead. You got to pony up some cash. And so hopefully your silver trade works out for you there, my friend. Jared Kramer is DCAing into some more Netflix today. Netflix getting hammered today? I would imagine they are because everything is kind of getting hammered. I mean, Netflix down 245. That's not too bad. I mean, Tesla's getting beaten up pretty bad today, right? Yeah, down $16. That's pretty bad. You got AMD, Advanced Money Destroyer. Oh, yeah, that's in my portfolio. Down to 194. Yeah, that's pretty bad. What's Apple doing today? Apple up today. Well, look at that. It truly is a flight to quality day. Okay, Apple up $2 today. Look at that. All right. Big Deal Donuts, what's Netflix IVR compared to other streaming services? I don't know if you mean that in a trading way or just in like an actual everyday life way. Netflix IVR is 40. Apple's IVR is only 20. And then Amazon's IVR is 30. And then I'm trying to think, Disney, obviously. Disney's another streaming service, 21. So Netflix appears to be on the higher end of the range from a streaming service IVR analysis standpoint. And so maybe it's a good opportunity to sell some premium. In fact, hold on, Netflix. Wait a minute. When do they have earnings? We probably have some time here. Yeah, hold on. Oh, it's on April 16th. Okay. I'm going to do a little something in Netflix here. Let's go ahead and let's go into, rats. Can I do this April 2nd weekly? Maybe I can. Oh yeah, the markets aren't too bad. So I don't normally do weekly options. Most of us on the network stay away from the weekly options most of the time. Obviously for earnings and whatnot, that's going to be a little bit different. But for putting on like a regular trade, typically staying away from the earnings, the weekly cycles, I should say, because the liquidity in the weekly cycles is just a lot worse than the monthly cycles. But the monthly cycle did have earnings in it. And so I'd like to stay away from that if I possibly can. And so I'm kind of thinking here, doing the April 2nd weekly at 38 days to go is kind of nice. And the markets aren't really that bad. I mean, you're looking at less than 10 cents. I mean, it's like 5 to 8 cents wide on the put side, similar on the call side. And so with it being a $76 stock, I can kind of do whatever I want to do in this stock, which is kind of nice. And so I'm kind of thinking, yeah, let's get a little bullish in Netflix. And maybe we sell. I mean, we could just sell like a 34 Delta put. I mean, if I sell the 73 put here, you can see the buying power is only $1,200. So that's only about 4% of the account. The pop is 70%. The P50 is 81%. And I mean, everything else about the strategy really checks out, right? Positive Delta, positive Theta. Maximum profit is my credit collected times 100, of course, because it's 100 shares per contract. And then the maximum loss would only happen if Netflix went to zero. Is it possible? Yes. Is it your theoretical max loss? Yes. Could it happen? Yes. Is it likely? Only you can decide that, but I'm going to say no. And so Netflix at 38 days to go for a $2.42 credit. Man, let's go. So let's see here. Netflix. 242. All right, we got filled. So there you go. So we're in a little bit of Netflix, and very, very nice. So thank you there, my friend. That came in from that was Jared Kramer. So thank you very much. Argent parabolas can get a lot bigger heading into 300 plus. Oh, I think you're talking about silver. That's good stuff. And let's see. Oh, Big Deal Donuts was asking about Netflix too. Destiny says silver is the new GME. Yes, it might be, man. It might be. That would really be something. Like if silver was back to like if silver futures or even SLV, it depends on which one you look at. But if SIL or SI, if you're a big dog shooter McGavin, if this thing was back to like 55 or 60 in the next like month or two, that would be pretty crazy stuff, man. To go from 120 to 60 in like a quarter, I mean, that would really be some kind of Hunt Brothers type of deal there. So yeah, SIL up $5 today, looking pretty strong. And so E-Media is in the house. Fubo versus Netflix. Yeah, I do a little Fubo when I need a free trial or something, like a playoff game or whatever. I'll do a little Fubo. I mean, I'm not paying for it, but I'll do a little free trial action. Let's see. Big Deal Donuts, Death Sneeze. Oh, Joe LA says banana OG. He's digging it. And so it feels so weird because I can't, like, obviously these are like continued comments from the first comments, and I lost them all because I scrolled on the screen and I messed the whole thing up. Let's see. JT's in the house. I appreciate you, JT, very, very much. Death Sneeze, 11 and a half ounce Cokes. Yeah, you're talking about the little mini guys, right? The little mini guys. I don't mind the mini guys because sometimes I honestly only want a few sips of a little Diet Pepsi. Ah, man, the nectar of the gods, right? No question, right? This is not up for debate, but sometimes you only need a few hits, right? So sometimes I'll just kind of microdose Diet Pepsi throughout the day, and that's where you get kind of those little mini shooters that are kind of nice. But let's see. Argent Per, GME was shorted for about 10 years. Silver's been done wrong for 100 plus. That might be right. That might be right. So that spring would be pretty loaded to the upside then for lots of upside action. Let's see. Grumpy Mike says people voted for chaos. Yes, apparently they did, my friend. And so it's here, baby. It is here. Like it's all back, 100%. Double down, triple down, quadruple down, like it's 100% back. And by 100% back, I mean tomorrow is Tuesday, so Taco Tuesday. Let's go. And so let's see. Weatherman says this is terrifying. I think you guys are trolling me now because you got EBSB's down 85, right? Only 4% off of all-time highs. I think we're gonna make it. And by that I mean if you don't have the bunker materials in your driveway now, it's too late. Grumpy Mike, I'll leave my door unlocked. Make it easier. There you go. Jared Kramer, man, you guys are getting after it. Chaos and crimes. We doing some cowboy stuff. Let's see. Oh, here we go. Big Deal Donuts. What's going on there, Big Deal Donuts? How much does an ES or NQ lose or gain for every 1 to 5 points in volatility? Is there a common percentage? Okay, so this is a pretty interesting question. So when volatility changes by 1 point, let's say, so volatility changes by 1 point. So if I go to the VIX, for example, you could use the volatility futures too. I'm just gonna look at the VIX. Here's kind of the way that I think about it. And again, this is a very, very back of the envelope way because what you're asking for, I don't know if there's a common thread that's going to connect those two things together. When I think about it, though, I think about it in kind of an archaic way from the standpoint of if there's a 1% change in volatility, or I'm sorry, a one, they're not dollars, but if there's a 1 unit change in volatility, so if it goes from 21 to 22, let's say, because that's not a 1% change either, that's like a 5% change. And so a 5% change in volatility, is that going to equate to, a 5% change in the markets? No, because volatility is going to be a lot more kind of, a lot more volatile, pun intended, than the overall market. What is the actual, what is the conversion factor? I don't know. And so when I think about volatility changing and, futures products changing or the actual notional value change, it's not as simple as using something like Vega, which tells me how an option price will change. It's going to be a bit more complicated. And so honestly, when I think about it, I kind of just go back to just the archaic relationship of, market up, volatility down, volatility up, market down. How much it's going to be, that's really, really difficult, I think, to kind of gauge on the front end. Just understanding that big moves in volatility 5%, 10%, 20% are probably going to mean some big moves in the market. So 1%, 2%. It's not going to be a 1-for-1 mapping though, because volatility does move by a lot more. But wow, I gotta go. I gotta run. We're out of time. I appreciate you guys, man. I appreciate you guys so much. Make sure you check out Calculated Risk tonight at 5 o'clock. And if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, everybody. Well, it is a fantastic day. All the stuff I've been talking about, all of it is happening before our eyes. Gold is thriving. Equities are falling to pieces. Bitcoin's getting killed. It's just wonderful. The charts called all of this, and things are just lining up. All the stars are lining up. And as I've said before, politically, it's really interesting because the current administration, I mean, the stock market's all they got left. And another thing I noted, which also transpired, was, a couple of weeks ago, I guess about 12 days ago, I think, when Bondi went off on, in the Epstein, on the Epstein question, just said, look at the Dow, 50,000. It hasn't seen 50,000 since then. I mean, it's just like any atheist out there have probably converted to religious zealots at this point. I mean, if you need proof of a higher power, that's it. To shriek out that, the Dow at 50,000 and God's like, boink, and, it just stays below it ever since. And hopefully until the end of time, that'd be cool. So yeah, it's extraordinary that she, beat in the punch bowl that badly. But until today, things are just kind of, I described it last week as sort of like a little fracture here, a little splintering there. And I was a little concerned this weekend because the bulls definitely could have run away with this market today. And I didn't really know how much the, Friday tariffs are 10%, Saturday rubs eyes, another 15%. I didn't know how much of an effect that would have. And I was watching the IG weekend markets, and they showed things down like 0.26%. It's like, well, at least it's red. But yeah, today things really have been hit. You couldn't really tell until, at the open bell, things were still looking fairly strong. And, but then they just fell to pieces. And I don't know the specific reason. It doesn't matter at all. I'm a chartist, not an interpreter of what causes what. Is it tariffs? Is it the debt? What have you? But it's falling, and that's all I care about, so that's great. Let's look at some charts together because the stars are really lining up, and I thought we'd kind of review some of the things we've been talking about. We begin with the diamonds, which I was obsessed with last week. And what we spoke of last week was perfect support here, a little bit of damage on Thursday, and a little more damage on Friday. Of course, it reversed hard and rallied, but that was a tell that something's up here. Because interestingly, the anchor of the trend line was, of course, Liberation Day, was Trump's tariff stuff, and the cessation of that trend line support was the same man and the same topic. So we've got there's no splintering now. There's no fracturing now. It's busted. It'd be broken. And that's terrific. That's a big step in the right direction. Very exciting. The spider is still grinding it out. Now, it broke its own trend line a while ago. And this goes to show, it's not like when a trend line breaks, the next day the market crashes. It just means that uptrend is done. And as with here, weeks have gone by, it's just sort of grinding away. The key here is this distribution zone. And if it can break below the lower bound of that rectangle, things get kind of saucy. A big one for me today was IWM, the small caps. I had a big position, March puts, which for me is aggressive. I know some of you are like zero DTE people and such. For me, like 8 weeks out is like zany. So these were like March puts as opposed to June or September or even January I got. And that worked out because the IWM was the weakest amongst them. I got out of them at a good price for a change, and they did not break support, but I was short them and long the puts and got out of both positions. And like I say, it was the weakest of them. The island reversal pattern was our signal there. This resistance is held the whole time, and the big win on this would be if we can break below this trend line. Now, this is a week with a handful of interesting earnings. Dell is a good example, but the big one, of course, is NVIDIA. That's Wednesday, about 20 minutes after the close. We'll get the data on that. We'll look at the NVIDIA chart later, so I'll save my comments for that. Now, those of you who have watched me even a little bit know that my whole shtick is bullish precious, bearish equities. And bullish precious worked great until a few weeks ago when it's not that it did poorly, it just kind of stalled out. And as I mentioned on the show, I took most of my actual physical silver and sold it for 113 an ounce, I believe. Good timing because silver crashed hard a couple of days after that. But long term, I'm still a big bull on them. And gold is something we've been watching by way of GLD. And as I mentioned last week, this was the key resistance. And I specifically said on Friday that this may just bust through it, and that would be big news for the precious metals fans out there, because this is kind of the short-term resistance we've been grappling with. Well, we got above it. It's above it nicely. The gold futures at the moment are up $163 plus, and silver is up much bigger in percentage terms. So yeah, it's the nations of the earth are looking at the U.S. and being like, well, U.S. dollar not so great. Precious metals are great, and equities, I think I'll take my profits. And in some cases, it's kind of a struggle. I mean, moments before the camera clicked on, I was like, should I sell these puts on CRWD, I think it was? Because some stocks are just getting torched, but they just keep falling. And any shorts I've covered and any puts I've sold, I usually wind up regretting. Like IBM is a good example. I had a bunch of IBM puts, sold them, some time ago. IBM's falling to pieces right now. And I'm not showing the Microsoft chart today. Microsoft was over a $4 trillion market cap company back in October October 28th, I think. It's less than 3 trillion now, I believe. I know over $1 trillion in shareholder value has disappeared over the course of November, December, January, and a couple of weeks we've had here. So over the span of 15 weeks, $1 trillion in one company, poof, gone. It's a big deal. It's a big deal. There's many trillions to go across the board, but these are not nicks and scrapes. These are like explosively destructive because they were so high. And Microsoft is not some little weird biotech startup. It's like Microsoft, one of the biggest companies that ever existed in human history. So things are cooking. With gold so hot, naturally miners are doing well. They are near a lifetime high on the close. So miners are doing great. But turn our attention back to equities. I've got, as I mentioned on Friday, I had a zany number of short positions, like 43 or something. And I'm still close to that. I've got 40. Haven't exactly been like taking money off the table. I've moved some things around here and there, but on the whole, even more aggressively positioned than I was on Friday. Here's a few to talk about. Bath & Body Works, BBWI, down almost 7% on this, away from this really nice right triangle topping pattern. We have CRM, Salesforce. This is down about 4%, just falling day after day. And I saw over on Zero Hedge, I think it was, they were touting, of course, almost every article is like, JP Morgan says this, Goldman Sachs says that, Bill Hurnett says this, it's the same. But the latest one was like, I think JP Morgan or Goldman Sachs, some giant firm said, you should buy software stocks. Because why? Because they're so cheap, which is like total greenhorn philosophy. Like, why are you buying that? Well, because it's really cheap compared to what it used to be. Well, they just keep falling dramatically in some cases. And so there's no bottom to this. So yeah, Salesforce down again. They just keep weakening. DKNG, DraftKings. I've talked before about stocks. Stocks can be down 90%, and they still can be great shorts. So it's not like they have to be at lifetime highs to be shortable. That's not true. In fact, that's almost exactly the opposite. You should avoid stuff that's at lifetime highs because they usually just keep getting higher. The stuff that's weakened 20, 30, 40, 50, 70%, sure, take a good look at that. Look at the chart. Look at where the support and resistance are. Look at the trend lines. And are there any classic patterns there at play? Here's another one I'd never heard of until a week or two ago. DT, we talked about it here. Dynatrace, down 5.25%. Here's another one I'd never heard of until recently. We talked about here also. Futu Holdings, FUTU. And that is nearly a perfect topping pattern. And it is breaking down. And just expect great things to come. I mean, across the board, like I said, I've gone from 43 shorts to 40. What have I done with the other 40? I'm just tightening up stop loss orders and just housekeeping. Nipping and tucking. INFY. This, of course, is Infosys. Ignore this huge data error. I can't do anything about it. Nor can I do anything about the fact that cursor keeps dying. Hang on. We're back? Yeah, we're back. Envy is down over 5% also. We all covered all these recently. These are just really good patterns, and we've definitely talked about them because I remember that data spike. But yeah, Envy's down too, and it's got, I think, plenty to go lower. IoT, another sort of obscure one, and another quite nice pattern. I'd give it kind of a B. Not a B plus, maybe a B in terms of quality, but it's moving in the right direction. It's down over 8%. Here's another kind of crazy looking chart, Lumen, Lumn. This is a little bit murky because we had a base here, we broke out, and it got sort of stalled out and fell hard. So this is, I made the mistake last week of looking at the whole chart. It takes too much time. But the big picture definitely shows that there's plenty more downside potential to this. It's just a messy, messy chart. Talked about this one too. TOI, the Oncology Institute. This is a really beautiful head and shoulders top. Absolutely perfect. I mean, this is textbook. Left shoulder, head, right shoulder a little bit lower than the right, right shoulder a little lower than the left. A neckline, a breakdown, a retrace to the neckline. This is Edwards and McGee 101. Down 1.37. No, it's not huge, but it's a lovely pattern, and I think it'll eventually express itself fully. Run out of time. Let's pick up the pace. Ion Q. I mean, what I'm going to say about all these is the same. They look really nice. They're going down. Isn't that something? KMX, which is Carmax. RCL, lifelong nemesis here. Royal Caribbean Group, really behaving nicely, down over 3.5%. Our old friend Sophie, SOFI. Look at that beautiful rounded top on that one. Down again, 4%. Here's the one I was anguishing over before the show, CRWD CrowdStrike. Down almost $43. I've got puts on this, and they're doing nicely. But I look at that. I look at the kind of jagged pattern. It's like, maybe it's time not to be greedy. I think I'm gonna sell these before the market's over. Probably when I say goodbye, I'll just whip right around because it's a nice profit. Although nowhere is it written that it won't keep falling. But listen, 40 positions is enough. Take a profit here and there. Here's CRDO, Credo, and this one has not fallen yet mightily, but it's down 3% today, and it's a lovely rounded top. Dash, this is DoorDash. This is one that I did sell my puts on today. Yeah, but that worked out. Uber, UBER. Another terrific rounded top. There are so many great looking patterns these days. They're all over the place. Now, let's talk really briefly. I've got 30 seconds left, and this will be the last one. Now, I really should show you one more thing. NVIDIA, I'll just say really quickly, I covered my short with a pipsqueak profit on this. I don't want to hang on to it. It's an ugly chart, and by ugly, I mean I can't do anything with it. We've got earnings coming up Wednesday afternoon, and it is very important, of course, to the SMH and the cubes and the whole market in general. But it's not clean at all, so I'm out. There's that. And then I'll just close with what I'm saying so on these days. Keep an eye on Bitcoin. It's so important. Crypto's down thousands of dollars now. Bitcoin's down thousands of dollars. Percentage-wise, 5.52%. This is an enormous head and shoulders top, and if this thing heads, as I believe it will, to as low as 25,000, there's going to be a lot of changes afoot across all asset classes. So that's it. Really good day, and across the board. And I hope you're doing all right. And I will see you tomorrow. I hope you're doing well. Bye bye.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions, and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back, and it's a bloodbath in single name equities with the market basically chopping in the same range we've been in for quite some time. You've got E-mini S&P 500 futures 68.50. This has been our kind of bounce spot. Down 73 on the session. They were just down about 80 or 90. They've rallied about 10 handles here in the last 10 or so minutes. You got the NASDAQ down 320, the Dow down 773, and the Russell down 43. Everything down between 1 and 1.5%. The Russell actually the weakest of the group, about 1 2/3%. Oil selling off a tiny bit, down to 8 cents, 66.40. It got as high as 67.28. You've got volatility futures upticking a little bit here, /VX 2087. We got as high as 21.25. So vol is high, but not at the high of the session. Bonds up 18 ticks. We almost got into the 118 handle. 117.24 was the high of the session. Gold and silver continue to climb higher. Gold's up 52.47. It's up $166, about 3.25%. You got silver at 89, up $6 and change, about 7.33%. And then Bitcoin, who cares about that? That thing trades like it's going to zero. And in quick order here, you've got the Bitcoin futures down 3,500, spot down 500 from the open of the session at night tonight, or last night. Some of the bigger moves in the market, though, I've got a position in CrowdStrike. It's down $41, about 10% today. You got Anthropic coming for IBM today, down $32. Here's some of the other cybersecurity stocks like Net. Even if you just go to IGV, we were talking about this on the break. Software names down another 4 or 5%. You know, you've got even like Google down a little bit today. You got NVIDIA kind of staying a little bit bid here into earnings middle of this week, and Apple as well has been on the stronger end, but it has felt like way bigger of a move to the downside than just the 1% from all-time highs, or close to it.
Yeah, it has, and a lot of it has to do with those names that you mentioned earlier. I mean, you're seeing some big names get hit here. IBM, that's a huge move today. It's also still, you know, part of this is kind of like Groundhog Day, the movie, a little bit. We've seen this in recent weeks where we've seen the software names down, some tech names down, assorted few of the Mag 7s down, but yet you have Walmart up today. You have Coke up, Pepsi, Procter & Gamble, Lilly. You even have oil names up, even though oil is been kind of flat most of the day. It was positive earlier, but you got Exxon is up 2%, along with Chevron and a couple of other oil names that I'm seeing here. So there's still somewhat of that rotation happening on these days, you know, like out of tech, out of software into these consumer defensive names, if you will, consumer staples, however you want to call it. The different caveat today, I would say, is that bonds are up. And you mentioned gold and silver. Look, them moving is nothing new, but they look like they're coming back with a vengeance today, and it almost starting to look like it's a bull market in gold and silver again after a couple of weeks of dormancy. So I would say those are the big things, but I mean, we gotta start with this software thing. I don't know, man. I think I kind of changed my feeling on them today on OTCL when we were talking, the three of us, me, Mikey, and Ryan. I generally feel that everything will be fine. That's kind of how it goes.
Yeah. Nothing ever happens kind of thing.
Yeah, most of this will be fine. It's particularly when I feel like, and a lot of us keep saying this, maybe Microsoft is the one to worry about. I don't know. But we feel like that's just such a strong company underneath and everything. However, right? I will say, though, there's probably some names in the top 10 of the IGV, and there's a lot of, you guys can look them all up. I mean, I think ServiceNow is one of them. CrowdStrike is in there, whatever. I think there might be some of those names that might get eradicated within the next year or two. I'm just saying, based off of some of the moves we're seeing. I'm only saying that out of ignorance in a way. I don't know enough about these names and how they do business to really determine. I spent a long time since I really paid that much attention to that, unless it's a huge name. Yeah. For the most part, I just watch price action. Price action's telling you that people want out for whatever reason.
I agree. For me, it feels almost a little bit like reactionary, like everybody, like you're saying, it feels like it's just, there isn't a bid in sight. It's just, everybody just wants out of the stock. And I feel like that's usually a good time to step in.
For sure.
Maybe this isn't, the bottom, but it feels like it's getting to that point. I mean, I keep wondering what can AI disrupt? I guess Walmart is one of them. Coca-Cola. I can't really make soft drinks, I guess, but it's starting to feel like the consensus is like that all these stocks are just dead, and that's usually the point. We were talking about COVID. Like during COVID, it felt like when we were at like, what did we get to, 48 or 5,000 on the E-minis at one point, something like that. Everybody's calling for another 20% or 50% or whatever. And then that was like kind of it. It feels like we're getting to like the point where it's like, you're getting these Anthropic tweets, these, single name stock tweets going at IBM, all these sort of things feels like it's kind of gotten to the point, but maybe I'm just.
Well, I think you make a good point. And again, you've clearly investigated a little bit more than me. Like, I mean, I guess when you made me think about it, I did remember CrowdStrike obviously is more of a cybersecurity related name. You would imagine that they're going to be incorporated into AI as opposed to being eradicated by.
Yes.
We talked about, and again, we're just speculating and spitballing here. Intuit is one of those names where a large part of what they do in their revenue is based off of software that probably can be replicated at some point or another. Yeah. Was that stock supposed to be an $800 stock anyway? I don't know. Is it going back there? That's what I question, right? Like that's one where as much as there's a huge haircut there, I don't know how comfortable I feel buying the dip in there. Adobe is another. We've been talking about this for a long time. Adobe is one of those where, a lot of the stuff that's being done now with AI can obviously be replicated.
These are back to prices. Adobe is back to the price it was at the bottom in COVID.
I mean, look, man, stock market is rarely wrong when it comes to these situations as far as determining the value of things. Now, again, I'm not saying this is at 246 on its way to zero, but maybe it's at 246 right now. Maybe it bounces back to 345. Does it bounce back to 500? I think that I'm saying all this because I know a lot of people look at these things and they're like, oh, this is crazy. Look where it is, 245. This was at 500 not that long ago. I'm going out 6 months and buying the 500 call spread. I don't know if that makes sense. You know what I mean? Like in real talk, I know people are out there doing that or looking at that. That is the thing that happens a lot when it comes to rebounding and using options because of the leverage. But just remember too, something that far out of the money also expires quickly. So that's my point. And then it's like, well, maybe I should just sell a put spread here in some of these. And maybe that's worth doing. Again, being defined risk, I think is probably the best way to trade some of these because it's really, a lot of it is out of fear, like you just said earlier. A lot of it is out of fear, the way that these are trading. And you may be right, but it might not work for all the wrong reasons.
Yeah, and I'm glad you brought that up because I've been selling strangles in some of these names and some just naked puts. But I agree, like if you're a little bit on the fence on these stocks specifically, doing the put spread or a call diagonal spread or a calendar spread even, because a lot of these stocks, there's 60, 70, 80% implied volatility here across the curve. Like I'm looking at CrowdStrike, you got 60% implied volatility in April and 73% implied volatility in March. You got 10, 11 points of vol that you can sell for a calendar spread or a diagonal spread. And you don't, it would stink if the stock goes down and you're long a call diagonal spread, but it's at least defined risk and you've got that short vol component to it. So you got a little bit of decay as well. So that's where I've been kind of leaning strategy wise versus some of the naked positions. For the naked positions, I think now is kind of an interesting time to put something on in a gold and silver via GLD or SLV. If you don't have those on, the skew has gotten, right back to kind of where it was at the highs. So I did some strangles there, like in GLD today. I did it with GLD a little bit lower. So I'm out a couple bucks here, but I'm out about $1 here. But I did a basically delta neutral strangle where both the options are trading at about $5 to $6. I sold the 450 put and the 525 call in March. The 525 call is $45 out of the money. The put is $30 out of the money. So you're getting like almost twice as far out of the money selling the same delta option in both gold and silver. Mm-hmm. So those have become more interesting than they have in the last couple of weeks. I also did a really wide iron condor in SPX. Is this the bottom, or are we going to stay in this range? I don't know, but
what expiration did you?
I did the March 20th, the weekly expiration, so it's the monthly expiration, but the PM settled options.
Yeah.
I prefer the PM. I
always do too.
I think it's just an easier trade to understand. The AM options settle in the morning to the settlement price, is SET. The last day to trade those options is the Thursday prior to the expiration. Mm-hmm. So there's a little bit of nuance there. But I just went and did like a wide, I went 50 points wide, but you could go tighter than this. But selling basically the one standard deviation strangle and buying whatever wings that you're comfortable with to just capture some of this vol. I mean, you have a VIX at 21. Like you don't get that opportunity all that much. Is this the bottom? Is this the high for vol? Is this the bottom in the market? I have no idea, but those are the sort of things that I'm kind of looking at. If you want to get away from the stuff that is just getting nuked by AI.
Yeah, I think that's what you have to do right now. I mean, this is as much as we're talking about it, certainly not complaining. This is that kind of market. I mean, there's actually a lot of different things to do. There's a lot of different ways if you want to trade those software names. I got to say at this point, if you want to lean long delta, totally makes sense given how far down these names are. But just make sure you give yourself a little bit of short delta too, probably selling an upside call spread on one of those bigger high dollar names, $10 wide. You know what I mean? Yeah. If you sell like 2 or 3 $10 wide put spreads, you should sell at least one upside call spread in one of those type of names.
Just to have the short vol.
For sure. I think you have to at this point because who knows how it's going to be? I think we're all waiting for the day where they all rip to the upside, short covering move. Yeah. But
you think that'll be the move? Like it'll either be like you think it'll be the V bottom. I'm afraid, and we've kind of had it all year this year of just kind of the choppy. It's been volatile, and we've had a little bit of an increase in volatility, but we haven't had an explosion in volatility. No, it's just been this kind of choppy grind, and vol staying kind of middling. It's a painful trade across the board, whether you're long static delta or short static delta via shares. If you're out of buying premium out of the money, it's kind of a grind fest. Even if you're selling premium, you got to kind of be scalping out of it, taking off calls into downside moves, taking off puts into upside moves, that sort of thing. It's kind of been a trader's market, which is tough for non-traders, right? For people that are just trying to kind of catch momentum or just statically long. Do you think that sort of market continues, or are we going to bust out of this range at some point? Like, is it going to be the AI is overblown and those stocks V bottom and the market just rips higher, or it's not overblown and these stocks are going to zero and the market just gets killed?
I feel like I think we could break down before we eventually break out.
Okay.
And the reason why I say that is because, again, the reason why it's been choppy, if you look at the heat map today, it tells you everything you need to know. I mean, I mentioned those names that were up earlier, the Walmarts, the Exxons, the Lillys, and all that of the world. You have, slightly just NVIDIA and Apple are pretty much the only ones that are in the green, which again is enough. That's big enough.
Yeah.
Microsoft's down, obviously big with this software thing. Palantir and Oracle, same deal. CrowdStrike. Also, two today, by the way, which we need to get to, is these financials, bro. It's lost in the mix. American Express, Visa, JP Morgan, Wells Fargo, MasterCard, Capital One. I actually don't even know. Was there something some legislate? We've been doing a lot here today. We've had a lot going on.
Anthropic is doing payments too.
I mean,
why not?
I mean,
that's what I'm saying. Is like we've gotten to the point where it's like, okay, AI is doing everything. Are we? Is this doomsday? Are humans obsolete?
I'm selling a put spread in Capital One and JP Morgan and MasterCard.
There you go.
Now that is
long
like
American Express and Visa. So I'm with you on that.
I'm okay. American Express, yeah. For
I
real.
did,
Come on,
diagonal spread in American Express.
Let's stop the madness. Let's stop the madness.
It's a little. It's spooky though. It is spooky.
It is, but we got to stop the madness at some point. I'm getting short of put spread and Visa. Let's send that out. No fill a check. Come on.
See, you did mention NVIDIA, which has earnings middle of this week. Is it
correct?
Wednesday that
I think
Wednesday
so.
after the close. NVIDIA has earnings. Yes, Wednesday after the close. You got a couple today. HIMS after the close today. I've traded it a couple times, not trading it for earnings. You do have Home Depot tomorrow morning.
That is tomorrow morning, isn't it?
Yeah, some smaller ones that like Cipher Mining, which is CIFR. That's been kind of an AI play as well. But for NVIDIA, do you feel like NVIDIA? Because I look at this, I'm like, oh God, we're getting ahead of ourselves. We're getting all bearish into an NVIDIA earnings, and NVIDIA could just turn around and just save this market like a little stick save kind of thing.
It could. I mean, that's what we hope for. But well, first of all, I think they're going to have good earnings. If we fall, it's not because they had bad earnings. I mean, and again, this is not one where shouldn't be a capex problem for them, right? I mean, I don't think so. I mean, I don't see why NVIDIA earnings takes us down. It could be, if it happens, it's some other made up situation. I don't think it's NVIDIA earnings is terrible. We should sell the whole house. Like, I don't think that's the problem. I don't foresee that happening, but maybe I'm wrong.
Home Depot, can AI hit Home Depot? I guess that's retail, payments, but I mean, that's all. You can't. Home Depot's got to be good.
No, I mean, you still gotta go. I mean, it can give you recommendations, I guess. First of all, it can help you find what you need in what aisle. I mean, damn, like it's kind of hard to find. It's kind of hard to find exactly where you're going, unless you go every day. Unless you're a contractor, it's a little hard sometimes.
If you didn't know this, on the app, Home Depot has an app.
They tell you where things are, right?
Yeah, you're right. They tell you the aisle and the like row that it's in. It's actually quite.
I just did a whole tranche, 4 names in the financial space: Capital One, Visa, MasterCard, American Express.
I did Home Depot. I got long call diagonal spread. I'm long the 390 in April, short the 400 in the March expiration. It leans you about 15 long deltas there. So playing for
upside,
inside, up.
What'd you do?
I went to April. I bought the 390 call.
Okay.
And then I sold the March 400 against it. The bid-ask spreads are not very tight.
They are not.
It's not great. I put it in it's marked at $6.35. I put it in at $6. It got instantly filled.
Instant
to give you an idea of you got a $2 wide bid-ask spread, and I went 34. Oh, I just saw you put that order in at $6. You didn't get filled.
No, I didn't.
It just moved.
The
reason I say that is because the mid price just went to $6, so I imagine Jamal's the only other Johnny
exactly who's doing it right now
with a one doing that.
I might just go my patented calendar call spread for earnings here. We got expected move $15. I'm going to say they're going to beat and they're going to get around 400. We're going to start. Let's see how much 390s.
Well, $15. That puts you at 390.
Yeah, I'm starting with a 390. How much is a 390? Oh hell no. 390s for $3.25? No way.
No.
We only do these for $2 or less. That's too damn expensive. For
a little earnings gamble.
Well, hold on. I did do regular March. Hold on. Let me just do 1 week apart. 390. That's better. 135. I can do that. I can live with that.
There we go.
Start at 390, and I'm also going to do a 400 one. just in case, because you just never know.
Yeah, you gotta have something.
Yeah. There we go.
Amazing. Other stuff that we have as friends here, putting our trades on together in solidarity. We do still have the refer a friend bonus that you can earn if you open up an account. You tell your friend, give them your link, earn a couple bucks here for you and them. $100 going to each party here. Open up an account, support the team.
That's a good friend who does that.
That's a good friend.
You know what I mean?
Friend. Yeah.
It's a good friend.
Yeah. I don't have many of those, but a couple here and there. Everybody here, these are my only friends. My only friends. Only people that listen to my insanity.
Yeah, these are weird markets in this Home Depot. I'm trying to get filled on call calendar on the upside for. That's because the 400 is bid and it's moving around. That's why. This is ridiculous. I'm 20 cents, for him. 20 cents away and it won't fill me.
AI coming for him, stock down like 80%. I don't want any piece of that. It does have earnings after the close today.
There we go. Filled me.
There you go.
You bastard. You filled me way higher too. You son of, never mind.
E-minis down 80 here. We've sold off about 10 handles in the last couple minutes here. Volatility, it was kind of surprising because we talked about this morning, which I didn't even think about. My dad brought this up, of the storm in New York and the East Coast kind of dulling liquidity today just because, people are going to be dealing with snow, have internet outages, whatever. We've had about 1.3 million contracts.
You know what? This is exactly the narrative that the New York people, and he's not even a New York guy anymore, okay? He's a Chicago guy. I'm tired of him talking about New York all the time like he still lives in Brooklyn, okay? He lives... I forget that if I'm not going to say the town, I know it's just undisclosed. Now I know but he lives there, okay? He lives here in northwest suburbs. Okay, come on, stop it.
I told him, I'm like, listen, Boomer, you can trade from the cell phone.
That's a little thing that we do.
Yeah,
don't trade him the cell phone.
If I can see the sky, I can, trade some options here. No big.
I would expect this from Chris, not him. Not him. Okay.
But I am a little bit surprised that vol isn't up a little bit more.
The volume, yeah, 1.28.
I wanted to see a little bit more volume, a little bit higher volatility. Those two things would have been good to see for a capitulation type move. I'm kind of with you that it seems like we've got more.
That's the thing.
See more downside before the real.
That's the thing. We're so
washout.
We're so clued in that it feels like a little bit like capitulation, but truth be told, we're only down 1.2%. I think there's also maybe a little bit of hesitancy to start the week.
Yeah.
You mentioned some of the things we got going on this week. I didn't realize until like literally as the opening bell that we have State of the Union this week.
Yes.
I think that could end up being some type of catalyst.
That's
no telling what might be said.
The poly market odds on those are probably the most volatile thing you can trade right now because who knows where he's going to go this week.
Yeah, and then like you said, we got NVIDIA earnings coming up on the 2 days from now, 2 days after the close, Wednesday after the close, and then we got an end of the month. Excuse me. End of the month flows are entirely possible. Not to mention, don't we have a PPI this week? I think on Friday we have an inflation report.
Vecchio has told me those don't matter.
Yeah,
they don't. He doesn't care about them, and if he doesn't care about them, there's no way I can care about them because they don't mean jack to me. You have PPI on Friday, the 27th.
PPI on Friday. So, maybe that's part of why there's only 1.2 million contracts traded. But, again, 1% move in the range, as far as the range that we've had today in the ES, that definitely means something. And it's been over 2 weeks now since we've actually touched 7,000. So it's looking further and further away. You know what I mean? Like, that's why I'm a little bit worried. Like, if we keep holding this a lower area of the channel, all it takes is some bad news.
This has been the spot, though. 68.50 has been. We've hit that spot and bounced every single time this year. Been the spot.
It has. We haven't closed below it, though, right? We haven't really closed below it. That's the one thing. The last time we did was the 5th. That's the last time we closed below 68.50. And then we had that Friday where we bounced big.
Like 100 points.
Yeah, 100 points. Yeah. But, look, this has been a market where there's a lot of different things to do. We still got gold and silver participating in a big way. They're back, man. I think they're back at this point. I don't know about you, but I'm not going to try and fade them. I mean, I want to at this point. I did that earlier. Yeah. I'm not going to try and fade them this time. I'm going to wait. I don't know what price that may be, but I'm not trying to fade them. They can just do what they do.
Yeah. E-minis down 81 now. You got the NASDAQ down 340. Small caps actually have been one of the weakest of the group the last couple sell-offs that we've had. But
because of 10-year, probably.
Yeah. Dow below 50,000, so put your hats away. Those will have to be saved for a time in the future here.
Put them back in the closet.
Yeah.
Yeah, I mean, how do you explain that, by the way, Northeast people? How do you explain nat gas being down 2% today on the day where you got all that snow?
That's true.
Nobody cares as much about your weather, do they?
I haven't even looked at natty gas. That's
as you shouldn't.
My dad says he's the worst commodities trader. I am the worst natty gas trader. I think I've made money one time. But every time I try to pick tops and bottoms there, it is always wrong. So I just, I'm transitioning to be one of the worst currency traders as well. Those have started to kind of chip away at my self-esteem here.
If you try to get long dollar all the time, just like I do, then that's part of the reason why.
Yeah, you look like a big idiot. That's how I feel. Everything long dollar, brutal.
You know what though? It actually looks like it's turned around. It's actually positive on the day now. It was down earlier today.
Yeah, we say that with a grain of salt.
Yeah, a grain of salt.
This is our DXY chart. Small little bounce from the lows here.
Yeah, there's not as much instant gratification trading currencies at times than there. I mean, because they can just stay in one direction for a while, and then as soon as you get tired, they'll turn.
Those currency traders, Glenn and his band of junkies over there, they're slinging them. It's just 1 minute, 10-minute trades. Boom, get them. I can't do it. I'm not that fast.
They are a different type of people, that's for sure. They are different than us.
Yes. As we go into the close here, E-minis down 78. You got the NASDAQ down 300, Dow down 850, and the Russell down 44. Volatility futures, I have my Taiwanese sources telling me VVIX is on the move here. Volatility of volatility, but not totally seeing it in volatility itself at 21 and change here, up about 4%. What do you think for the rest of the week? Is this the spot? Are we going to be?
No, I'm not going to let you set me up once again. You always set me up with this question, and I have egg on my face. Okay, now I think we stay within the channel. I'll say that 6,800 to 7,000. I think we stay in the channel.
I think so too. I think we
stay in the channel.
We got to get through this NVIDIA earnings. We'll see.
It's been like this for 3 months. Why is it going to change now?
It's true. Till proven otherwise, as my friend Mikey would say. Jamal, that was great. We're going to take a quick little 90-second break, come back with the boys on overtime. You got Chris and Ilya coming up next. Stay tuned for that. We'll see you tomorrow morning. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
AI, tariffs, war, just your usual Monday here on Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. We're here to take you through the next 30 minutes or so as we wind down the trading session. If you squinted and missed it, and I've been doing a bit of squinting here, Ilya, because I can't find the glasses, you'll see that the markets are down.
I'll send you my spare set.
Thank you. They're down about 1% or so. S&P off by about 1. NASDAQ a little bit more, 1.2. Your Russell, your leader to the downside today, alongside the Dow Jones off about 1.5% each. Is it a sell America kind of day? Is it a war trade kind of day? Stocks are off. Gold is up. Bonds are up big. Your US dollar is mixed and meandering after the tariff announcement on Friday and Trump's escalation over the weekend. So, Ilya, we can just get into it. This is a day where the narratives are running amok. AI disruption in software, still new lows. We have the cybersecurity sector now being hunted by the AI Grim Reaper. Talks with Iran are continuing. Europe is pulling back on a trade deal with the US. So, have we gotten all the bad news out of the way at the start of the week?
I think not by a long shot, because we don't know what the bad news even is. I think when you look at all of this, it's tempting to say, and was tempting to say, certainly at the open, that this is a sell America kind of a thing, because you've created more tariff uncertainty. We know how that works. We saw it in April of last year. That was a sell America kind of a thing. But you just mentioned a magical but wait point in this entire story. Bonds are up. It is not a sell America day if bonds are up. You're not selling a country's sovereign debt or buying it, and then that has no bearing on your general disposition on that country's overall prospects, as it were. And so on a day when bonds are up, it's virtually impossible to say that it's a sell America kind of day, because clearly people are willing to lend money to the U.S. sovereign in droves today. Dollar is kind of mixed. It was down earlier. Now it's kind of flat. And really the story is in stocks. And so when you start to put this together, you go, okay, so what do we actually have by the end of the day? Stocks are down. Bonds are up. Gold is up. Bitcoin's down. Dollar is meandering. But if you look under the surface of the dollar, the Aussie is down. And the euro is flat, and the pound is flat, and the yen is up a hair. Okay, what does that smell like? Risk aversion of the recession classic variety. Now, what did we get on Friday alongside the Supreme Court decision? Abysmal U.S. jobs data. Is just a piece of the story now, because now we have abysmal GDP data. Now we have abysmal PMI data, and inflation is more of an issue than before because the PCE numbers come in hot.
Are we worried about any of the U.S. data this week? Jobless claims, PPI? I feel like those are all non-stories.
PPI, baby.
I feel like these are all non-stories. Just from the macro perspective, there's overarching issues that are impacting the market top down, Iran, AI, tariffs. But in terms of catalysts to push us off that course and have us recenter our focus elsewhere, it feels like this isn't the week for that. I mean, NVIDIA earnings are Wednesday. What else are you looking to potentially change the narratives?
I'm not really holding out a whole lot of hope for the narrative changing. I think obviously there is the wild card, which is Iran and whatever the situation is over there. Obviously, we also have the wild card that is the State of the Union speech, because we just had this tariff ruling, and frankly, the things coming out of the administration since then have been confusing and difficult to interpret. The president had a long, meandering post on Truth Social, something about licenses. Now, apparently, we don't have a tariff regime. Now we're going to have a license regime, but we can't charge for them. It's impossible to understand what in the world is going on here. But you can't blame the European Union for saying we're going to have to put this trade deal on hold. We don't know what you're talking about. And so, and neither apparently does anybody else. And so the weird thing here is going to be event risk of the unscheduled variety as relative to economic data. The State of the Union is scheduled, but you can't really say, the situation as expected is a number, and then the outcome is something else, a number. These are easy to compare. This is all going to come down to reading the tea leaves. So yes, not much data on the calendar, but plenty of event risk.
Plenty of event risk. Did the market do anything differently with the pricing for any of that risk coming up here today? We did get a gap open higher in the VIX, and that stuck around. So 21.14 is where we notched the close. When we head over to volatility futures, okay, we definitely gap open higher, and we're starting to pivot. We don't do technical analysis on volatility products, Ilya, but if we did,
we do not.
We were those kind of people, we would say that it kind of looks like volatility is turning a corner here through some sort of momentum level. Maybe we're in a new higher vol regime area. But then again, it is still the second half of February. So Ilya, square some circles with me here.
Sure.
February into March has not been good. This has been fairly typical if we look at the price action in February, lining it up to other years. 5 years ago, 10 years ago, past 20 or 30 years in the S&P. This is the window with which the market tends to slow down before we get our mid-year rally. Why should I approach this any other way than that's what this is? What's different this time?
Well, I think the situation is vastly different. It's vastly different because so much of what's going on here does not lend itself to regular seasonals. I mean, you could, if you wanted to have the opinion that seasonals matter above all and nothing else matters, assume that, oh, well, if all that matters is seasonality, then we're going to have the average year. By any stretch of the imagination, this is not the average year, though. So as long as you're of the opinion that seasonality is not the only thing that matters.
Okay. All right. That's fair. This is not the average year. Yeah, that would make sense. So then square the circle with me, because when I was starting off this morning and looking at the market, I was thinking, is this going to be sell America? And initially it kind of had that vibe.
It looked that way.
And this morning when I'm putting together my, prospectus on what to do for the day, I had notes are trading in just below 113. Bonds are trading in, far below 118, 117 even. And then they rallied after U.S. markets opened up here. So it went from being sell America, looked a little bit more like the war trade, but neither of those really make sense. Is that what today is? People just trying to make sense of things? The average effective tariff rate now post Section 122 implementation after IEEPA is struck down by the courts is now lower than it was previously.
Yes.
So why are we overreacting to tariffs? The AI news, I don't know if you've seen the research note that's being passed around about what headlines from the year 2028 look like, written by Citrini, who's someone we've referenced here on the show before, someone who's probably a thought leader in FinTwit, I think would be a fair thing to imagine.
Sure.
He wrote a fairly doomer AI piece about what the market looks like come October 2028, and being cited in lots of different people who I didn't even know were followers of that kind of Substack fan fiction. we're talking about it today. So, I mean, what is this market here today, Ilya, when we look at bonds performing as they do in context of gold being up and ultimately equity markets being down?
Well, I think
it feels like
that's-
fear. Feels like fear.
Yes. And risk aversion, but not of the sell America variety, just of the recession variety. Bonds
Kinda
up,
classic.
gold's up. Classic. Stocks down, Bitcoin down. Dollar meandering at the averages, but down a little against the yen, up a little against the Aussie, neutral against the pound and the euro. What does that smell like to you? Regular garden variety, first page of the textbook risk aversion. Recession is coming, cyclical concerns, ay, ay, ay.
You mentioned cyclical concerns. I suppose it's a good time to take a walk around the market and see how our various sectors performed today. Let's just get the sector out of the way that everyone's thinking about. How did software do? Oh, terribly. Software down another 5% today. That's fresh lows, Ilya. I know that you and me were talking in recent days about people trying to pick lows here. I'm not trading this at all. I've more or less decided to stay away from trying to pick a bottom, because all of the logic and rationale that I've seen people deploy otherwise to try to pick a bottom, to me, seems highly illogical. They're saying that valuations are 2 standard deviations, 3 standard deviations below the 5-year average, the 10-year average for the software space. And in my head, I'm thinking, I'm sure the people who owned equity in whip and buggy companies back in the early 1900s felt like those were pretty good value buys at one point in time as the automobile rolled around.
And they probably were for some point.
Yeah. And
then not.
And at some point, there was one company that had the monopoly in the space in a shrinking market. So I guess my question is, how there are 2 different tracks here, right? Because although this is ostensibly about trading, there are people who, through their various savings vehicles for retirement, which you can do through here on the platform, there are people who are looking at some of these names for longer term buy and holds. So how do you square that circle? First off, as a trader, are you touching this? Do you try to catch a falling knife? And secondly, if you are a longer term, you're outside of the 45 and 21 day out window, is this an appealing chart for you, a story for you, a narrative for you?
I have absolutely no reason to think that this is going to turn until it turns. Now, is my interest perked up because it's testing a key level? I mean, I think you'd have to be silly for it not to be, because whatever macro narrative you may want to have in your head or not have in your head, clearly this kind of analysis works best when everybody is looking at the same thing. Who can't see that low? Everybody can. And so if it breaks the low, the market will see that. If it bounces from the low, the market will see that. So there's a wonderful thing about looking at charts in situations like this. It doesn't have to work empirically. Self-fulfillment is your friend. If everybody is buying because it holds the line, well, then the line works. And if everybody is selling because it closes below the line, then the line works. You don't have to be a believer in chart voodoo to be a believer in the wisdom of crowds. If everybody is doing the thing, well, then the thing works. It doesn't matter if it was empirically correct or not, or if you can prove that that level of analysis works an average percentage of the time, blah, blah, blah. So what really matters here is, will it bounce? And then that's going to be the price action signal. So am I buying it here just because it's hit that level? No, it can absolutely crack through. If support and resistance always held, the markets would be in a perpetual range. They're obviously not. So I'm going to wait. I'm going to see. But I'm certainly not opposed to being a buyer if there's a turn.
CrowdStrike took a 9.9% bath today, Ilya. Where to begin for the software space? Intuit was down another 5.5%, Oracle 4.5%, because why not? Adobe another 4%, DocuSign, which you would think would be in the AI blender for a long time. DocuSign down another 6.1%.
No joy
IBM
for DocuSign.
IBM took it today, 13% loss, as Claude appears now able to rewrite COBOL. COBOL, if that's a name that sounds familiar, it's something that we haven't discussed in about a year, because that's what Elon Musk's Doge team was trying to assess this time last year. COBOL is the programming code by which much of the federal government is built upon. Social Security has something in the neighborhood of like 50 or 60 million lines of code that are written in COBOL. COBOL hasn't been materially updated as a programming language since the 1980s, if I recall correctly. And so a lot of the people who have the experience to work with COBOL, developers, programmers, they're retiring. They're just getting old. They're aging out of the workforce. And so there's this idea from last year that, you know, the Doge team could replace COBOL, which a lot of people in the cybersecurity industry said was probably a bad idea given what it did and how effective it was working. IBM has a monopoly on that, which, if this latest bit of headline news about Claude is correct, maybe Doge will get its wish, Ilya, and maybe ultimately the Grim Reaper of AI moves on to other names, a big name that didn't seem like it was going to be particularly hurt by this, right? So it's really fascinating to me that there's still price discovery going on, right? How come today is IBM when a week ago, maybe not so much? Why Tesla today, of all days? Although it does appear that PayPal may have a buyer.
Oh, hello.
And who would love to have PayPal rolled up as part of, say, a payment system that they've been talking about for the better part of the past 25 years, and maybe they were just a founder of PayPal to begin with?
I mean, I was just about to say, one might say that someone might have been a founder.
Yeah, so Tesla off today. It's not really an AI story for me. I would look at the PayPal news. I'm getting in a little bit long here, just long some stock against the low that we have. 387.53. If it holds, we're good. If not, then we're not good, and we have other problems to deal with, Ilya. But I'm very unconvinced that the market is behaving rationally here. It wasn't rational in the fall when it was running up all these AI names, but this whole entire 5% down, 7% down thing on flimsy headlines, right? IBM down 13% on COBOL. People are panicked right now. This is the worst sentiment that I've seen in the market in a while, quite frankly.
I think that's really the key. What the headline is less important. What's important is what the market is doing with the headline. Right? This is the elections in Italy indicator, as I like to refer to it. If you recall, there was that 1 year where Italy was cycling through prime ministers. Their government kept failing. And whether the euro would move or not on this news was a function of broader market sentiment. Italian government fails, but market sentiment is solid. This is fine. They always do this. Market sentiment is negative and the Italian government fails. Oh my God, it's the end of the world. So this is a function
for Italy. Like, that is, as an Italian, let me put some defense up here. Italy's been around as a country for like 145, 150 years. Outside of Mussolini's tenure, which is the longest tenured government in Italy's history, there have been like 132 different governments over those 145 years.
Well,
so,
right.
Italy changes governments like a boy changes coats as he grows older.
And so that's why it's an apt metaphor. Because whether the market decides to care or not has nothing to do with those kinds of reasonable considerations, and everything to do with where sentiment is. And for about a year or two there, where we were cycling from Renzi to Draghi. We had a brief caretaker government in there for a while. All of that was a great lens on, is the market going to care? Is the market not going to care? Has nothing to do with Italy, and everything to do with whether investors are comfortable having risk exposure to markets more generally. The flimsiness of these headlines today is not what's relevant. What's relevant is that the market is as hampered as it is with these flimsy headlines, which tells you just how vulnerable sentiment is.
Sentiment is really bad right now. I have the AAII Investor Sentiment Survey up on the screen here because we are beginning to approach a level of sentiment that warrants consideration to blindly buy. Hear me out. That's not a phrase that we throw around lightly, or at least I throw around lightly here. But for those that have been with us for a while, I would point to something that we wrote some time ago. This is going back to September 2023. Sentiment's the worst that was in May. The point that we got with the AAII survey was that when you have a change in sentiment equivalent to, at least a 16% change, but in reality, if you're looking for something like closer to 19% net swing over 3 months, the forward returns to the market in the QE era have been routinely positive. In fact, in September 23, when we noted this, the prognostication was that we could be looking at close to a 10% rally if the market began to wash out. And within the next few weeks, we found that bottom. September 23 into October 23 produced the low that we haven't seen since then.
Right.
So I bring that up because in September 23, when this was observed, the net 3-month change in bull bears was 16.5%. Right now, if we go back 3 months, we're not there just yet.
No.
But another week with sentiment staying in the tank, all of a sudden, 44.3 to 34.5, that's a 10-point swing. 30.8 to 36.9, that's a 6-point swing. 10 plus 6 is 16. So there's been a net 16-point swing effectively over the past 3 months. We're getting back into the territory where we found major significant lows in the past, with sentiment having evolved too bearish too fast. Almost like we're getting into a washout. Now, it's not going to time this to the low, to the day, to the week. As we saw in 2023, it took a few weeks for the low to actually be found. But if you were betting on it because sentiment being stretched and you wrote it out, you ultimately walked away a winner. And I know that, Ilya, because I remember after non-farm payrolls in November getting dozied up long on the S&P 500 when it was 42.36. And I wrote that the rest of the year. And it was like a straight line higher. And I'm not there yet because it is February, but as we consider how to play this market, there's a lot of two-way trade, there's a lot of dispersion, there's a lot of volatility that's sticky and sticking around. If we're still at like 6,800, 6,850, 6,900 as we're leaning into early March, we probably survive the seasonal window. And then knowing that the sentiment washout has occurred, it starts to feel like the path of least resistance may not look like it's to the upside, but in terms of placing the bets, that's where our chips should land because that has worked out for us in the past.
And again, I think that makes sense and is logical. The question you have to ask yourself is, are we in a year analogous to the average of the past? And I think that's really... I think that's very much an open question. And that's where things get dicey because there is absolutely no question that on the eve of every major outturn, be it 08, be it 2000, be it 1989, be it COVID, the average is the average is the average. And then something happens that isn't average. So I think we have to be
things
very,
happen
very
all
careful.
the time.
Things
that have not happened are happening every day.
That's right. We have to be very, very careful here. That doesn't mean that what you're saying isn't going to happen or is incorrect. It may well, and you could very well be. But I think in this current environment, I think we have to be very careful because things are changing quickly at a regime level. And it's unclear how much of the post-Volcker playbook, frankly, going back to the early 80s, continues to be valid.
Ilya, one final question here as the Dow Jones breaks below 49,000. Did Pam Bondi call the top when she noted that Dow was at 50K a few weeks ago? Because I've seen a Dow and a NASDAQ and a Russell that has... Can administrations, just generally left, right, center, I don't care, up, down, Democrat, Republican, can you not tout the stock market, please? Because whatever your cabinet members do, it usually coincides with the top. It feels
also,
like
if
that.
cabinet members that don't have anything to do with the markets would please stop talking about them because they don't know what they're talking about.
Oh my God, it's the taxi driver within the administration. If the attorney general's touting the stock market gains, you know it's over.
That's right.
It's over just like overtime's over for today, Ilya. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak in what seems to be sunny San Francisco, I'm Chris Vecchioli.
70 degrees and sunshine.
Record blizzard New York. We had 80-mile-per-hour winds. You're what? All right, we're done. We'll see you later, folks. Ilya's up next, though. Stick around. Macro Money here on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Well, everybody is scratching their head. Everybody is confused because whatever happened in these markets today clearly has enough explanations for everybody doing the explaining. We're going to try to figure out what's actually going on and what it all means going forward. This is Ilya Spivak, head of global macro here at Tasty Live, and you're watching Macro Money. We're going to begin here with, as we like to do, a view of the price action. We're going to attempt to figure out what is going on here and see if we can't make some sense from the price action itself about what's actually occurring, and then see where we might be heading next. And of course, the question that we ask ourselves first and foremost is the Sell America trade back? Because them was the vibes when we started off with the trading week. At the weekly trading open, that's what it looked like. There was a sense that we perhaps are back into this mode where another bit of tariff uncertainty and another turn away from U.S. assets has commenced. So here's the S&P 500. We can see we're still holding that top from late October when the Fed chastised the markets about over extrapolating on rate cuts. Of course, since then, we have gone absolutely nowhere, but we can see that the immediate sort of opening at the start of the week here looks decidedly defensive. And for much of the day, at the same time, the US dollar was down as well. Now, it has clawed back almost all of this lost ground and is now basically flat on the day. But you can see here, looking at the dollar index, there was a significant sell-off here earlier and of course, a gap lower. So it was tempting to say that you have some sort of a Sell America kind of a dynamic back in play. Now, it makes sense why that would be an explanation. That would make sense. The dollar is typically something that moves higher when you get risk aversion. So when you get the dollar and stocks falling at the same time, you get the sense that something different is occurring, something more sinister might be afoot. And when you have that sort of a thing, you sort of naturally go, okay, well, why would the markets shun U.S. assets more generally? And of course, just on Friday, we had this Supreme Court ruling that said that the president's IEEPA contingent tariffs, which was the overwhelming majority of the tariff regime that was unveiled last year, and of course created this madness right here. This is the World Trade Policy Uncertainty Index. It was put together by 3 Fed economists that are tracking news mentions of trade uncertainty, as well as a whole host of other indicators. We had this huge jump in that trade uncertainty when the administration released a whole sweeping set of what it called reciprocal tariffs, and said that the way that it was justifying this was because there was a national emergency because of trade deficits and to some extent fentanyl trafficking, and that the way that the administration was going to address these emergencies is with these tariffs. Well, the Supreme Court now says you can't do that because that doesn't count as the kind of emergency that the law envisions. And so, not surprisingly, the situation has been thrown back into confusion. Now, the president has reinstated tariffs of 15%, but they now have a 150-day timer on them because he's using a different statute to get them back. And of course, you're not going to do anything in 150 days that materially changes the economic outlook. Businesses are not going to close and open factories, fire or hire labor. Shipments are not going to arrive or be sent from where they're coming from to U.S. shores. So this is not nearly enough time for some sort of an adjustment to actually take shape. So, needless to say, more uncertainty. So, if Sell America last time was triggered by trade policy uncertainty, well, we certainly have policy uncertainty. And so it would make sense if that were what's going on. In fact, last year we saw that all of this uncertainty actually gave us a drop in global trade volumes for the first time since the COVID lockdowns. You see that right here. Here's the zero line. This is year on year percent change in trade volumes. That's the zero line right there. There's our negative reading. The last one was COVID. So the chilling effect of this uncertainty is already on display. And of course, this is a nightmare for stock markets because, as we can clearly see over the past, let's say the better part of 3 years, the market is overwhelmingly being motivated by expectations for what AI would look like, what kind of infrastructure it needs, and what it is that is going to happen to prepare us for that next big movement, if you will, in technological progress. Now, the issue here, of course, is that what AI absolutely needs in order to work as an industry is frictionless trade, because we can see that the supply chain for AI is very global indeed. And of course, the majority of it is in the US because the majority of the major models are in the US. But when you look at the significant pieces of this in Asia, in Europe, what you see is that not only do you need frictionless trade, but a lot of these things are, for example, like lithography in the Netherlands, single points of failure. And so you can't really substitute and say, we're just going to do this part of it at home. Well, no, you're not. Not on a short time frame, certainly not in 150 days. And so you're in a situation here where the very essence of what has been driving sentiment higher is under threat just after it ostensibly settled last year. And so it's a tempting read. However, even as you have gold higher in this environment, seemingly reinforcing the idea that capital is leaving dollar-based assets, doesn't all add up. Bitcoin is down. So what kind of an exodus out of the dollar is this if the natural sort of alternative to what you might say is fiat currency risk is not thriving? Gold certainly is, but if Bitcoin isn't matching it, then perhaps something else is going on, because an exodus out of dollars, this chart does not look like. Moreover, and perhaps even more importantly, bonds are sharply higher. What kind of a Sell America day would it really be when lenders are rushing to lend money to the United States government? Because that's exactly what this chart means. This is a bunch of buyers driving up U.S. government debt. That is to say, they are lending money to the U.S. government. So what is it then, if not Sell America? Well, let's put these pieces together in a different order. The dollar is now about flat, as we can see. So it was down, but is down no more. And if we look at the internals, it's up a little bit against the Australian dollar, a more cyclically minded currency, a more stocks adjacent currency. It's down a little bit against the yen, a more safe haven flavored anti-risk currency. And it's about flat against the euro and the pound, which kind of fall in between. Stocks, as we saw, are down. There they are. But bonds are up. And with stocks, by the way, so is Bitcoin, as we just saw. Well, this doesn't look like Sell America. This just looks like the market is afraid of a recession. Because what this seemingly says is that interest rates are going to be lower in the future, that the market is exiting risky assets and going into the haven of government bonds and punishing those currencies against the US dollar that are more risk-oriented while rewarding those currencies that are more defensive. So the story here seems to be not Sell America, just cyclical risk, business cycle under threat. And if we look at some of the data that we got last Friday outside of the Supreme Court decision out of the U.S., then it starts to make sense perhaps why. GDP sharply lower than expected, down from 4.4 to 1.4% annualized growth in the fourth quarter. Expectation was 3%, so much, much worse than expected. And in fact, the worst since we got a contraction in the first quarter of 2025. If we look at the components of GDP, we can see the lion's share of this is a drop in government expenditure, but the much bigger piece is a slowdown in consumption. Government expenditure certainly is a negative reading here, and that's an important consideration, but government expenditure as a share of GDP is not that big, whereas consumption is 68% of GDP. And so it matters significantly more that consumption has slowed to the smallest contribution to overall GDP since the first quarter of 2025. Shock of shocks since we got this decline. So, not good. The economy looks much weaker than anticipated in the fourth quarter of last year. We then got numbers for S&P Global PMI data. Here, situation was not all that much better. That, of course, its own concern as well, because what we see there is a significant decline, a weakening in momentum, and that is not what the markets were in the market for as it goes. The actual expectation was that we were going to continue to see signs of stabilization after the government shut down. That, of course, is what that decline in government expenditures that we just saw in GDP was all about. And indeed, in January, the PMI numbers seem to suggest that, in fact, yes, that stabilization was occurring. But these PMI numbers, that's not what they say. This was the weakest reading since April 2025. Moreover, we saw a 7-month low in manufacturing, a 10-month low in services as the internals for this data. So we're looking at a situation here where, yes, the fourth quarter was ugly. Now going into the first quarter of this year, it looks like we're not really rebuilding momentum. We're actually heading in the wrong direction. Now, of course, as ever, this is in the logic of PMI. So 50 is neutral. That's this right here. Above that is growth. Below that is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And we're still in growth mode, in short. In fact, we've been in growth mode. But the pace of growth seems to have been slowing here well before the government shut down, which is this right here. And going all the way back, perhaps to July. And the trajectory seems to be not of improvement, but of deterioration. And maybe that's why the markets are concerned about recession. Now, the reaction in bonds makes sense against that backdrop. And we can see the markets are getting a little bit deeper into rate cut expectations. We've got 56 basis points on the board and 59 basis points through the end of 2025. 27 because the markets are still convinced that next year we're not going to need any cuts. But this year, the markets want at least 2 of them, and they've discounted accordingly. Now, of course, in December, the Fed only projected 1 cut for this year, but they also projected a cut for next year. So ostensibly, the markets and the Fed are in agreement that we need 2 cuts between now and the end of next year. It's just the markets want them faster. What's interesting here is that the minutes that we got from the Fed's January meeting last week suggests that they're pushing in a more hawkish direction, not the other way around. And so whatever adjustment happened in the Fed's thinking between December and January, in all likelihood, that didn't move the Fed in a more dovish direction, which is what the markets here seem to be doing. It moved the Fed in the opposite direction. And so the markets are seeing here the coming together of a whole host of risks at the same time. The data is starting to say that maybe there is a cyclical concern as the Fed is reluctant to cut rates and is signaling that their preference actually is to go the other direction. And so, not surprisingly, you're getting a sharp move in the bonds because perhaps the markets are saying, well, now you're going to need more rate cuts later if you're going to delay them. And so the picture starts to look that much more defensive, hence the risk aversion. The markets perceive a need for policy support and also a reluctance for that support to come. Obviously, that's not the recipe for happy investors. Now, the geopolitical situation is making this all the more complicated. We can see that since the beginning of the year, crude oil has been rallying. That, of course, is a problem for the Fed's inflation management efforts because, as we've said before, it takes about a month for this kind of thing to show up in CPI. And so what we start to see here is, not surprisingly, those inflation expectations are feeding from that oil jump. We have here the 5-year break-even inflation rate and the 10-year break-even inflation rate. These are the inflation expectations implied in bond market pricing, and lo and behold, they've been going up right alongside crude oil. Now, if the U.S. decides not to intervene in Iran, does that change this story? Well, ostensibly, no, because what's happening in Iran is a popular uprising. And so either way you slice it, supplies from Iran might be disrupted. And of course, where those supplies are headed matters as much as where they're coming from. It's been estimated that about 1/5 of global oil supply is being moved by the so-called Russian shadow tanker fleet. That is to say, vessels that are circumventing sanctions. Now, of course, when you buy sanctions-busting crude, that crude doesn't command the same price as oil in the market. If you're going to be selling things under the table, you're going to have to charge less. And so what we end up with then is 1/5 of global crude supply, if the numbers cited by The Economist are correct, that's being sold at below market rates. Well, who's big enough to buy that oil? Well, pretty much just China. And so what we have here is a threat to the supply of oil to the world's largest crude importer that would force them to go out and buy oil at market rates and from different suppliers than Iran or Russia, or for that matter, Venezuela, which of course the U.S. has decapitated. But when we look at the situation with Russia, of course, the capturing of Russian oil tankers, of these shadow fleet tankers, now not just by the U.S., but also by France and somewhat shockingly by India, which was a beneficiary like China of this illicit crude supply. That suggests that all of this is going to start to look like China buying more at the prevailing market price from Saudi, from Iraq, from Brazil, from elsewhere in the Gulf, and stretching those supplies, at least until production can somewhat catch up. That's not a story about higher crude oil prices that's going to go away in a hurry, especially when we started this year broadly expecting a glut. So this inflationary impetus isn't going away. Against that backdrop, wanting the Fed to cut rates and worrying about the business cycle is not an easy thing to dismiss. Because if the Fed's not coming with rate cuts and the business cycle turns, well, then the pain's going to have to be longer lasting. And not surprisingly, that's an environment where bonds are up and stocks are down and Bitcoin's down and the dollar is caught in between a risk on and off dynamic, depending on which counter currency we look at. How much of a risk is this already? Well, right alongside those GDP numbers and those PMI numbers, we saw US PCE inflation data. This is the Fed's favorite inflation gauge, and it unexpectedly went up to 2.9% year on year. Expectation was that it would hold at 2.8%. That's the highest that we've seen for that inflation gauge since March 2024. Moreover, the core gauge, which is what the Fed really cares about the most because it doesn't have much agency over food and energy prices, the core gauge excludes those. We're back to 3% inflation for the first time since April 2024. Again, not an environment conducive of Fed rate cuts. So, as far as my exposure here is concerned with all of these cross currents in play, I'm back long gold. I started putting this back on last week, and I've added a little bit more. I'm doing it through the 1 ounce futures directly, just buying the futures. The margins are a little bit high, but being able to manage this overnight is something that, in my mind, seems like worthwhile. I am still a little bit long the Aussie dollar because it hasn't broken down, but I am now on the short side of both the pound and the euro. They seem to be giving way, and the dollar seems to be reasserting itself there, although it's early days yet. Still short Bitcoin with some time on the board left, and so this trade continues to work. Still short risk, both the NASDAQ and the S&P. In fact, I reset the S&P today. I had 5 days to expiration. Now I have 53. So I've rolled that forward. Looks like the trade's going to need a little bit more time on that end. And of course, still plenty of time in NASDAQ. And I'm still long crude with a bunch of time left on the board because, again, that story doesn't seem to be going away in a hurry. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Get tasty, free market. Come on, you know it, can you be